It's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Fun Thursday. That's right. Nick Batista filling in for my man Tom Sadnoff, who's traveling to New York. I'll be there tomorrow. And of course, always the lovely Vanetta. How are you guys this morning?
That's what you came up with, Fun Thursday?
He's grasping. He's grasping for whatever he can get. That's good.
All-time high market Thursday. I don't know what you want here. I'm doing the best I can. We got a little
Happy
bit of
Fun Thursday, Nikki.
How about SPY dividend Thursday coming? SPY goes ex-dividend tomorrow. Big dividend in SPY. Maybe that's the...
yeah, that's not catchy either.
No, that's not fun. All-time high Thursday is fun.
All-time high Thursday. All right, that's what we'll go. Record-setting Thursday. How are you?
Did you guys? I didn't get the color coordination memo.
I should have worn my tasty shirt. I wasn't clear when you called me last night, son. I apologize.
It's okay. That's okay. You're feeling a little under the weather. I've been fighting that as well. It's the we're just in time for the tasty virus, the new virus that goes around like every fall-ish time period. You get like that. It's maybe a mixture of like COVID, maybe the flu a little bit. Just like it's kind of just like an amalgamation of everything that's been at the office. So I think that's going around.
You gotta stop making out with the research team.
I know we're getting too close. We're getting too close.
I think it's the kids going back to school, really, to be honest with you. But I don't know what. Yeah, a little bit of a head cold. Cold just came on yesterday.
Is Tom on the flight yet? Is he? Was it an early morning flight or is he on the way? Because we have to prepare.
He's probably boarding. He's probably boarding soon.
Well, probably not soon because he's not concierge level status, so he's going to board a little later.
Isn't that the
He's
best?
senior citizen. He gets to go first.
That's true.
Yeah.
I can't believe he admitted that. That's so good, though. They gave it to him, then they took it away.
So sad.
Yeah, something about that just doesn't add up. Like, he could have paid to keep it, I think.
Yeah, right. Usually they keep it
for
sure.
sure.
And then they say it's X amount of dollars per month if you want to keep it up, or a year, blah, blah, blah. He says no. I'm calling BS on him, too. I think he just didn't want to go into the pocket. You know how it is for him to get into that pocket. It takes a lot of effort. A lot of effort.
Yes.
Anyway, son, thank you for filling in for Mr. Sadnoff, who we just explained is traveling today. He'll be back on Monday. We're due to do the show on Friday. He has to go there and set up my chairs for me and stuff like that. So he goes. Is that better? Is that better? Am I doing better?
Yeah, that's good.
Yeah. He's got to set up the chairs for me. Make sure he's got the velvet ropes for my line of people.
Yes.
Your hair products all lined up.
My hair products. That's correct. Yes.
Yeah. Do you have the carafe? Do you bring the carafe with you?
Oh, that's a good question.
I don't, but there's ample coffee and donuts usually, or bagels or something like that there. So I get filled up. So I'm good. I'm good with that.
I mean, you should bring that. It's a original prop from the office, you know, like that's part of you know, that's part of the content.
It's part of Bat lore.
Yeah, it's Bat lore. You should be bringing that one with you.
That craft has been with me for about from the beginning, almost 14 years. I would say I would carry that. I think
Does it get washed?
Twice in 14 years.
Oh, gross.
Pretty close.
That's what helps you fight off the tasty virus.
Yes.
Is whatever is in that carafe is probably has like the immunity for you.
Yeah, the antibodies.
The antibodies for sure.
Yeah, absolutely.
Yeah, nope, that's gross. Nikki, what did you get up to last night?
I jarred my peppers.
Do you have a
Batista? Yes, Batista Gardens has fulfilled its first order, 35 8-ounce jars of.
That's a lot.
Yeah.
Oh yeah.
It's a lot. It's
So
a
you
lot.
make like a pepper mix? Like what? Break it down.
Yes, yeah. There's well, it's all the peppers I grew on my balcony. Put some celery in there, some cauliflower. We got some carrots. We got some onions. Lots of
Okay.
herbs. It was pickled, and then I put it in jars with some olive oil, so it'll last a couple months.
Do you have different spice levels?
No, it's all one level. It's kind of like it's a medium. I would say it's a medium.
Okay.
It's not super spicy.
Okay.
I actually wanted it to be a little bit spicier, but I was like, I don't want to rip people's faces off.
Right.
So it's a medium. It's a perfect medium.
You know, if you're going to do this show with me, you're going to have pictures next time. And I know you had pictures.
I know. I'm
You sent
sorry.
me. It looks so good. I think you got the right size chunk. That's really the differential. You didn't make a relish out of it, which I like Tom don't really like. You were leaning towards that way, I think, until you spoke to the boomers.
I did. You guys did influence my chop a little bit. I wanted to have a little bit of a combination. I mean, I was thinking also too volume wise, I need some of the chunks in there to really stretch it out. But so I did it's a combo. There's a little bit of like the relishiness to it.
Chunk I saw. I looked at.
Yeah.
Did you hand cut them all?
No. I got
a food processor.
I got a food processor. Can't do 35 jars by hand. This isn't Nona.
Did you make your own label
Nona.
with you, like with a big Italian mustache?
Yes. So my label, hopefully, maybe I'll make it today. If I can get to FedEx today, I'll have my label printed. It's a big tuna fish with a big cigar and a mustache. Obviously, the Italian horn is present. It's very.
Wait, I'm sorry. Why is it a tuna fish?
I have a nickname with my friends. They call me Tuna. So I had to incorporate the tuna fish in there.
That's your immediate friends, your old friends. Yes.
Do you want me to call you Tuna?
No.
Only if the lights are off. Hey, big.
Excuse you. He has a girlfriend. I am a girls. I would not do that to another woman.
That's true. So that begs to ask the question: has she ever called you Tuna?
No. We haven't got there yet. No.
Well,
Well, I want to see this label though, with the Groucho Marx looking.
Oh yeah, yes. I will tweet it out as soon as it is ready. It's still.
And I get a jar, right? I get one, right?
Ooh, I don't know. Are you a jardiniere person?
I don't like jardiniere.
Really?
I do,
Okay,
yeah.
I can squeeze you one in.
Yeah.
Yeah. So that was my night. Little pickling, jarring my peppers.
Hopefully the HVAC in your condo is good, because you could
for the last 3 days,
yourself.
I've been so excited to do this just for that reason, because I'm like, I cannot. Every time I walk in my condo, it just stinks like peppers and vinegar, and I'm like, this is gonna burn my eyes. So I finally got it done, which is good.
So did you keep them like all year long, like the ones you picked in June?
I froze them. Yeah,
froze them. Got it.
I froze them, put them in a Ziploc bag. Froze them and put them in my freezer.
Very nice. Very nice.
When are you hitting the farmers market circuit?
Well, I told my dad I'm partnering next year. I'm going to partner with Westwater Farms.
Thomas. FX Westwater.
Yeah, we haven't decided on a split yet for the company. I mean, he probably will produce about 95% of the volume, maybe like 98%. He's
got more land.
He's got more stuff and more land. So we'll see. Maybe we'll have a collab, a limited edition drop.
Wow.
Really get the piece.
I love how Tasty is going farm to table.
Yeah, exactly. Farm to table.
Is there going to be a Batista Gardens stable coin or something like that coming out?
We could do that too. We could fund the operation that way. Yeah.
Yeah, maybe Westwater, and you can get on that. I mean, you got to start thinking about business, son. You got to. I can't carry you forever.
Of course. Thank you so much. Yes.
You're welcome.
Yes.
Very-
Yeah, I'm thinking bad coffee might be our distribution. So we might cannibalize that.
You're in
business as well.
trouble. You're in trouble.
Yeah.
Vanetta, you never get a chance when Tom's here to say what you did. Why don't you really tell us what you did last night?
Were you Gaga?
What'd
Were
you
you
do?
at Gaga?
I was not. No, I went to the gym. My gym schedule is like all messed up, but I did get to the gym because it just helps me feel better. So yesterday, upper day kind of.
GTL, we talked about it yesterday, gym tan laundry.
Yeah. Yesterday, upper day, chest, back, arms. Nothing too exciting. Although I was doing the plate loaded, press, like bench press. And there was a guy who was using the machine before me. And so he has like 345 plates on like each side. And I was like, my guy. And so he takes 2 each off of each side. So he leaves me 90 pounds and the rack weighs 10. And I'm like, my guy, I appreciate that you're trying to gas me up, but I cannot bench press 100 pounds.
Did you get his number?
What?
Did you get his number?
What? He's
I mean, come
scary
on.
looking. No, he's scary looking.
Oh, very good.
No, he just like raw dogs the gym. No phone, no headphones, just 1,000-yard stare. That's scary.
Sounds good. That sounds perfect for you.
I don't think he would have a high tolerance for my pop music shenanigans.
Oh.
Anyway, Bat, how about you? What'd you get up to? Did you go in your sauna to help your head cold sweat it out?
Yeah, I'm loving my sauna. It is new though, so like anything new, you use it a lot more often than you normally. I
give it about 1 more month until you.
Yeah, but then it's gonna get cold
I
for
think you're
real.
wrong. Yeah, I think you're wrong. I mean, this has me written all over it. Like, all I have to do is sit there and enjoy myself.
Uh-huh.
But you can't take your phone in there, right? Like it would explode.
No, I have a Bluetooth speaker, that's
Oh, you just like listen to music or like audiobooks.
Listen to a podcast. I can listen to Option Trades Today every Tuesday and Thursday if I want.
I have a good murder podcast for you.
I actually take you as a truth or skepticism person.
Truth or skepticism?
I figure you go in your sauna, you relax a little bit, you listen to Tom and Dylan yap at each other all
compliment each other about how right they are. No, Dylan, you're right.
No, you're amazing. No, you're more amazing.
Yeah. Yeah, no, I think this might have a little bit of legs. My hot tub, I'm on my second hot tub. I love my hot tub.
Does Lady Bat like the sauna?
Not as much as I do so far. It's all about the hat. You have to wear the stupid.
But then it's a whole hair situation because then it's like
the hat.
Yeah, you got to wear the ick hat. She calls it.
You haven't seen the hat, Nikki?
No. What kind of hat?
It's a sauna hat. It looks like you before the moil got to you. It's like a like a hood.
Like a Goonies hat, like it gives you like a point.
Yeah, exactly.
Why?
Because that actually cools the head. It's made out of like felt, and it keeps the head.
Oh, it's your Sosnoff hat, the one that you
like a
whipped out.
Sosnoff hat. It would be like it's like how everybody looks in the Tasty Trade beret. Sosnoff. That's exactly what it.
Okay.
That's exactly what it looks like. So it keeps you a little bit cooler in your head, and then you can say, "So I've got like a sand timer in there. It works like just turn it upside down." And
oh wow!
Yeah.
Bougie. Holy.
So I'm kind of digging it. I'm kind of digging it.
Sand timers.
I'm glad that you love it. Oh, there it is. I think
you can have one of these hats. You can throw one of these hats up there.
Yeah, John found it.
Yeah,
that's like a dunce hat.
Yeah. It's like that's one of the companies I use. That's correct, like a dunce cap. Yep.
Yeah,
they make another style that doesn't look as funky as that one, but I went with that one.
Nice. Wow.
I mean, it's a good thing that the Nordic people are just naturally hot and like good looking because no one looks good in these hats.
Yeah,
that's true. And I look horrible in hats to begin with. I actually had a customer in California give me one at the show who was a fellow sauna person. We have our own clique now.
Wow.
You know, that's weird. You're like, we're sauna guys.
Yeah.
Yeah. Come here, let me whip you with this grape leaf. Yes.
No, I mean, hey, we don't kink shame on this show, so you
No,
you,
no, no, no. Mm-mm, mm-mm,
you do
mm-mm.
you. Let your freak flag fly. Well, hey, it is double the bats, double the fun here on Tasty Live this morning. Tomorrow it will be a millennial takeover.
Oh, yeah.
Me, Mike, and Nikki doing the morning show as Tom and Bat do at work by 11 in New York City at Webster Hall. So definitely want to stay tuned for that. I will be putting out a video on social later this morning. We quizzed Nikki, your dad, and Tom about songs about New York City, and the results were hilarious.
They
Okay.
were not hilarious. They were embarrassing. as
Yeah, Tom probably got all of them because he knows everything about New York.
No, he didn't. He didn't.
Your dad actually did pretty good. There's some rapping that happens. I don't want to spoil it. Just follow
Okay.
us on all of our socials today. It'll be coming out this morning.
Okay, perfect.
You didn't film the rapping part, did you?
Honey, I film everything. I have engagement numbers I need to meet.
Uh-huh.
I hope you put it side by side, like dubbed with it. This way you can see how good I really am.
Yeah, it's funny. Anyway, but we got a great show for you today. Like I said, it is double the bats on this thrilling Thursday. Headed your way at the top of the 8 o'clock hour. Fan favorite trades from the research team. The research team is going to present their trade ideas to Bat and Bat. Going to see what's happening here in the markets post FOMC. And then at 8:40, Dylan Ratigan, who you're just throwing some shade at. Well, he's going to be on, so it's just you and him, honey.
Oh, no.
Sad but true. Sad but
So
true.
topics TBD for that, but Dylan's going to be on. Always a good time. And then 9 o'clock, we have market measures skewing 0 DTE iron condors, credit and directionality. That is part of our 0 DTE series. That's going to be at 9 o'clock. And then it's Thursday. We got Scott Sheridan in the house live from the trade desk. Let's check in with Scott. He's going to count down the top trending tickers over at Tasty Trade. And that's our show for today. Hey, if you have a trade idea for tomorrow, Mike and Nick are doing the millennial takeover and they need your trade ideas for fast market. Hopefully they can get access to Tom's account.
No, but when we take over for fast market, the people know that they can submit the fun trades.
Yeah,
you can
yeah,
give
that's
us-
true.
As long as it's liquid and it's got relatively high implied volatility, we're ready to rock. So
YOLO, baby.
Submit those trades, please.
Well, let's do Daily Dose. You ready?
Ready, let's do it.
Sure.
Him is my theme music. Let's go.
Our leading
In
story.
today's
Breaking
headlines.
news.
Breaking
Across the wire. Our leading
This
story.
just in.
Top story.
Our
Just in.
In today's headlines,
This just in. Today's
Breaking news.
story.
All right, everybody. Today's a thrilling Thursday. It's September the 18th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Sure.
Earnings, Mr. Bat.
FedEx and Lennar, if you're interested in those. I think the market itself, with even the S&Ps being up almost 50 handles, would be a lot more interesting
Sure.
than those two. But FedEx, Lennar.
Well, that leads to my first headline. The market didn't really know which way to go after yesterday's rate cut, and it just says expect more volatility ahead. The Fed yesterday did approve a widely anticipated rate cut of 25 basis points. They did signal 2 more are on the way before the end of the year as concerns intensified over the U.S. labor market as inflation is still in the air. What did you guys both think of the tape action yesterday and what's happening this morning?
Well, I'll go first, Nick. I actually thought the action, I talked about it all day long with Tom. He had a little bit of a different opinion, but volatility got crushed, even on the way down. I mean, playing it from the long side was a very hard hold all day long because we just kind of stair-stepped down. Then we had some, decent sized movement to the upside, only to be met with more selling. This was yesterday, I thought, was a hard hold either side, bullish or bearish, but I thought we would get a little bit of legs to the market just because volatility was decimated yesterday. Nick?
Yeah, I agree on the volatility point. I mean, even with the E-minis down like 40 or 50 points, volatility was down 30 or 40 ticks. So there it felt like, you know, this was a non-event and that it would be a buy the dip opportunity. I didn't think it was going to happen, you know, overnight. I thought you'd have a couple days. I mean, we've been talking about, you know, a little bit of a dip after the event and then you kind of scoopy that up. But I guess if you didn't within the first 10 minutes, you kind of missed it.
Let's talk about the big things on the board this morning. that would be bonds and the dollar. What are you guys doing what's happening there?
Well, bonds are basically unchanged, trading 117.17. And if you look at the dollar, or if you look at /6E, it's basically unchanged too. So two real non-events for today so far. Now the dollar's gotten beaten up, so maybe there's something to be said there. Really, I think the bigger question is in the equity market, and a lot of these tech stocks, which I'm sure we'll get to during the day, have really caught a bid. Is it too much too far right now? I think that.
Give me a second. Give me like 2 minutes, girl.
I'm not good with the foreplay. I'm sorry.
Give me 2 minutes. Don't get right to it. Let me warm up first. Okay, first. Let's get to the softs. Corn, soybeans, and wheat all closed lower yesterday. Corn slipped lower into the close. Like I said, soybeans and wheat also lower. Corn futures have closed out Wednesday with losses of 2 to 3 cents across the front months. Let's just talk some of the softs.
I mean, wheat is probably the weakest of the group relative over this time period. They've actually caught a little bit of a bid over the last month and a half, coming off of their lows, respectively. Corn, wheat, and soybeans, I'm the worst commodities trader, so I don't pay them no mind, really, to be honest with you. I don't trade them too much.
Okay.
Yeah, I got long wheat with Westwater on Tuesday. We had a little discussion on the sentiment and just positioning in a lot of the ags. There's been a lot of short interest there. And so I took the other side of that little contrarian play.
Okay.
Not that yesterday's move really did anything for my position because it's an out of the money put spread with 50 days, I think I have on here, 36 days until expiration. So it hasn't really moved, but I have slightly long delta there.
Here's an interesting story. The SEC voted 3-1 along party lines yesterday to reverse a long-standing but unwritten SEC policy in which the agency used to block the Wall Street IPO debuts of companies that wanted to ban shareholder class action lawsuits. So now they said the SEC would allow companies to still file to go public and they can require investors to resolve claims of fraud or other false statements through arbitration. It weakens shareholder power, but it's a giant gift to corporations. What are your thoughts?
Well, I will say the first IPO that nobody wanted was yesterday, StubHub.
Well, I'll get to that. I have it specifically.
I didn't know.
This is just about a rule changing because, like, if you were a Tesla shareholder, an Apple shareholder, and you're like, hey, you committed fraud, I want to sue you as a shareholder, you could do that. But now you have to go into arbitration.
Yeah, it's fraud season. Come on. Just whatever. Who cares? You gotta get your bag before it's too late, Vanetta. That's what this world and this market is.
So, but aren't you a shareholder of multiple companies? Like, wouldn't you're okay with being forced?
So let me take a step back before he answers that, because there's only one person on this show right now that's ever been on an arbitration committee, because that's the rule that you would have down on the floor of the CBOE. You were not able to sue each other, market maker to market maker, even market maker to customer, because they don't want to tie it up in the courts. Plus, the courts don't know about it. I actually think, I mean, if done properly, this can streamline a lot of issues and get rid of a lot of these kind of frivolous lawsuits that you might have against people. Let me explain.
Sure.
Like in the 87 crash, there were a lot of issues with pricing, discrepancies, calls versus puts, misrepresentation of orders getting filled at prices that didn't exist, orders not being filled, and something trading higher than their offer or lower than their bid. And they would all take these to the arbitration committee. And we were able to get these done in about a year and a half to 2 years, which in the court system would have taken decades, I believe. I mean, with the appeals and the changes and everything else. And it is binding. Now, at least at the CBOE, it was the arbitration committee was made up of market makers like myself, brokers like Frankie in the chat room, and customers. So customers could be part of the committee, and you would randomly get 3 to 5 of these people to do your arbitration, and it usually was done within a couple of days when your case came on. So if you had a smaller, easier case, it'd be done in that same day. You'd get the results in a day or two. If it was a much larger and you had to come back multiple times, it might take a week to 2 weeks. But it was a pretty quick, streamlined.
Okay.
Yeah. So
maybe it won't be so bad.
Right. I don't know if they're doing it that format that way, but if they are, that's not a bad thing.
The SEC is also paving the way for spot crypto ETFs with new listing rules. The SEC voted yesterday to approve a proposed rule change by 3 national securities exchanges, enabling them to adopt generic listing standards for new cryptocurrency and spot commodity exchange traded products. What are you guys doing in crypto this morning? Digital assets.
Up.
Yeah, I said yesterday that I thought Bitcoin was getting a little bit heavy. I thought the cryptos were actually getting a little bit heavy. I'm completely wrong. Up 1.5% on Bitcoin. So I mean, again, not anywhere near its highs of 120 and change, 124 and change, more like 117. So maybe they're weaker relative with the market being at all-time highs. But I don't know. I think Bitcoin's lost a little bit of its velocity. Maybe it's in some of the smaller stable coins. I don't know, but the big guy seems to have lost a little bit of its luster. Ethereum is up 66 cents too, talking about the futures. That's closer to its highs. Ethereum seems to be bid.
I'm skipping a story here, John. Bullish, the owner of CoinDesk, had their first earnings yesterday, and their earnings per share beat analyst estimates while expecting higher adjusted EBITDA for the next quarter. The crypto platform reported pretty decent earnings. Stock did go up after hours. BLSH.
Yeah, I've looked at the stock a couple times. We've had some people in the YouTube chat that trade it. The options are not very liquid, so you got to be careful there. But it's when you're looking for high volatility, you start looking at some of these stocks, and this is in that basket.
Sure, of course.
You got to be careful with liquidity here too. I think Nick is right with the caution on the size of the bid ask on the options themselves.
Mm-hmm.
Now here you go, Nikki. StubHub slid 6% in their NYSE debut after the ticket seller's long-awaited IPO. StubHub opened at $25.35, but then dropped after the online ticketing site priced its IPO around the middle of its range. StubHub is the latest in a flurry of IPOs. Ticker is Stub.
Yeah, I saw a great tweet that said you pay a 30% commission every time you trade it. Because like every time you buy a ticket, it's like $100, and then you go to check out and it's like 140, and you're like, where did this extra $40 come from?
Yeah.
So yeah, it's. I mean, not a shock. I would not be bullish this stock, but it is a shock for an IPO to not double or triple on the first day of listing.
Right. Because that's the norm.
That's the norm. Everything's cheap today.
Yeah.
That's the market.
I agree. Hey, NVIDIA stock fell yesterday on China fears after China said they would forbid any companies from purchasing any additional NVIDIA chips. How much should investors worry?
Not much today. It's up $5 pre-market.
And we're back. You just buy those.
And we're back. Yep. You got one day. You get like 24 hours to buy the dips now. Intel as well going nuts to the upside. There's some news there with an investment. NVIDIA investing $5 billion into Intel. Intel trading at 32.
None of these numbers are real.
Listen, you got to get it. You got to get it, Vanetta. Don't get left behind.
The only good thing was Intel, which I made fun of Tom, he liked it for the last year and a half or so,
Yeah.
with the market going crazy. I'm like, you pick this crapola stock, to be the one that you're gonna make a bet in. And he did get long it and sold it out and doesn't have any right now.
No.
Oh no!
My God.
Yes, yes, yes.
I love that.
Oh,
Yes.
it's so sad. Just buy a couple shares and squirrel them away, or God forbid, buy a couple calls. My
Yeah.
God.
Stock's gone from 20. It was under 25 last night up to 32 and change.
He probably made 30 cents on some puts, though.
I did have a customer write in and say, I've been holding this stock for 8 years. My cost basis is 32. So
That's funny.
it's back to where it was 8 years
Yeah.
ago.
An AI chip startup called Grok with the Q, not with like a K, like for XAI. I don't know why all these dudes are obsessed with Grok, but that's fine. But an AI chip startup called Grok with the Q confirmed that they'd raised $750 million at a post-money valuation of $6.9 billion. Again, I've not ever heard of this company, but they're worth $7 billion.
Why not?
Yeah, I don't know.
Oh.
Have a party. That's it.
Yeah.
That's the story.
my favorite thing is when Mikey will tell me he'll go, yeah, Coinbase, like, 83 billion. It's not even 100 billion. Like that's cheap. The billions are now like, 100 billion is now like a small company.
Sure. Yeah. What a time to be alive.
Yeah.
I don't know what's happening. Nikki, I don't know if you watched any of the Meta Connect conference, but Mark Zuckerberg unveiled an $800 pair of Meta Ray-Ban display glasses. It comes with a built-in display and a companion watch to do all sorts of stuff. They also unveiled a $499 Oakley Meta Vanguard variant and a $379 Ray-Ban Meta Gen 2. The $800 glasses are controlled via hand gestures through a wristband that's powered by neural technology. What is Meta stock doing?
Oh my God, there are a lot of buzzwords there.
A lot of
I know.
buzzwords. I thought I was at a company meeting for a moment.
Seriously, I had like a aneurysm there.
$4.50 up move in Meta to almost 780 from 775 and change. If it stays up here, this will be a new high for.
Hey, Street likes it.
Yeah.
Nikki, do you trade Meta at all? Are you trading it right now?
I do not have anything on here.
It's probably for the best.
Every rank of 9 in there is quite low.
Yeah, it's a tough one to trade. It's $700, almost $800 stock now, so it prices you out for us little Johnnies,
Well,
you can only do so much.
A spread is always going to be the same. A $10, $20 wide spread,
Yeah.
an $800 stock, or an $8 stock is the same exact thing. But
Yes.
markets are wide in here. I mean, almost $1 wide in Meta. I agree with you. No need to do it.
Yeah.
My Taiwanese sources are saying that Apple will release a much rumored OLED MacBook Pro that incorporates a touch panel using on-cell touch technology sometime next year. There's also rumors that a low-cost MacBook slated for mass production in Q4 of this year will not feature a touch panel. But what do you think about that, Nikki? Kind of like an iPad MacBook combo. Boop, 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 boop.
Well, I knew something was coming when everybody was sending me links to buy MacBooks. They had MacBook Airs on Amazon at like $9.99.
And I saw them like $6.99, like right before school started. Like
yeah,
super cheap.
yeah, they were all on sale. So that's how they get you. You get it new, and then they come out with the new product. You update your product. Your battery life goes down 90%, and then all of a sudden you're buying a new MacBook, despite the sale that you just took advantage of.
What's Apple doing this morning?
I don't really care. I don't really know. But Nikki's 100% right. I've got an old phone. I mean, if I don't have it plugged in all day long, it does not work.
And it happens overnight.
It
Like
really does. It's
your
so
phone's
quick.
fine for the 5 years you have it, and then one day you wake up and it just doesn't work.
It's
Yeah,
absolutely.
but Nikki, that happened with your body as well.
It's just
That's very true. That is very true. Well, that's when the warranty expires.
Yeah.
The warranty expires at 35, and then all of a sudden you're an old man.
Yeah.
Apple unchanged, really up 20, 30 cents in this market. And Apple's caught a little bit of a bid over the last week or so, going from 225 to almost 240 where it sits right now, but not participating right now, Apple.
So wait, Bat, are you going to buy the new phone?
Probably. You know what?
You have to.
Yeah, I still have fear, like in yesteryear when you would return your phone and they had to put everything back on there, you lose basically everything you have there.
No, it's so easy. It's instantaneous. It's in the cloud, Bat. It's all in the cloud.
Spoken like
I
a
haven't
true
wrapped my head
boomer.
around the cloud either right now. I'm really old school. If I can get like a can with a string, I probably would take it. But yeah, I have to do something.
You got to do it. Hey, Lyft shares popped yesterday on news that they are collaborating with Waymo to bring robo-taxis to drunk bachelorettes in Nashville. That's for you, Nikki. No. Alphabet's Waymo said it plans to launch the robo-taxi service next year in Nashville, partnering with Lyft for the first time in a commercial deal. Waymo is far ahead of the competition in the U.S., having logged over 10 million paid trips. A boom, boom, boom. Let me hear you say Waymo.
Waymo.
What's going on in Lyft this morning?
Lyft looks up small, 20 cents maybe, but you're right. It made that huge bid yesterday from under 20 to almost 23 where it sits right now.
What's Google doing? Are they headed to $4 trillion of market cap?
Probably. Why not?
Getting close. Google 252 and change, up around $3 or so.
Okay.
I think 250 puts it at 3 trillion. So it's right there.
Mm-hmm.
It caught up to the rest of the big dogs, but I don't know about this the Waymo driverless stuff. I don't know if I'm on board with it.
Yeah, but your dad's been in one. He loved it.
Yeah, have you done it yet, son?
I haven't. Freaks me out.
I know. I felt the same way. I'm telling you, you're going to be so surprised at how soon you forget that nobody's driving you and how peaceful it is. Like, I mean, I'm a talker. I don't mind talking in the car, but
it is an introvert paradise.
Yeah.
It really is great.
Is it as smelly as an Uber, though?
It can be.
Okay.
Not from my experience, but I can see how it could be.
They haven't solved that problem yet.
No.
Right.
No.
Hey, Nikki, you and I might be looking to maybe fill out a job application. I'm just kidding. But Bank of America has raised their U.S. minimum hourly wage to $25 an hour, delivering on a commitment that the company rolled out in 2021. Bank of America did hit that level of $25 per hour across the U.S. The second largest U.S. bank has increased their minimum hourly pay by nearly 67% since 2018. That's good. I mean, when companies are bad, we call them out. But when companies are doing good stuff, we should reward that too. Mm-hmm. That's great. Pay people a livable wage.
Pay the man his money.
I'm not sure what Boofa is doing this morning.
Up 20 cents or so, 51 and change. But I mean, everything is up so far this morning.
Everything's up. Everything's near highs.
Of course.
Yeah.
Well, speaking of near highs, Walmart stock is approaching a new high, but analysts say the months ahead could get noisier. Steeper price competition likely lays ahead. And of course, we're heading into the very busy holiday season. Companies like other companies, Walmart is fighting through inflation and tariffs, but they are dominating the retail space right now. What are you guys doing in Walmart, if anything?
104 looks unchanged. Yeah, when are all these tariffs going to hurt all these companies and everything else like that? We're at all-time highs. When is this bad thing going to happen? Does anybody know?
No, we're paying for
things
them.
Are crazy expensive right now. Like you don't personally feel like
yeah. When's it going to happen? I don't get it. I don't know.
It's hurting me.
You seem to be all right.
When are Walmart's earnings?
Walmart with earnings.
They're not out yet. It'll probably be somewhere. I mean, if you look at implied volatility, the November expiration has about a almost 28% implied volatility. If you look at the October weeklies, you're sitting at like 23, 21, 21. So it's probably somewhere in early November.
November 20th, son. November
Oh, there you
20th.
go.
In Walmart?
Yep.
I don't know if that's confirmed.
It's not.
Probably.
It's not confirmed. None of them are confirmed. But
Yeah.
you can book. It's going to be a couple of days around that, if not.
Yeah, because of the
Yeah,
implied
well-
volatility, like I just said. I didn't need you.
Something that is confirmed, FedEx is going to report their quarterly numbers, their earnings after the bell today, and they will probably report a quarterly profit hit from the decision to end the de minimis rule that would greatly impact a shipping company like FedEx. What are you going to do, if anything, in FedEx?
I have to give Dr. Jim props for being the first to use de minimis before this rule was started. I don't think I'd ever heard that word used
Sure.
in any sentence prior to this.
You were right. He's been using it since like 2012.
Yes, for sure. For sure.
That's funny.
Yeah.
FedEx,
I
what's the
think I
expected
might have been the
move?
first one to use it, but okay.
You? You didn't use it. You used it because you heard him say it.
I couldn't even spell it probably.
For sure.
What is the expected move in FedEx?
FedEx for earnings, FDX is looking at about a $16, maybe $17 expected move.
Oh, okay.
Mm-hmm.
Well, that's something.
Yep.
Here's something interesting. Fitness tracking app Strava is now seeking to hire banks because they want to have an IPO. The popular fitness tracking platform is hiring investment banks for its IPO. The San Francisco-based company, valued at $2.2 billion in a funding round completed in May, wants to go public.
Why not?
Why not?
Why not? They're all going public. I don't know. I have the Aura Ring. It lasted about a month before I got sick of it.
Are you
Oh,
serious?
really?
Yeah.
I think I got scammed on one of those rings. I went with the internet sensation of the, I forget the one that's going to not need any power. You can keep it on all the time. Do you get those internet ads? Do you get those?
No, I don't. I'm not a boomer that clicks on all the ads and gets scammed all day long.
Well, I like to do that because sometimes it interrupts the program, and I have to log off and log on again because they've taken control of my computer.
Exactly. Yeah.
Don't do that. Don't do that. Don't do that at all. Hey, this is funny. Cracker Barrel reported earnings yesterday, and the stock falls as the company reported mixed earnings after just a rebranding controversy. Poor Cracker Barrel. They reported earnings yesterday after the bell. Revenue came in at $868 million. That's a lot of chicken and dumpling, y'all. But earnings per share came in at 74 cents versus 80 cents expected. CBRL.
CBRL, the Cracker Barrel, 40.
Some great memes.
Yeah.
Great memes were unearthed with that rebranding.
So many memes.
So many.
Down $3, which will bring it to a new recent low, not a yearly low. It traded down around 41 and change back in April or so, but certainly off of its highs of 71. This is a stock I probably wouldn't be trading at all if it hadn't been in the news, right?
I know.
If you are in the weeds trading Cracker Barrel options in this market, you have a screw loose.
You should seek help.
You should seek help. Like,
there's so much action every place else. Yes, totally.
Yeah, you can find a lot more opportunities elsewhere.
In a story where just art imitates life, because I think we can all relate to a similar situation here at Tasty, a zoo in China had to ban visitors from showing Ding Ding the baby chimp viral TikTok videos because he became obsessed with them and they could cause health problems. What does this remind you of?
I mean, is this indicative of what humans are going through right now?
No, it's like, we got to take the phone away from Tom.
Yes, for sure.
Poor baby Ding Ding.
That's hilarious. Yeah, I've seen the videos of the monkeys that like they do this.
Yeah, they know how to scroll on an
Yeah.
iPad or iPhone. Yeah.
That's
wild.
It's crazy.
He's so
Crazy.
cute if you look at pictures of him with his little face. But yeah, don't traumatize him. That's bad.
Yeah.
Finally, today in my viral video of the day, I have always wanted to do like a shark cage dive.
Oh, wow.
Yeah, like in like South Africa or something.
We did that
where
one
great
time.
whites are. What?
We did that one time. You remember that, Dad? Mexico?
Absolutely. Swimming with the sharks, the Faristas.
Yeah. Well,
Yeah. Sasha was crying the whole time.
Sasha was crying. She's in your account to opening team. Yeah, you might have done.
Well, this is a shark attack that I didn't see coming. Watch this.
I came in like a rainbow.
God.
I came in like a rainbow.
Wow.
I mean,
all else considered, I think he got away unfazed there.
yeah, I would say so.
That was a love tap, you know?
I don't know. I don't get it. Like, it's just sharks being sharks, right? I mean, don't put yourself in that position. I don't know. Hey, that monkey picture, you put a beret on Tom, you might have something. Like, you put a beret on that thing, you might have Monkey Tom. That kind of
That's funny. Well, thank you, Bats. What's coming up next?
We're going to take a quick 90-second break and come back. We got a little confirm and send next. We'll be back in 90 seconds. It's Tasty Live. Good job, Vanetta.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply. When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nikki, we are back, my son. And you know what that means? Time for a little bit more Tasty Live with confirm and send customer emails. But before we do, let's take a quick look at the market. E-mini S&Ps up 45 handles, reversing and coming to new highs if we stay up here on the day after the FOMC meeting. They rallied about 20, 25 handles immediately following the close yesterday, and have been strong all night long. NASDAQ up 260 and change. Russell up 24 and the Dow up 165. The Russell and the Dow were the strongest of the group yesterday. Russell's the strongest of the group with the NASDAQ today. Volatility in by 30 cents, a relatively smaller move on volatility as the market has gone to the upside. Yesterday, if you remember, Nick talked about it, I talked about it, volatility got creamed, even with the market down 40, 50 handles at one point. Volatility was red, signaling this market had a little bit of legs to it. And today it came to fruition. Bonds down 13, 117.02. Maybe a little bit of surprise there on the bonds trading near their lows, one tick off of their lows right now. Bitcoin up $1,500. I thought Bitcoin was getting a little softish here. It's up $1. I'm sorry, 1.25%, a little bit more, 1 1/3. Certainly making me look foolish. Ethereum up 58. That's the one that really has a little bit more volatility, I believe, than Bitcoin, trading closer to its highs. Oil up 29. Gold down $16. Gold 36.67 was the low. That's about 30 handles lower than where it is right now, down 19. I need gold a little bit lower. I've got a GDX position that's giving me fits. Silver up a small penny or so. Nat gas down about 1%. That's 4 cents to 306 and change. But this is really a tech rally right now with Intel, NVIDIA.
Yeah, the chip stocks are going absolutely berserk this morning. SMH up $9 right now. I mean, some of these stocks
That's the whole semiconductor field, right?
Yeah, you have, AMAT is up $10, NVIDIA is up $5, Intel up $7. It's a chippy day.
It's getting chippy. It's getting chippy, like on the hockey ice when they start talking to each other. It's getting a little chippy.
Yes, no doubt.
Well, let's get to a little bit of a confirm and send. You want to?
Yeah, let's do it.
Viewer emails. Let's go.
Cool.
Thank you, John. Thursday, September 18th. If you didn't know it, now you do.
Beautiful.
First question, please. At what point do you consider a stock to have gotten away? So you wanted to buy something or get short. Do you have a certain percentage in mind that once the stock moves by that amount, you consider it to have gotten away?
From a position standpoint, if you're trading like naked puts, naked calls, strangles, straddles, whatever, I think you have to look at it from a delta perspective, because that's really from a risk perspective, that's the way to look at it. Like a dollar move in Pepsi is way different than a dollar move in NVIDIA from a volatility standpoint and from a position standpoint. So for me, when I get to somewhere around like 60 or 70 deltas in one direction, if I'm starting neutral, that's usually that's like my max hold point. A lot of times I'll get a little bit stubborn. Like I have a beam energy position that's ripping my face off that I have to do something today with. And that's usually when I get to 60, 70, 80 deltas in one direction. That's kind of my trigger. I usually want to manage when I'm 30 or 40 deltas in one direction. If I'm stubborn and I want to be directional, I usually wait until I get 60, 70, 80 deltas, and then I'm doing something.
Very good. I agree with you too. Maybe even I don't know, 2 times the loss is what a lot of our research shows. It's hard for me. It's the rule that I know about that I don't.
It's the same thing though. 2 times loss and 80 deltas is probably the same number.
Close enough. Yeah.
Yeah.
Close enough. Yeah. You're probably right.
Yep.
Good job. Next question, please.
So will you ever sell premium in its stock even if the IVR is really low?
I mean, I'd love to tell you not to. You're asking if I've ever done it. Yeah, I've had instances where I'm short premium. I like to be short premium. Like that's my style of trading. So if volatility is in the 20s, 30s, or 40s right now, 40s I think is amazing. I mean, I know I found a stock for my option trade today, Oracle, which is something I never really trade. I don't really like the markets in there, but it had relatively high implied volatility, 68 or so. So I put a trade on in Oracle. More importantly, I'm not trying to sell premium and low implied volatility, but I'll go to fringe stocks that have higher implied volatility to try to do something there. So if I answered this honestly, which I always like to do, sure, I've probably done it. I don't make a habit of it, but I would say that when volatility is low, I go into a lot more fringe stocks, which is not the best thing either. Markets aren't as tight and deep than staying in my core stocks that have low implied volatility. How about you, Son?
I think people get too caught up with this. I think if you're looking at short premium, specifically naked positions, sure. I think leaning away from those sort of trades when IVR is super, super low, that's
an iron condor, you're saying, and then you mitigate that volatility. Yeah.
Exactly. When I see low IVR, it just tells me that the wings are cheap, and that if I'm trying to put on a trade there, I should be buying the wings. And when you're doing a 10 or 15 or 20 point wide iron condor in Meta, for example, you have no vol exposure.
Right.
I mean, your exposure is time and price. It has no, your vol is basically nothing. If you're looking at something like, Nvidia, instead of being naked the strangle, I'd be buying the wings just to mitigate that vol exposure, and then you've got, your vol exposure is very minimal.
Yep.
So it's strategy. It's more a change in strategy than underlying. I still want to trade Nvidia. It's one of the most liquid products in the world. So, I'm trading it. Next one, please.
What is the practical implications for us as traders from an interest rate cut or increase?
I think the biggest change, I think, is sentiment driven and short-term price movements. From an option perspective, higher rates make longer dated call options more expensive. So, that is something to consider right now. You're getting cheaper money, which means that, it's cheaper to speculate.
Yeah, but does it affect you right now? Like here they lowered a quarter point. Are you able to put on different type of trades because of the quarter point? No, it really has nothing to do with us. I mean, it affects bonds, obviously. That kind of thing. Like you're getting, like if you had money sitting in bonds, and you had locked it in already, you benefited a little bit by the quarter point decrease because your bonds probably rose a little bit. Your yield rose on your bonds that you had. I mean, no, it means absolutely nothing. If you're not borrowing money, which we don't look to trade on margin or anything else like that, it means absolutely nothing. And even a quarter point move isn't going to move margin rates on brokerage firms anyway. So it means absolutely nothing. It's much ado about nothing. I think you hit it on the head. Perception for market direction is probably the biggest one thing. Next question, please.
So tomorrow's triple witching. Is there anything you will do today on the close to prepare for tomorrow? Is there increased risk from triple witching, which we should consider?
You know what? First of all, I'm out. I mean, if you're staying mechanical, it's teach trade mechanics. You usually rolled these positions.
You're out as in not here. You're yeah.
Well, I'm not. No. I didn't mean actually that way, but I'll clarify. You are right. I am out. I am not here tomorrow.
Yes.
So I will be trading through it though live in New York. If you're in New York City, please come out and see us. Love to have you. But if I was here, I'm out of my positions with 21 days to go before expiration. I usually roll everything pretty tight to that 21-day rule. I think it's cut down my P&L swings in my overall position and made it a lot easier to manage my positions and my P&L to the upside a lot better. That said, if I look at like a position that I might have on that I kept on like a vertical spread that went wrong, hopefully triple witching will help me out with some big moves. But let's be frank here. Triple witching It really has been a tight-ish range, $9 or $10 on SPX on average. So it really means absolutely nothing.
Yeah, the only thing that really comes into play for a option trader is the dividends. So that's the one thing that you got to be careful of. If you have some deep in the money calls, you want to roll those out. You also get typically a lot more liquidity in the market throughout the week because everybody's kind of dealing with the same situation of lots of expirations and rolls and adjustments and all that sort of stuff. But fundamentally speaking, I don't really, it's the same as any other expiration for me. Next one.
Next question, please. If I put it in order to buy stock at the same time an institution puts it in order to buy stock, but there isn't enough for both of us, who gets filled?
So retail is filled first. So regardless of the number of shares or contracts, if you're trading options, if you come in at the same time with a 1 lot as Goldman Sachs has 1,000 lot, you're getting filled first. They get the next run of it. So at that price.
I'm not I know with options, what you said is 100% true.
Is it not the same with shares? I thought it was the same with shares.
I'm trying to think in my memory because I don't trade a lot of stock, but I'm 95% sure that again, exact same time is a tough one to put your finger on. But yes, exact same time, then the retail order would get filled first over the institutional and stock too. I'm 100% sure it's in options, but I'm 95% sure with stock. So I would bet a lot of money that the answer is correct.
And let's be completely clear. There is no market maker, liquidity provider, or anybody that gives a flying whatever about any single retail order. Okay? There's you don't scare anybody. It's the size is not big enough. Nobody's here to
you're helpful.
Yeah, I mean, like you're this. They need the liquidity, and so there's no nefarious actor that's trying to steal a penny from you on your 10 lot trade or your 100 lot trade. That is not a thing.
That is true. That is true.
That's if that's your worry,
you got no worries. If that's your worry,
no worries. Yeah, nobody. You buy 100 shares of Nvidia, and nobody even knows you did it.
Yep. Yeah. Very true.
So,
next question, please.
So last one here. So why do some options trade in pennies while others trade in nickels?
Yeah, great question. We can go a little bit further on this too. Why do some option series have $5 wide strikes when all the rest of them have dollar wide strikes, or $10 when all the rest of them have $5 wide strikes? I mean, I think the exchanges have to do a lot better job of making it a lot more uniform, because the bandwidth argument has gone away. I mean, with weekly options and all this stuff, I mean, it's really that excuse, we're not buying it anymore. It ain't gonna fly. As retail investors, ain't gonna fly anymore. But the answer to this is, and they will say there's just not enough liquidity providers to make them nickel wide.
Make them penny wide.
To make them penny wide, so they keep them nickel wide, which I think is also a falsehood. But
yeah, I don't buy that as well. I think it's pretty juicy for SPX for the CBOE on the SPX.
I mean, no, remember it's the liquidity providers. I mean, the exchanges get paid on the trade. They want to see as many trades as possible, so they want your markets to be as tight as possible. But you mentioned SPX, a $6,000.
It's also size. Yes, that's the
$1,000 product. I'm talking about more like these smaller size stocks that are $30, $40, and they have nickel wide markets. You don't get filled in penny. That's kind of BS.
Sure, I agree.
Let's take a quick 90-second break here and come back. We got more Tasty Live. What comes up next? Well, trades from the research team. Back in 90 seconds, Tasty Live.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
I have made a deal with the devil, and I'm long UNH.
What's your most controversial market opinion?
Well, my newest phrase of the year is "until proven otherwise," which basically means buy every dip because they've been gobbled up pretty quickly, and even like the tariff stuff. At the bottom of the tariff stuff, I was like, ooh, maybe things are different, and now here we are at all-time highs, like 2 months later. So I think you still got to keep your size in check, but I think the dip buying is here to stay.
Well, I mean, I already told you my UNH trade. I have made a deal with the devil, and I'm long UNH. So I think that is pretty controversial. I don't know a lot of people that know about that stock, let alone trade it, let alone want to be long it. And so I feel like it's a whirlwind of just heinous attitude that has to be to the upside now.
On the subject of bonds, let me now expound. Swoons, they will, nay, must someday turn around. Oh, cursed bonds, will you not soon fall like rain? Quit this parched desert of misery, I can take no more pain. With thy nimble run, I admit I am impressed. But climb no higher, or I shall be depressed. Ye tasty traders, all now hear my plea. This position chafes worse than the bat to me. Markets, this is no time for foolish frivolity. Will ye not cease this fatuous flight to quality? Oh, if I could, I'd wave all my magic wands to sweep away regret from shorting bonds.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
know what that means. We've got more Tasty Live with trades and the research team. Who is our first researcher?
There we go. No, you got to go head. You can't head. You can't.
Yeah, head. He's got head. He's got head. Otherwise he's going to be the rooster again. He's not a rooster.
I know. I was doing this. I was being a little lazy. Okay.
That's all right.
This turns into a unicorn. This is an action.
You are a unicorn. Smart, handsome, amazingly perfect for Showtime. I mean, you are the unicorn.
I see.
I mean, you can code,
struggling to find the adjectives there. Okay.
No, yeah. I was trying. All
right. Okay.
How you doing this morning? What are you thinking?
Good.
We keep going higher?
Yeah, I mean, we're always bullish on the U.S. economy, right? Hopefully.
There you go, Shark. You're listening to the right people.
Waiting for the crash to happen in 2 months, right? No, I'm joking.
Oh, no. Never. Come on.
No.
Up only.
Up only. Up and to the right.
Yeah.
What do you got for us, Sharky?
United Airlines.
Oof.
Airlines
Okay, go
stock.
ahead.
So, I mean, it's been going up and a little bit off its highs. So
let's, yeah.
Strangle-ish, relatively, high IVR stuff. So
2022. We just had a question about this on Confirm and Send. Yeah, you're stretching here. Are you going into
what is 2020? Is 22 IVR not high enough? We need to go higher.
No, it is. We were talking about how, like, what's the new high? You know what I mean? Like, what's high implied volatility? 22 would have been very low implied volatility, 6 months or a year ago. Now it's like, we got
in our current environment, yeah.
But I like the way you went into October and avoiding earnings instead of going into November. So for that reason,
you want to avoid earnings. October, 29 days, hopefully in and out of this trade.
For that reason, and because it's Tom's money and Tom's account, I will make this trade.
I see. I have a feeling you're going to go 5 for 5 today.
I have
there you go.
Stocks up $1 right here. So this spread really has no delta to it. So I don't think it's going to change too much. But I'll go in. I know you got filled with 371. I'll go with 381 and see what happens.
And see what happens around market open.
Yeah.
Yeah.
I like the pick. I pitched Tom on Delta Airlines, a strangle there yesterday for Johnny trades. The airline stocks certainly look like they have a little bit of extra volatility relative to the rest of the market. So nice find here. I think when you're searching for something with some volatility, you found one of the few stocks that has it. So I like it.
All right, sounds good, guys.
Beautiful. Who is our next researcher? That's right, Gad, my man. What's going on?
What's up?
Everything well.
Everything's good.
Everything is good. Everything's good.
Yeah.
Yes.
Sometimes they say everything's Gucci.
Everything's Gucci. That's the Gen Z.
That's Gen Z.
In you. You're a young man. You're in that realm. You're not on status yet.
Yeah, I'm still in 20s. Many people think I'm in 30s, but I'm still in 20s. So. Yeah.
I love it.
But I'm getting there.
It comes faster than you think, Gad.
I know, right? I know.
One day you're one of Tom's, young rising stars, and the next, he throws you you're an old man. He throws you to the side. So be careful, all right?
Yeah, I'll be careful. I want to be like you guys,
Ah.
Yeah.
Beautiful. That's beautiful. Thank you.
So today I have a UNH.
UNH. Okie dokie.
Yeah, I'm doing a bear call spread.
Bear call spread. All right. Defined risk.
Yes, defined risk.
The stock has, it's caught a little bit of a bid after getting pounded back in August. Okay. All right. Go ahead. What do you got? I'm seeing.
So I got 350, 360.
And you're staying in October also, avoiding the earnings.
Yeah.
So I like that too.
That's in October.
Yeah. And you're going right at the money here. Well, not right at the money. $10 out of the money.
Yeah, $10. Yeah.
$3 in credit, right?
Yeah. 3 and 38 credits correcting, and the buying power is good enough to use. No use Tom's buying power, so
Right. I'm gonna skew it a little bit. I'm gonna change a little bit. I'm gonna do the 360, 370 and try to get filled at 250 here with the stock being up $1 or so. We'll see if we can get filled at closer to $3 on a strike, $10 higher than you. Take a little bit less credit and possibly get filled at a better probability of success. 71% pop.
Yeah.
On the trade. So I'm gonna try that.
Okay, that sounds great as well. Yeah.
I like it. UNH IV rank at 26. I like it.
Thank you. Bye.
Good job out of you. Who's our next researcher? Let's get to it. That man of mayhem himself, Kai. What's going on?
Not much. How are you?
Everything good?
All right. Ready for some interesting trade?
What do you got?
All right, Baidu. All the Chinese high-tech stocks rising through the roof, and also with increasing implied volatility. So I don't want to fade the trend right now, so I just try to be neutral, try to catch some rich premium.
I appreciate you bringing this because Tom has blamed me for all his woes in the Chinese stocks. I think because of a trade that Tony and I did on Friday in his account. So now if we put this one on, I can have him blame you.
All right. Well,
so we're gonna have to put this one on so that I can say we did this on Kai's recommendation.
Yeah, 65, 75, 120, 110. Stock does look down around $4 this morning.
A little bit, yeah.
Did you adjust these strikes? Let's see, 20-ish delta, 24-ish delta.
Yeah, 20, somewhere between 20 to 25 delta. It's delta wise, it's neutral, but definitely has much. It has the call skew, so that's why the break-even point is much higher on the call side.
Yeah, I'm gonna go in. I'm gonna go in with the 160, 170 is all I'm gonna do. I'm gonna keep your puts the.
I think that's a better move. Yeah.
Yeah, or maybe even moving then down $5 maybe. I'll keep the 6. I'll keep the 20. I'll keep the 2010.
Yeah, you need some premium on the put side.
Yeah. Going a little bit of a higher price and maybe adjust it as the day goes on. All right.
I didn't check how much is a premium. I try to get it closer to 1/3. My strikes are a little bit different, only less than $3, but moving to 160 probably better.
Yeah, on an Iron Condor, I like your idea of trying to get closer to $3. I'm close to $3 too. I'm closer to 340, 350. You're 285.
That's perfect. Yeah, 330 is our target
between friends. Yeah. But we'll see what we get filled. Baidu markets can be wide, so we'll check that. But Baidu IV rank at 90, quite high. Probably the best one on the board when it comes to premium selling itself. Beautiful job out of you, Kai. Who is next? That's right.
Well, hello.
That song with a tie on is kind of, well, the whole weird science thing. I don't know if did you watch the movie with?
Yeah. Kelly LeBrock.
That's right. And he puts the tie over his head a little bit. And, yeah,
it's fun.
So it
80s movie.
It does fit. Yeah. All right. Before I get in any trouble with Julia coming up next, what do you got for us, Mike?
Okay, I got XLP. Staples. Staples is one of the worst performing sectors right now. Healthcare. So you got the three worst performing sectors right now. You got energy, you got healthcare, and you got staples. So staples, we're pretty much on its low. Not doing too well, even though the rest of the market's up quite a bit. This has got a pretty high IV rank. You can make a little bit of money in this one, it looks like. Judging by the probabilities here, this is a pretty high probability of success. There's no risk to the upside. It's a Jade Lizard. I'd be selling this 80. And then that was going to be good enough for me, right? Where I was going to make a few bucks off of this just selling the 80. But then I decided to put on the call spread too. So the 82, 83 call spread as well. So you're doing this all for almost $2. This thing can go down a few percent. You can still make money on this, and it's about $1,700 worth of buying power. So the return on investment, considering that it's on 64 days, it's pretty good.
Yeah, I like to break it up when I'm putting it together. So I like to see like how much I'm getting for the 82, 83 call spread. You're getting about 30 cents for it, which is 1/3 the width of strikes, which
Exactly. And I wouldn't do it if it was any less than that.
Right, exactly. And then you're going to the put to collect, more than the width of strikes. You can't go down to 70. You can't go down to 79. I mean,
No.
I guess you could if you really wanted to, but your credit is much is going to be much smaller on the overall trade.
And I don't mind owning this either. So like if it goes down and it, I'm not going to get assigned, but I don't want to have to deal with that. But I wouldn't mind even purchasing it. Even around here either. So
the stock does look down around 60-ish cents right now, so I'll tell you what I'm gonna do. I'm gonna put this in. I'm gonna leave it at a higher price and then adjust it when the market opens, because you will be selling. That. Yeah, you will be selling with the stock moving $1. Remember, there's only a $3 expected move for all of November.
Yes.
And the stock is moving about 75 cents today. Yeah. So let's take a look at what the pricing is, and we might have to adjust the pricing on the strikes. Might have to go down one on the call spread or so. Or
you think you might put this at 210 or 220, something like that, and then adjust it?
That is correct. That is correct.
I like that. That's good. That's a great idea, actually.
Yeah. Good job out of you. Let's see who is our next researcher. That's right, the little black cat herself. How are you, Julia?
Dude, I'm great. You would never get in trouble with me, Tony. I wouldn't worry about that.
No,
Julia. Back in the day, I think you would have been my.
No, you had to go there.
How would you guys ever get in trouble? I could not have had that.
I'm giving myself an Omaha, John. You don't have to. What do you got for us?
Oh, well, I'm going to get in trouble. I was feeling silly this morning. I'm looking at Oracle, really high IV rank, 68. Actually up a little bit this morning, a teeny tiny bit, but not as much as you would expect. It had a huge rally a couple of days ago. Still pretty high implied volatility. Decided to definitely go defined risk and actually kind of feeling neutral with this. I went a little bit shorter term with the 29 days. This is October. I went with the 270, 250 short strikes and then $10 wide. So it collects 317 in credit for 683 in buying power. Again, with like volatility looking a little gloomy in the market today, something like 68 was something that I wanted to consider. And yeah, it's after earnings. So for like a post earnings trade, wanted to go a little bit short term here though, because there's some kind of like more ambiguity around like the long term directional expectations for this one. Yeah. And definitely one defined risk for sure.
A little surprising that we didn't get that much of a move yesterday on the TikTok news. I mean, obviously the stock had a crazy move on the on earnings, but there was that the news that TikTok was going to be controlled by a group of players, of which Oracle was one of the bigger ones, and the stock really didn't move. It actually kind of closed down, I think.
A little red.
Buy the rumor, sell the news. It's exactly why I did a strangle in Oracle on Tuesday. That's right. So I'm like you, Julia. I did go into November with my own position for option trades today, but I like your defined risk trade in October. Again, plus it's Tom's account, so it's not my money.
Oh yeah, that's even more fun. Yeah, I went a little bit shorter term just because longer term, 64 days out is a long time, and there's a lot that can happen in 64 days. Sure. So with the stock price moving like kind of moderately actually over the last couple of days, I kind of felt more comfortable with like a neutral shorter term position. And then yeah, definitely going to find risk. And $10 wide, yeah.
No wrong answer here with expanding vol too. 68 IV rank has been holding steady, if not going higher over the last couple of days. So. Good job out of you, my dear. All right, well, we're going to take a quick 90-second break. Hopefully, we'll be 5 for 5 here on these trades momentarily when the market opens in about 5.5 minutes. We'll be back in 90 seconds. Let's Tasty Live. Thanks,
guys. Peace.
Thank you, team.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap. Yeah, that's gonna go. There's a spider on my desk. No, kill it, kill it, kill it, kill it. Oh my god, oh my god.
Where is it?
It's on my microphone.
I don't see it. Not from there, you won't.
Oh no, oh god.
Spiders don't bother me at all. Just the big ones.
No, it didn't bother you at all. From where you were sitting, you had no problem with it. Man, let me tell you something.
Thank you,
I don't want you to throw me a life preserver. That's never going to happen.
Thank you, Bat, for coming to my aid.
You're welcome. You're welcome.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
I almost said Tomas, my friend.
You do that every single time. Every time. I'm waiting for it. It's okay.
If you thought I was frozen there for a moment, I wasn't. It was just a brain freeze. What it was. Niggy, we are back, son. And we've only got about, less than 2 minutes here, about a minute and a half before the market opens. Let's talk about that real quick because the S&Ps sold off about 30 handles from their highs of 67.19 back to 66.87 right now, where they are right now, up just under 30 handles. NASDAQ and the Russell, which are the two strongest of the group, remain to be the strongest of the group. But look at the Dow, unchanged now. This could be a little bit of looks like you got maybe a little bit of selling going on in the overall market. What do you think here, son? Do the highs already in for the day? That would be my call. Wondering what you think.
Ooh. For my sake, I would hope so, because I have a little short delta here. So that's what I'm thinking. But I don't know. You got a big round number, 6,700 here, going into triple witching next week or tomorrow. Triple witching feels like maybe you get a little bit of a dip, but I think it's the same MO as yesterday. You got to buy whatever dip we get. We're going higher.
It's so hard. I know it's so hard to buy them when they're up a gazillion and down 25 handles. You know what I mean? What I mean? Like, But you're right. If you've done that, it's been a 1 day phenomenon. So yeah, you're 100%. You're 100% correct. You're 100%
Yeah,
correct.
I mean, Vol just getting smashed. I mean, we're down about a full point on this. The contract rolled on Wednesday, but we're down basically a full point from where it,
Which is $1,000 move in volatility for those who want to inventory volatility. Yeah. So
huge move. So I don't know. I think it's more of the same. I don't feel like getting cute here.
Tom made a nice call. He didn't do anything about it, but he made a nice call. Bonds trade up to 119.
Does that count?
No. It's all him trying to validate himself.
If you make a call and don't make a trade, isn't that what this whole network is you make a call, you make a trade. Come on.
Yeah, no, 110%. So I totally feel about that. Bonds trade up to 119, they're 116 and change. I think bonds being soft is really kind of hurting the market overall here. Bitcoin's still up almost 2,000 to 117 and change. Oil basically unchanged. Gold down 32. GDX down 92 cents. Die, you pig. Did I say that? Did I say that? I do.
Got some problems there in GDX and some gold miners.
Yeah, I need GDX closer to like 63. It's 67 and a half after trading over 70 just a few days ago. Every time it sells off, it catches a bid. The same thing with gold here. Gold now down 33, but every time it sells off, it catches a bid. Let's see what some of these market movers are, son. AMD to the downside, trying to be a bucker, down 9. Advanced Micro Devices down 9. Netflix down 7. Baidu down 4 and change. Baba down 4. TSM down 3. PDD down around 2. Microsoft down around $1 or so. Let's see what the upside is. Apple Oven always goes up, $616. SMH, I know the team mentioned that just a moment ago, up 8.5 or so. AMAT, you mentioned earlier today, part of the semiconductors, up $7 or $8. Reddit up $7. I know Tom's got some short delta in there. And there's everybody's favorite Intel, trading just under 32, while now under 31, up $6 and change. That's all I've got for right now. Taking a look at some of the trades that we were looking at, that Oracle trade is out of nowhere near getting filled. Baidu, man, they really crushed volatility here. That one,
those stocks are both down. Baidu and Baba kind of giving up a little bit. Volatility seems to be getting smashed there too.
UAL is another one up $1.15. I can't get filled in there. Tom's looking to try to purchase some notes right now. I can see him getting with a little bit of a smaller product, trying to sell some puts. Nope, try to buy some futures. I apologize. Try to buy some futures in /ZN here, with it trading about as low as it's been since September 5th or so. What do you see here, son? I'm taking a look at my own trades. Oracle down $2.30, not doing much of anything. GDX down 74 cents. Public service announcement, SPY goes ex-dividend tomorrow. Decent sized dividend, $170 or so. I mean, if you are in September options still with 1 day to go, just to put this in perspective, you'd be anywhere around at this price, the 658 calls and below would be an exercise. So if you had a deep in the money call spread that you were long and you're trying to maximize your gains, or you're short and you were just hoping the market would accommodate, you've got to do something about that. Because even if you have a spread, like if for argument's sake you had the 651, 652 spread that you were short, you really have to exercise those 652 calls, because you are going to get exercise on those 651s. Maybe you don't have the amount of buying power in your account to do such a thing. So you've got to close this spread. Close it or roll it. I would just close it.
If you're it just close the position. The exercising is, there's no point. Just close the trade.
You could get away with a $170 dividend. That would be a nice windfall, but chances are you won't. It's a very, very small chance that you will. But I agree with you. I close it. Even if I had the buying power, I would probably close it. So that's just that's just me. Now, if you're in October with that $1.70 dividend, it's going to be a completely different story. And this is why we talk about rolling and everything else like that. You'd have to go all the way down to around the 600 and I don't know, 17, 18, 15 calls. Nobody's going to have those calls. I don't think anybody's going to have those calls $50 deep in the money. So that's why we talk about rolling mechanically at 21 days. Even the S&P is up 29, NASDAQ up 200 and change. NASDAQ and the Russell are the strongest of the group. The Dow is the weakest of the group. Son, give me some words of wisdom here.
This looks pretty FOMO-y. I mean, you got some of the pigs flying. You got all the semiconductor stocks. I mean, I'm looking at, you got MicroStrategy up a handful. You got all the Bitcoin stuff like Open Door is up another, 30, 40 cents. Palantir is, $4 or $5 higher. This feels like it's kind of just a squeeze, a FOMO squeeze. Buy it all, whatever you want, just pick your poison today.
It does seem like just pick your poison. It does have a little bit of that kind of FOMO feel to it. I will definitely give you that here in the market. Try to take a look at what's where there's some opportunity here. It all seems to be on the short side. Could we sit here all day long? I mean, listen, let's look at /
6,700. I told you we're gonna sit there all day.
$25 expected move on the weekly options for today. The 19 options that expire tomorrow's 34. So you're looking at a $10 expected move, which is exactly the expected move that we had from yesterday on these options. So that hasn't really changed at all. $24 movement today is much higher than where it had been a few days before. A few days before the FOMC meeting, which was closer to $15. So you do have a little bit more premium in the front month for you 0-day option players. NVIDIA is up 4, AVGO is up 3, Palantir is up 6, by the way. MSTR up 8 and change. Apple only up 20 some odd cents. Tesla up 2. Netflix up small, $1 or so. Amazon going the other direction, down around $1 or so. Yeah. All right, son, I don't have too much more to add to this. Unless you do, let's take a quick 90-second break. You want to?
Yeah, let's do it.
We'll take a quick 90-second break. We will come back. That is Tom buying his notes.
Did you get on any of the research trades?
I did not get any of the research teams. I'm going to adjust the prices here on the break so that we can put some of those trades on.
Yeah, that's an effect of not only the price movement, but volatility as well. I mean, you get volatility.
Like XOP, I was in around 240, 230. It's 208.
Yeah.
Baidu, I was in around 305. It's 260. UNH, I was in around 250. It's 230. UAL, I was in around 380. It's about 340. So they've really moved a lot from yesterday pricing. So
the dollar, if you have any positions for the people out there that have been watching us with Young Glenn, aka G Money, on from the Tasty FX team, who comes on every Wednesday for Option Trading Concepts Live. We've been getting along the dollar having a nice move today. Just put that one out there. If you're short the euro, short anything.
A nice move to the upside, you're saying, on the dollar.
Yes, dollar very strong today. If you do the money sign DXY, that's a dollar index. It's heavily weighted towards the euro and the Japanese yen, but it gives you an idea of just how weak the dollar has been. It's been, we're at
money sign what?
DXY. Money sign DXY. It's a dollar index. It's not a tradable product. This is just a basket of currencies that the price to the dollar, right? So
sure,
it has hit lows,
I like to look at the euro just because the euro goes in the opposite direction of the dollar. You can see the euro down or pretty big.
Well, it's more because you can't actually pull it up on the platform because you're a boomer.
Let's take a quick 90-second break. I'm going to tongue lash my friend over here, Mr. Nicky, right after this. Even the S&P is up 26, Dow down 9. We'll see what happens to the market. Immediately found these messages. We got Hear Me Out with Dylan Ratigan next. We're back in 90 seconds with Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Rise higher, ye Taurian markets, I will thee ride. Oh, let the horned bull now be thy guide. Increase the yield, as the longs have long planned. Be not inert in flowery field like Ferdinand. Reward the longs their bulldog-like persistence. Like Lord Michael of Jordan, soar beyond resistance. Reward those who see upside positivity, as if in some ill-advised Pamplonian activity. Trip thy hooves o'er trading streets most stony, cobbled with the confidence of masters Tom and Tony. Climb with ease the line of Tim Knight's profit chart, and with thy rise make proud Slim's technical heart. Gore the matador of pessimism with thy horn. Let red capes of resistance now be torn. This market yoke to wagon now could pull to follow up the thundering of the bull. In market glory, let us be arrayed. Oh, hear this exhortation now from Tasty Trade.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Nicky, we are back, son, and through the powers that be, we've got straight from Milano, my friend Dylan Ratigan. How are you? Hear me out with Dylan Ratigan.
Pleasure to be here. Pleasure to be here, standing by, hoping for some challenging content, hoping for some perplexing and intriguing provocations.
Well, we'll do our best to do that. I haven't seen the questions yet. I don't think Nicky has either. Have you, Nick?
No.
All right. Well, what we do here is we put the questions up. We read them to Dylan. Dylan will answer, and then hopefully we've got a little two-sided conversation going on here, whether we agree or disagree with each other. So let's put up the first question for Mr. Ratigan. Yesterday, the Fed cut rates and said they'll likely cut 2 more times. Is this a good or bad thing, Dylan?
Is it a good or a bad thing that the Fed will cut rates 2 more times?
Yes.
Well, Tony and Nick, here's how I'm going to answer that question. If you are a business that benefits from a lower cost of capital, then this would be considered a good thing.
Mm-hmm.
If you are an individual or institution concerned about a slowing rate of growth and heating inflation, then this would be a bad thing. So the answer to the question, my final answer, is this is both a good thing and a bad thing, as it provides lower cost of capital for those that are capital intensive in their operations. Good for them. And this is a bad thing because it further fans the flames, if you will, of inflation, and is an indication of a weakening labor market. So it is both a good thing and a bad thing. I believe that there is not one market in this world, Nick.
Okay, I'm gonna go. I'll go next, and I'll let you clean it up, Nick. I don't know whether it's a good or bad thing. Just like you, and I see both sides of your argument, because that would be a straight down the middle answer. It's neither good nor bad, which means for traders like us, it really means nothing to the overall market. It might change your assumption on bonds a little bit, or it might change your assumption on maybe some Russell stocks versus maybe some technology stocks, but that's too obscure for me. But I will say, to your inflation and everything else like that answer, that part gets me a little bit perplexed, because we did have interest rates at 0 not too long ago, and didn't seem like everybody was okay with that then. So
there was no inflation then.
Yeah.
Well, what's that?
There was no inflation then. There is inflation now.
Yeah.
How do you measure inflation? By oil?
Just by the reports of the data from the Board of Governors of the Federal Reserve of the United States.
You know there's inflation, dude.
Sure.
We were just talking about sandwiches being $20 for a sandwich now, and you being like, "Oh, that's insane." Then what do you think that is? The houses, everything, cars, anything you buy is more expensive now.
Did you call your father bro? Is that allowed?
I guess so. I mean, we're getting more in line age-wise. Like once you get over that.
No, I don't think you can ever call your father bro.
No. Come on. It's more of the same, Dylan. Wars and money printing, the two things that will go on forever.
Next question, please. We're taking a look here at our second question. We've got, with artificial intelligence being what solves for wealth. Will artificial intelligence be what solves for wealth inequality, because we'll no longer need a lot of white collar jobs? Boy, these are doom and gloom questions today.
Yeah, seriously.
Well, this question, there's two issues here. One, I'll just answer the first question. Will artificial intelligence solve for wealth inequality? Maybe eventually it could, I suppose. But I believe the primary impact of artificial intelligence over the next 3 to 5 years will be levels of wealth inequality, the likes of which the world has never seen. I believe that it's going to precipitate a massive consolidation of wealth into an increasingly small group of people, while simultaneously depriving all others of access to basic work. So I would say that wealth inequality, because of the loss of white collar jobs, will be massively increased. And then eventually, as a result of massive social chaos and insanity that shall plague the land, that at that point, some additional change in policy may occur that then forces the quadrillion dollars that's consolidated among 7 individuals at the end of this madness to be reallocated in some other systematic fashion, likely through some form of universal basic income.
and that check is going to be astronomically small relative.
Depending on the level of social chaos, but yes, relative.
Yeah,
obviously.
relative. It'll get you to be able to just.
It'll get you a $20 sandwich once a week.
Yeah, exactly.
Maybe Dylan, we're equal in age, regardless of what our two ages are. Don't you remember other disruptions in life that were going to change our world for the worse forever throughout our lifetime? I don't think this is anything different than anything else. This is going to, of course, take some industries streamlined and using less human help, but it's going to create other jobs. Look at anything from the electric light bulb to crypto coins has created different industries and different businesses. It changes but stays the same. I don't see the doom and gloom that that you see? And I don't know if the market in the next 6 months sees that doom and gloom either, with volatility being so low. Am I too optimistic, Dylan?
No, the market sees the fact that there's going to be $1 quadrillion made, and one way to participate will be in the Mag 7. But that I believe the market is totally detached from the how do I say it, reality.
Nick, give us some sensibility here.
No, I somewhat agree with Dylan. I think I take Dylan's side in this one. But I think the market is
like, unlike you, Nick and I are the same age.
Exactly.
So far, I think Dylan's 2-0 on a panel of 3 arbitrators here.
Yeah. But the market is the way to participate for us normies. The market is the way, and there's a lot of people that aren't participating in the markets, and that's a big problem. And I think that's
we all started out as normies.
Of course.
And now look at us.
Yeah.
Now look at us.
Look at our hair. Even Nick.
Next question, please. If the world continues down a path of isolationism, tariffs, etc., does the US dollar still maintain its value, or do we move to a world of various digital currencies used by specific trading blocks that will form?
1,000% this is not going to happen. The world relies on a single unit of payment for interaction, regardless of marginal isolation or tariffs. To have a balkanized currency market where there's all different currencies for different transactions is perhaps the most damaging thing that could happen. Having a single shekel, a single seashell, a single unit of payment that is used globally for all transactional interactions is the lifeblood of all economic activity, and the dollar will come back stronger than ever.
You're getting a good move in the dollar today, Dylan. You go get a couple more.
Well, if you heard the Ratigan trade is on, short NASDAQ, short gold, long dollar.
That is working well today. I mean, the NASDAQ's up a little bit, but it's off the highs. You got gold taking a big move lower. It's down, $50 today. Almost 100 handles over the last 2 sessions. And then you got the dollar strength. I've been getting long the dollar with you too. So I feel you.
No, they don't call it the Ratigan trade for nothing. Long dollar, short gold, short NASDAQ. Call your friends, call your neighbors.
It used to be the short oil too, and you hit that on the head too.
Listen, I'm like they call me the sheik when it comes to oil, but that's a different. And right now I'm on this long dollar, short gold, short NASDAQ.
And the best thing about your trade too, Dylan, is it's trade once, trade huge. You go full bore. And you hit it, and then you're done.
100% of the portfolio in 3 positions.
I love it.
I'm going to be on the same side as you, Dylan, on this. What a great place it would be, though, if the whole world could come together with one currency, and we'd have no more need for tariffs. We'd have no more dollar. The banks would lose money because you ever try to convert money from one currency to another, it's horrific.
Joke.
What a great play, but we're not going to get off of the dollar. I agree with you 100%.
Yeah.
100%. Next question, please. I think it's the last one. Is the First Amendment safe still? From the perspective of a journalist, do you find yourself in a position where you feel the need of self-censor before speaking? We do have a right in this country to say awful things so long as they don't incite violence. But we're seeing shows canceled and publications sued for things that they say or print. Dylan, take it away. I think I talked a little bit about Jimmy Kimmel here, but go ahead.
I don't feel comfortable talking about this in public.
I agree, Dylan. I agree, man. It doesn't matter what side you're on. The rabidness of both sides to just destroy, kill. It's unbelievable. Where'd the middle go?
So yeah, I think the First Amendment is. I do believe the First Amendment is under assault. And I believe that it was under assault with the woke cancel culture that would prevailed upon us for some time. And I believe it's under assault right now with the conservative cancel culture, which is the current flavor of the day. I see no difference between woke cancel culture, which is an abomination, and conservative cancel culture, which I see as equally abominable. And I believe all of it is a threat to the foundation of the United States of America, which is predicated on the freedom to speak. And what is freedom of speech if it does not protect speech you do not like? The whole point of the amendment, obviously protecting speech that you agree with is easy. The challenge with the First Amendment is, am I willing to defend your right to say something that I don't agree with and I don't like? And I believe that we saw a huge issue with that, with the woke cancel culture, where there was no call for violence from the conservative commentators, but the woke cancelers were up in your beak, jamming on Roseanne Barr, jamming on whoever, all these poor bastards. And now we're seeing conservative cancel culture really running the same racket, as far as I'm concerned, that I think it is an issue.
Yeah, I agree with you. I don't feel comfortable answering this either. I don't know. I think you and Tom enjoyed or didn't mind the woke cancel culture for quite some time.
Excuse me?
Excuse me?
Oh, no, Dylan was on the other side of that.
Excuse me, not excuse you. I didn't enjoy anything. What are you thinking? You're now assigning an emotional preference to me that is baseless and somewhat defamatory. I may have to call my lawyer.
I think Dylan's been pretty moderate. I think Dylan's been pretty in the middle across the board. I mean, we know where Tom, where he
gets his bread buttered.
Yeah.
And we know where Tony bread butters his bread.
Yeah.
Well, I see a lot of truth to skepticism, and you had opportunities to push him back a little bit harder than I think you pushed. That was the point that was.
Okay, you think that I could have offered some more resistance to the big?
Yeah, I could have had a little bit more resistance. I think.
I'll accept that. I think that's a fair critique.
Yeah,
that's what I meant. I apologize if I said anything or meant you feel any.
That's not what you said, but that's okay. It's fine.
Yeah.
But yeah, you are right. The pendulum swung way too far to one side. It's swinging way too far to the other side. Hopefully, this is how we get in the middle as Americans and be optimistic and with each other's choices.
The world is better today than it's ever been before. And I think that we spend so much of our time identifying all of the marginal, edgy, extremist issues that you sort of, because of the Instagram feed or the Facebook feed or the Twitter feed or the TikTok feed, sort of surfaces all of the most unpleasant information constantly because it's the easiest, gets the most attention. It's the easiest to monetize. Like the business model supports the worst information, but just because our screens are populated by the worst information, actually, if you sort of look out the window of your house or your car, or when you walk down the street, I think you'll find that for most people, most of the time, life is better than it has ever been.
Dylan, well said, my friend. I believe you are correct. The social media thing has evolved into something that I don't think anybody really.
It's a distortion field in the negative sense, and obviously, it's not a good thing.
Yep. On just about every subject.
Everything. The tornado's the worst tornado ever. The president's the worst president ever.
Sure.
The car accident's the worst car accident ever. Like, come on.
Yeah. Totally agree. Good job out of you, Dylan. You actually brought the market back a little bit too. I mean, S&P's rallied about 10 handles to 35. NASDAQ up 250. Russell up 32, gaining the strongest of the group here. Dow down 120. The Ratigan trade is fine too, with gold down 40 and the dollar higher. Good job out of you, Mr. Ratigan. Thank you so much. Enjoy your weekend, and I'll talk to you next week. Thank you again for coming on the show.
All right, thanks, guys. Have a great day.
Appreciate your time. We'll take a quick 90-second break and come back. We got more Tasty Live after this with a market measure.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
The future of trading is here.
Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply. When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nicky, we are back, son. You know what that means. Time for a little bit of a market measure sponsored by the CBOE. SIBO. Skewing zero-day iron condors, credits, and directionality.
Well, I thought you were going to give us a market update, 6,700 as foretold.
You called it. Let's say it. I'm a little bit... I thought the market was going to have a little bit more of a down move this morning after... I'm short a couple of handles lower than this right here. They're up to 42. They're up 42.50 right now, up to 67 and change where you said we were going to sit for the rest of the day. Can't believe that might happen. NASDAQ up 270 and change. NASDAQ and Russell both catch a bid. The Russell at its highs up 37 and the Dow up 170. Volatility in by 25 cents. Bonds still weak at 116.21, although they are 9 or 10 ticks off of their lows. Notes doing the same, but a little bit of a smaller move to the downside off of their lows also. Bitcoin even catching a bid almost 118. Every asset is a buy right now. Ethereum up 88.
Everything.
88.
Everything.
Oil up 28 cents. Gold finally selling off a little bit, but it is about $14 off its low. That's a big move to the downside. We haven't seen a 1% move in quite some time in gold. GDX is only down 70 cents. Can't catch a break.
Yeah, I mean, you can't hide. You got the INQ, the quantum stocks are flying around. You got the chip stocks. I mean, this is just all out mad rush to get some deltas here. You got to have them. Got to have them. You can't go home without them. Tomorrow they're
Can't live without them. That's right. That's
Yep.
right. Can't kill them. Can't live without them.
Yep.
Yep. You are correct.
All right. Market measure. You want to do it? Cool. Let's do it. E-mini's up 45 high of the day. Of the open, since the open. All right, so we are continuing our zero-day research here. So in our ongoing zero-day research, we're primarily focused on delta-neutral short premium strategies such as iron butterflies, also just called iron flies, and iron condors, finding good results by rapidly taking profits. So a lot of the studies have shown that 10, 20% kind of being the target for those exits on those trades. So recently we experimented with vertical spreads to allow us to trade on directional assumptions. Thanks to the prevailing bull market and zero-day options, you got to remember, did they start in 2020 or 2021?
Oof, I'm not 100% sure.
It's only been a handful of years. So like this whole, we're not looking back at a long data set here. You got to remember that zero-day options are a relatively new product. The market has basically gone straight up. And so of course, if you adjusted one side, if you just, sold the put spreads, those were pretty easy money for quite some time. However, the absence of call side credit results in more pronounced losses and larger buying power requirements than the two-sided trades. Of course, when you're doing iron condors, you're reducing the amount of capital used to put on the trade because you're also selling that call spread. So there is a benefit there to it. So today we're going to explore the potential of skewed iron condors, aiming to establish short-term deltas while retaining credits from both sides, offering a balanced and potentially more rewarding strategy. So just continuing into our zero-day research. So let's take a look at the second slide here. We'll look
before we get to that second slide, or you can leave it up there, John. It's fine. Don't worry. You can go to the second slide. It's fine. Let people read it while I talk. You got to remember, it wasn't. We didn't start with 0 days right away. Like in 05 or so, we started with weekly expiring. That was kind of like a taste on how the public would like it, and they embraced it and they loved it. And they said, "Why do it weekly? Let's go to like Monday and Wednesdays." They did that in like 2016, and then finally we got to the daily expirations of the indexes like SPX in 2022.
2022, okay, because we had the first was the weeklies, obviously, and then we had Monday, Wednesday, and then we went to the full.
That is correct.
Yeah.
I mean, it was really because the public wanted it. No other reason. I mean, everything that the exchanges do is really geared towards public interest. I'm sorry. Yep.
So the study, we're using 2.5 years of data in 0-day SPX options. They collected the data every 10 minutes. We are considering selling 0-day skewed iron condors at 9 a.m. Chicago time. So this plus or minus 5 minutes from that point. It's 30 minutes after the opening bell. We're looking at a short at-the-money option, so either a put or a call, and then we're looking at a short out-of-the-money option on the other side, and then the buying power controlling the wings an equal distance on each side. So we're doing equal width iron condors here. So the out-of-the-money options, obviously further out of the money. At the money is right at the money. Winners were closed in the first 10 minutes. They were found to have been above 25% of the max profit. Losers were left through expiration, so we're managing at 25% here, and all trades were assumed to exercise at the mid price. This is a big point to make with any back testing, is that everything is done at mid price. So you gotta keep a little grain of salt there.
Mm-hmm.
So let's look at the first slide here. So the first one, we're looking at the short at the money put, and then the short call at the 40 delta. So it's relatively close. You're obviously going to have a little bit of upside room here, just because you're a 40 delta call. We're going to get progressively further out of the money. You can look at it based on the wing width, and you'll see obviously as you get wider, your probabilities are going to get a lot higher. You get to 92% there on the 60-point wings. You also have a much higher average P&L. This is very intuitive. There is more meat on the bone in those trades, so you're naturally going to have a higher profit potential. Of course, you have more notional risk, so these aren't, you're not sizing these all the same. If you're sizing the 10-point wide wings similarly to the 60-point wings, you're going to have more higher number of occurrences of those losing trades relative to your 60-point wings. But you're obviously, the bigger your spreads, the more potential risk you're going to have, and you're obviously going to hit that tail risk every once in a while.
Yeah, and I think that I'd looking at these numbers from the average P&L versus the CVAR here, and obviously the win percentage is high. I mean, 80 to 90%. I think I know 10% is obviously statistically important, but when trading, 3-4 percentage point win ratio over one or the other, 87 to 91 doesn't mean that much. I think your sweet spot is between this 20 and 30 wings, and maybe even towards the 20 wing size, at least for my own risk tolerance. What are you thinking here?
For sure. And I think that, we don't put this in the slides, but when you factor in the amount of time that you're holding these trades, you're 10-point wide, anything you trade 10 points wide, even a 0 day, if you have any experience with the 0 day stuff, you're holding that pretty much the entire day. Like, that's not a trade where you put it on and within an hour or two, you're taking 10 or 20% of the max profit. It usually takes a lot more time there, especially with this setup where you're at the money with the put and then you're at a 40 delta for the call. You're inside the expected move with a $10 wide spread 95% of the time, right?
Sure.
So, that's another factor here, is that a lot of these $10 wings, you probably have to hold for a significant amount of time throughout the day.
Great point.
Yes. So let's check out the next slide here. So we are looking at the short at the money put, and then we're going to a 20 delta call for the short call. Of course, we have the 10, 20, 30, and 60-point wings, the 60-point wing being the synthetically naked position. Again, you kind of see the same story here where, as you get wider, you get higher probabilities. You also have bigger tail risks. I think this one's interesting here in that, there isn't a... I think the main story here is that the 20 delta call is just not meaty enough, really. I mean, you're not getting a whole lot more profit going 20 points wide, 30 points wide, even 60 points wide. And that tail risk is probably mostly on the upside here. And so I think if you're looking at these sort of trades where you're using a further out of the money, the bulk of your trade is the at the money put spread, I think you just do the at the money put spread is kind of what this is saying to me.
In the market environment that we've had, remember, you can only look backwards.
Yes.
You don't know, you can't look forward. That's the amazing thing about back testing. You can only look backwards. But sure, I would agree with you. Knowing what's happened to the market all-time highs, sure, it makes totally good sense.
Yes, of course. That's
why these results are going to be skewed like this with only a couple of years worth of data.
Yes,
in the bull market.
For sure. Good point. Very good point there. 96% win rate though. That's pretty nice.
Yes. And Thursday is kind of we're looking at just today's action. We talk about these 0 days. Thursday's the least optimal trade day for these 0 days, at least that we've found for our trading.
Very good. Next one here. So now we're flipping the script here. We're looking at the money calls and then short the 40 delta puts a little bit further out of the money relative to that at the money call. Again, we're looking at the 10, 20, 30, 60 point wide wings. You can see obviously these win rates are much lower. the last 2.5 years have been mostly up. And so, shouldn't be a shock. It is interesting and intuitively speaking to see the win rate being much higher on those 60-point wings. And that's because you have more of a buffer to the upside. You're collecting much more premium on those trades. But again, you have the higher risk. And so I think all else being equal, it's kind of a hard trade it's hard to look at this and be like, this is the one that I'm going to be leaning towards, even though we are looking at a back test.
Yeah, but it does. This I actually like because you're going with a little further out of the money put, and you're going with an at the money call, which would be the worst thing to do if you knew what the market was going to do, which is make all-time highs. And it still shows that 20, 30-ish area. Obviously, the 20 has a positive, the 30 does not. But it really shows you that that's the area where you're supposed to be here. This is just reiterating to me all of these slides so far that you should have defined risk no matter what your size account you have here.
Yeah.
And you should be looking, I think, somewhere between this 20 and 30 delta wings. I mean, that's what it's reiterating to me.
For sure. Agreed.
I mean, I don't want to cherry pick with that 10 point wing one that made 40 some odd bucks. I don't think you can, you could do that.
Yeah. I mean, that trade 10 points wide with a at the money call and a 40 delta put, it's the same trade as a at the money put and a 40 delta call. I mean, both those $10 wide iron condors are going to be inside the expected move. There's not a huge difference between those two trades. That's why all the numbers are very similar for those. So here, again, we're looking at the short at the money call. We're doing a 20 delta put for the short on the downside here. The wing widths, again, same kind of story here. You can see, obviously that because you're selling much less premium on the put side, these results are as you would expect, they're basically inconclusive. There's not a whole lot to gain from this. The at the money call has clearly been, the wrong trade for 2.5 years.
Yeah, I mean, with the markets being what it is, I can't. You can't make an argument for any other thing. This would be the death trade if you were trying to do this. This would be a short delta trade. It is interesting that the 60 delta wings, a synthetic naked option, was actually positive in this. To me, that seems interesting. I would have thought it would have been negative.
Yeah. Next one, please. Slide 7 here. So we're looking at iron flies here. So it's 10 point wide, 20 point wide, 30, and 60 point wide wings. So the iron fly, you're selling the at the money put, at the money call, and then doing the wings as wide as we indicate here. Obviously, as you go further out of the money, you get more of a synthetic straddle. You're going to have much higher potential pop relative to the tighter wings, which are going to, collect a much higher premium relative to the risk, but are going to be much lower probability here. And you see that playing out. In terms of the profit potential, we are seeing a little bit higher average P&L on those 10 and 20 point wide wings, which is pretty surprising here. Given that I would have expected the wider wings to be more profitable.
Agreed. Not too much to add. Just again, that 2030 seems to be the place to be. Again, the $10 wings too, but again, that's on an iron fly. I think you're way too tight. But 2030 looks like it's right to me.
Yep. Takeaways. Last slide. So if you want to be directional with your zero-day trading, skewed iron condors may offer a better route than vertical spreads. The larger credits give downside risk much closer to the delta neutral trades. SPX upward climb made it hard to profit when selling at-the-money calls. Pretty intuitive there, without at-the-money puts to balance it out. For short at-the-money puts and out-of-the-money calls, the largest profits came to those willing to devote more buying power and push the wings further out, in contrast to delta neutral strategies, which performed well with narrow wings. So I think if you're doing the narrow stuff, you're doing delta neutral. If you're getting wider with more risk, you're doing a little bit more of a skewed. You got to take a little bit of a directional bias to those trades. It may be tempting to try and trade based on assumptions about where the market is going, but unless you are willing to take larger risks along the way. With that assumption, it may be best to simply stay mechanical. Just do the delta neutral trade. That's kind of, if I was going to do one every day, I would just do the delta neutral and not try to pick direction every single day.
Totally agree with you. Let the market beat you, like we always try to say here on Tasty Live, 100%. Even the S&P's up 48 and change, holding steady. It does seem like a sea of green here, with AppLovin now up 21 and change, MSTR up 19, Coin up 14, Reddit up 13, AMAT up 12, Meta up 10, Palantir up 7. These are some big numbers. BMNR, you mentioned that sector just a moment ago, up $5, about $1 off of its highs. On the downside, fewer and far in between, but you do have AMD down 5 and change, Oracle down 3.5. Buy the rumor, sell the news in there. Netflix down 2 and change. Apple, I cannot believe it, down $1.07. I mean, I can believe that Apple is lower, but I can't believe that Apple is down on a day when right now the Nasdaq's up a little over 1% and the market's making new highs. Apple not participating, although it has caught a rally over the last week or so.
You got to sell your Apple so you can FOMO into INQ.
There you go. You heard it.
You know, that's what this market looks like to me. You got Apple down, you got, Amazon basically unchanged. Nvidia has been strong, but it feels like, why hold my Apple shares when I can get 15% on some, open door trade?
That's right. I mean, it's all how you use it.
Yeah, I'll buy the Apple at the end of the day. I'm going to take 15% intraday on the rest.
I'll park my money in Apple.
Yeah.
Right. The safe haven.
Yeah.
No, you're 100% correct. Nvidia up almost $5. Microsoft and AVGO up $1 or $2 a piece, but some of these other stocks having a monster move. Even Goldman Sachs is up $10. Tesla up 3. We haven't mentioned that in a little while. You're right. Amazon basically unchanged. Google up 2.5. It's an all-out buy 'em right now. Let's take a quick 90-second break and come back. We've got my friend and yours. That's right, Mr. Scott Sheridan next. We'll be back in 90 seconds to Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
If you missed the live show, here's our cherry on top weekly recap.
You're making it seem I want to go.
I know you do. Listen, there's a lot of things I want to do too.
I'll be the
time last night. I didn't have it in me. But back in the day, I could do it. I'm older now.
Omaha.
Hold on, what did you want to do last night? I missed that.
Don't repeat that. No.
No, what did you want to do?
Do this every time I'm here.
I just want to know what
every time I'm
what did
here,
he say
we gotta
he
go
wanted
down
to
this
do?
road.
What did he say he wanted to do?
Do you need me? Do you want me to?
Because usually when he wants to do something, he just said, she says, go in the and do. Here you go. Here's the. Get in the. See you later.
Nick is gonna be sick.
The last 3 weeks I've been on this show on Wednesdays, it's gone down this rabbit hole.
Nikki's about to throw up.
What do you want me to do? I got 3 old guys talking about. Like, what do you want me to do?
Nikki's about to throw
The
up.
thought of you guys is like sickening. I'm sitting here like this. Like, oh God. It's hot as hell in here. I'm like sweating. Like, it smells.
It was a great show, very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88. So Vanetta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Tom.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You know, you couldn't get a date.
You get a car, you get a car, you get a Scott Sheridan, you get a Scott Sheridan.
I want the car.
That's right.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bet.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
That was savage.
That was good. That was good.
That was savage. That was savage. But before I get to that conversation, let me know 855-238-2789 or 855-BE-TASTY. That's the phone number to call. So please give us a buzz if you have any questions about trading or anything else like that. We'd love to hear from you. Phone lines open. I got 4 or 5 lines open. But for right now, you're a friend of mine for the Scott Sheridan Studios. Well, it's Mr. Scott Sheridan, the namesake. What's up?
I hope that comment wasn't live. I hope we were still off air when I said that.
Touch and go with John. It's
Touch and go. We had Dylan on today anyway, so we're all trying to not get canceled.
Oh, I'm not
by either
going.
side. We don't want either side to cancel us.
Yeah, I'm not going there, but you set that up and I came right over and spiked it.
That was good. That was really good. That was really good.
Oh, man, it's a sad state that we're in right now, and I'm not talking about the Bears at 0-2. Nikki, Tom did offer to buy my 8.5s for 10 cents on the dollar.
Oof. Yeah, I mean 8.5 is an absolute pipe dream.
But here's the good.
I might take the 10 cents.
I'll let you out for.
We didn't bet. So here's the thing.
Whoa. Me and you didn't bet.
No.
Ooh.
Wait a minute. We did it live on air.
What did we bet?
8.5.
100. Oh, 100. Yeah.
Oh, now you remember?
No.
Would I jar your memory?
No. Because what I'm laughing about is Chucky was giving Tom a hard time after the first game, Sale Lake. So he made a big up there. He made a bet with Bob. He made a bet with all these people. Fortunately, I did it, besides you, apologize, on an app. So the app can't give me slack. Like the app isn't going to come out and say, because I'm a nice guy, I'll let you out for less.
No.
Oof. Now, here's my question.
I'll let you out for 70 right now. I think it's fair.
Yeah,
That's not bad.
I gotta say, I used to work in the debt buying industry, and I wouldn't pay 10 cents for that line.
I wouldn't either.
Yeah, I wouldn't pay. I would. I'm at like 5 cents. I'm in a nickel bid.
Yeah, that's not a bad bid. I'm not hitting it.
I know
but
that's where I'm at.
Well, I'm giving you 30 basically.
I know. It's very nice of you.
That's
so
good.
here's the question. If they go 0-3, which they're going to, because where everybody's, I guess I saw, how football. If you are 1-1, I think you have like a 30% chance since like in the last 30 years, you're 30 or 32% chance of making the playoffs, but 0-2, you're 12%. 0-3, that's got to drop to like 3%.
Scott, making the playoffs is the least of my thoughts. I mean, I'm trying to survive. I'm trying to keep my fanhood here.
Yeah, I don't know if I can. I think my Sundays are now booked. I can't. Like, it's painful.
No, I already told. I had this conversation with Mikey. I'm a Bills fan now. I've given up.
That's smart. I like that, and you know why? I'll tell you why I like that. Because
Tom poo-pooed it, just so you know.
No, I will tell you why I like that you're going with the Bills. Because the Bills disappoint their fans about as much as the Bears do. So at least you're not jumping and saying I'm a Kansas City fan, at 0-2, where what have they been to, like 9 out of the last 10 Super Bowls?
Yeah.
So I like you going with the Bills. We got a lot of Buffalo people in our office.
Yeah,
shouts out to Buffalo. I feel their pain. Wide right, wide left.
I had this conversation with Tom, and I said, the Bills, like, they're not the sexiest team. There's no Patrick Mahomes. There's no Kelsey. There's no Taylor Swift. They're just like a hard-nosed team that fights, and they're authentic and they're lovable. They got a great fan base. It's a city that doesn't have anything besides the Bills. They live for it. People they jump through.
Why don't you go rogue, son? Why don't you go rogue and just stick the dagger right in my heart? And again, I faded the, but I'm a Bears fan. And why don't you just go Packer fan?
No. I won't do that. But I will say that after I said all that to Tom, he said, "Are you kidding me? Bills fans are the dumbest people I've ever met." And I said, "Okay, thanks, Tom." Thanks.
He doesn't mind being canceled.
He was like, "That's the worst team ever. They stink. I hate the Bills."
Nikki, he means that only in the nicest of ways. Now, moving on to the Cubs. Help you to understand this. I thought wild card was 1 game. Wild card's 3, and they're all, if I saw this correctly, they're all in Chicago.
I think with the wild card you win home field. Yeah.
Right. Yet I thought it was 1 game you had home field. So the Cubs, I think they're playing San Diego, but I don't think that's probably the chalk the lead right now. But all 3 games, if they need 3, will be in Chicago, which is pretty cool. I mean, not if you're the other team. And then it would be great because if the Cubs happen to win that, then they go up against Milwaukee. There we go. Still got baseball because we're not going to have hockey, we're not going to have basketball, and we definitely don't have football.
Yeah, hockey looks a little weak too. I'm not going to lie.
Oof. And this is the time of the year. If you like sports, which I think most people do, there's no better the time of the year than right now.
Yeah.
Baseball's come to the end. Everything else is beginning, and our seasons are over already. I know.
Yeah. It's about to be winter. I mean, you don't have to worry about that. You'll retreat to Arizona. I mean,
if you come out, I owe you a round of golf here.
Okay.
If you come out to Arizona, I got you. I'll take you out.
Okay. Well, my mom lives there. So if these are veiled invites, if these are you be careful. You be careful.
Do not
get it in writing because of the same way he forgot about my bet with him and the Bears, which was a couple weeks ago.
I don't say things that I don't mean. You are welcome anytime. You just tell me.
Thank you, Scott.
How's that? And Tony, if you want to come out, you're welcome too. See?
Yeah, Dad, you could stay with my mom.
I can, but I wouldn't be able to go to sleep. Because I have 2 eyes open.
Both, but not even 1 eye open. Both eyes open.
2 eyes open. 2 eyes open.
Yeah.
2 eyes open. Right.
Brutal.
Should we get to
your list, my friend? 855-238-2789 or 855-BE-TASTY. We'll go to your phone calls. I have 4 or 5 lines open. I do see a Fremont, California on the line. We got a couple of lines open. Love to hear from you. We'll also go to the chat. But for right now, Give me your list, Mr. Sheridan.
All right. Top 20 symbols going through the system. First 40 minutes a day, no broad-based indices or futures, just in case Tom has Wi-Fi in the plane and is watching. Number 20 for Tom, Goog with an L at a 25. For everybody else, Intel at a 36, Tesla at a 21, PLTR at a 17, AMD at an 18, NVIDIA at a 4, Hood at a 10, Meta at an 8, Oracle at a 68, MSTR at a 10, IBIT at a 16, GLD at a 22, MU at a 47, CRWD at an 18, Apple at a 12, Amazon at a 9, TLT at a 6, Open at a 44, ETHA at a 52, TQQQ at a 17, and number 20 for Tom, Google with an L at a 25.
Good job out of you, Mr. Sheridan. Good job out of you too, Nick. You Can Sleep with My Mom is now trending on Twitter.
No, I didn't say sleep with her. You could stay at my mom.
He did. In fairness, I
said you could stay.
Oh, I heard.
And then I said we got 2 rooms. We got 2 extra rooms.
Your mind just tends to wander.
Yeah.
So it goes down the path. Now you're heading to New York. Do we have the food planned? Are you going to Katz's?
I'm gonna go see my mom.
Oh, that's right. You are going to see your mom. Shouts out to your mom.
So I don't have any food. I won't have time for food and things.
It's more important.
I'll be grabbing a slice on the road somewhere, that kind of thing. That'll be my.
Is she by LMB?
Pomoni Gardens.
She's not near there. She's by the Brooklyn Queens border. Matter of fact, the cemetery runs right through it.
Was that her choosing, or did you just find the cheapest plot?
Her father actually bought that plot. Her father is there, so and there's room for one more. Nick, I'm not going to take it, so maybe in this economy.
Yeah,
I don't see Nick.
Thank you
Nick as a Brooklyn Queens.
Yeah, I'm not planning on going anywhere anytime soon. But thank you, Dad.
All right, safe travels. Enjoy the show. I know New York's always a good one.
Yes.
Enjoy it. All right.
Thank you, my friend. Appreciate it. Appreciate everybody who's called in. Got a couple lines more open. Give us a buzz. We're gonna go to Fremont, California. Got Pravin.
Hey, hi, it's Praveen.
Praveen, thank you, sir.
Good morning.
Yeah, it's Praveen. All right. Hey, thanks for taking my call. I have been trading for about a couple of months now. So pretty new to this, trying to get used to the tasty mechanics. I have a question, and I've been through a bunch of your studies and market measures, and I see this term usually come up like manage at 21 days. And I thought I understood what that is, but I've seen that some of my trades, I usually trade iron condors, about $10 wide, $5 to $10 wide on each side. And sometimes I see that one of the sides gets challenged pretty early, right? Even before the 21 days happen. So, I want to understand what's the strategy I can use there? Should I roll it out to the next expiration or something else? And also, like at 21 days, if I don't hit a profit target, let's say I'm at a loss or a very small profit, maybe a couple of percent, 1 or 2%. In that case, how do I manage it 21 days? Do I roll it out and, have my capital locked in for a while longer, or should I close it and try to deploy my capital somewhere else? So, yeah, those were my questions.
Good questions. I think I got them all. I'll do my best to answer them, and Nick can clean it up for me. October has 29 days to go right now. So let's just assume that one of your iron condors is being breached right now. Now, by breached, I mean your call side, since we're at all-time highs, is getting too close to at the money. Now, we don't wait for the product to get through that strike or in that strike. You put this iron condor on, let's consider it delta neutral. You have basically no delta, 1 or 2 short deltas per contract. When that delta gets to about 10 to 15 deltas, I roll up the untested side, so I would be moving the put higher to the money. Now, here's where it gets a little bit dicey. I like to roll just the short strike. So if I had on the stock is 100, I had the 110, 120, and I had on the 80-90, for argument's sake, put spread, I would take that short 90 put and roll it up to the 95 or the 100 using more buying power. If I roll it up $5, I'm going to be using about $4 in buying power, $400 more in buying power. If I roll it up 2 strikes, I'd be using almost $1,000 more in buying power. But I'd be able to get a lot more delta on my trade and mitigate some of those upside losses, taking more risk to the downside. Mechanically at Tasty Trade, we talk about taking that put spread, that 90-80 put spread, and rolling the whole put spread up to maybe like the 190 or the 105-95. Always rolling the untested side is the key, leaving the call spread or the tested side alone. That's what we would do. I like to roll them when they're about 10 to 15 deltas in one direction. Nikki, I'll let you clean it up.
Yeah, I think you know when you're doing 5 or 10 point wide iron condors, let's assume it's in like SPY or the Qs or whatever similar type product. You know, you're defining the risk on entry and you're hedging on entry, and so you know there's a lot less management available to you just because you're trading spreads. When you're trading naked options, you can roll out, you can adjust the strikes, you can go inverted, you can do all these sort of things. You know, you're kind of when you're doing the iron condor, your hedge is in on entry. And so, you know, for me, I like to, with a 5 or 10 point wide spread, if I'm tested on one side and that other side has lost most of its value, I might even consider just closing out of that side and managing the untested side, closing that and realizing that value and leaning a little bit more directional into that up move. I mean, when you sell a strangle or you sell an iron condor, you're kind of saying, okay, I'm going to get a little bit of short delta price wise at this price and a little bit long delta in price wise at a lower price. And so I try to lean into it a little bit. That's another, you know, management you can do is just close out of the risk, cheap risk that has come in, the side that, you know, is further out of the money.
Give your answer, my friend.
That makes a lot of sense. Yes, that makes a lot of sense. Thanks for all the good work, guys. Thank you very much for taking this call.
Thank you very much. Appreciate it. And thank you for calling in. Only trading for a couple of weeks and calling in. Sometimes it could be a scary thing. So I appreciate you calling in.
Yeah.
Going to go to Andrew in California. Andrew, what's up?
How's it going, guys?
Good, Andrew. How are you?
Good.
I'm good. Question about position sizing. This market's boring. It's slow. Running out of opportunities. I know it's probably not the right thing to do, but I'm curious. Because I don't have as many positions on, in order to keep my buying power usage up a little bit, I mean, I'm struggling to stay above 20%. Should I be increasing my position sizing on some of these positions that I am able to open up?
Nikki, you want to take it? You want me to go?
You know, it's we always talk about it on the show, Mike and I. It's like you don't know how much you miss volatility until it's gone. And you know, April seems like it was like the scariest thing ever, and everybody's freaking out. But that was a pleasure to trade through those couple months. Now you sit here looking back, yeah, and you're like, you know, everybody's like, when's it gonna end? When's it gonna be over? And then when it's over, everybody's, you know, it stinks because now you're in this situation. I think everybody that trades in any way, whether it's short premium, long premium, whatever, is kind of bored right now, and it's hard to find opportunities. I would say, you know, I think you got to be more selective with your trade selection. I don't want to go crazy with upping the amount of risk that you're putting on in every single trade because things can switch and volatility comes quickly, and you got to keep some powder dry. But I agree with you. You know, maybe you're getting a little bit more directional. Maybe instead of doing, you know, naked puts in SPY, you're trading, you know, just a long futures contract. And getting a little bit more leverage there. I would be. Do you feel the same way?
Yeah, slippery slope with the.
You can't change it. You can't go crazy.
I agree. You can't go crazy. I'm gonna answer a little bit more definitive. I'm gonna say no. It's not the time to ramp up your size of your positions. It might be the time to ramp up the different strategies that you use. I know they're boring in nature. The calendar, make it a diagonal. Then it'll have a lot more risk for you. You can go a lot wider that way. More defined risk trades. I think the way that Nick said just a moment ago before he got off on that tangent of futures. Futures are just too big. In my opinion, I know you can trade the smaller futures now. You've got the micros as opposed to the minis. I would be open.
I meant from a delta perspective. Like instead of selling a 10 lot of short puts, you're long one future.
Oh,
like where it's static delta.
Okay, all right. You're my son. I mean, I'm gonna always protect you. I mean, no matter how rogue you go. Volatility is too low to ramp it up. I would say ramp up your strategy selection. That would be my answer to you, not the contract size.
Okay, one other quick question about position sizing. I know that, I mean, I'm trading in a $100,000 account, and I know, like Thomas said, like 5% on undefined risk trades of net lick. That makes sense for something, if you're trading in, Google, a one lot is, 2.5% or something like that on a strangle. But it's something like HIMS where it's $500 in buying power. Like, do you up your contract size in HIMS just because it's less of your net lick? Or when should I'm mostly trading one lots. I'm just I guess maybe confused on when the right time is to increase to 2 or more contracts.
Well, I'm going to answer it this way for you. Then Nick can change it. Just to give an example, like Google has a monthly implied volatility, in the 30 handle, and HIMS, since you mentioned it, could be closer to 100, 80 to 100. Now HIMS is going to have a much larger move. So the options are going to be a lot larger priced. So if you wanted to go closer to the money and stick with the one contract in HIMS with the same IV rank, HIMS has a 27, Google has about 25. I wouldn't have a problem with that. That's how I would be taking more risk by going closer to the money. I would not be increasing my size 5-fold or 4-fold to make the buying power the same in a Google versus a HIMS or anything else like that. So again, when I say strategy selection, you can still do the same strategy, let's call it a strangle, but instead of going to the 15 or 20 deltas in HIMS, you're going to the 25 or 30 deltas in HIMS. I would have no problem with that. I would definitely have a problem doing 4 or 5 contracts. Would I have a problem going from 1 to 2? Well, 1 to 2 is your biggest jump percentage-wise, because 2 to 3 is much less on a percentage basis than 1 to 2. So I don't think in this market environment with low implied volatility, making the biggest jump you can on a percentage basis from 1 to 2 is the prudent thing to do. Nick?
I agree. And volatility tells the story for you. HIMS has 3-4x the implied volatility. If you 3 or 4x the number of contracts, it's a multiple. And so, the margin relief on HIMS is great for a trade, but you have to realize that the risk is it's not lesser risk because the buying power is lesser.
Right.
The risk is there. It's the same risk as the Google position.
Thanks, guys. Appreciate it.
You got it, man. Good questions. We'll take one more. We'll go to Dallas, Texas. I got Whit in Dallas. What's up?
Hey, you boys. Good morning.
Good morning.
How's it going?
Hey, I'm being tested, and I'm in a Z contract, the E-mini S&Ps, and the expiration's on the 23rd. I did a zebra. I did a 1 to 2 on the put side because I was am a little bearish.
Mm-hmm.
Okay.
I want to cut the. I want to get rid of my one of my puts. I want to get rid of the protection. I sold a put and then bought 2.
Okay.
I want to buy that put back.
Yeah.
I'm only maybe 15% away from full protection. But with the weekend coming up, I don't want to learn something the hard way. But I'm almost at a full loss on the whole thing anyway. I want to get rid of the drag because I still think it's going to come back by the 23rd to the direction that I want. What do you guys think of that? What am I missing?
Nikki, were you able to follow along?
Yeah. So a zebra, you're buying 2 at 2 puts that are in the money. Let's call it 70 delta. You're selling 1 that's at the money, and it's synthetically a long. It's a long stock position. This is in futures, obviously. So you're long, or you're short of futures. I'm sorry, it's a short futures.
Because he did on the put side.
Did it on the put side.
Yeah.
Now the market ripped higher. Your short put is basically worthless. You're asking if you should just buy it back. I have no problem with it. I mean, the position was defined risk on entry, so you have that little bit of a buffer because the market rips up 200, 300, 400 more points. You can only lose what your debit was on the trade. And so you're saying, I don't want to miss out on the big move, back to where we were. And I'm totally fine with it. It goes to the same point we made with the person trading iron condors. It's like, your hedge has come in as much as it's going to come in. 80, 90% is what you said?
Yeah.
Your risk is whatever you're buying that put for is added risk on the trade. And considering the position, I'm sure it's a small add of risk. And then you're just long on the puts.
Yeah. The remainder of that put will just get added on to what I was originally going to step up to take a loss on.
That's right.
Yeah.
Yep. You got it.
All right.
Yeah.
Cool.
All right, my
thank
friend.
you, boys. We'll see you tomorrow, and keep up the good hard work. Well, I appreciate it.
Awesome.
Thanks,
Thank you.
Whit.
Thank you so very much for your time. Really do appreciate it. Nikki, we're going to take a quick 90-second break here. We've got a rising star for you next. You're not going to want to miss that. But even the S&Ps are up 40 handles here. Volatility ticking up ever so slightly here. It's actually up to, I think that has more to do with the weekend than anything else. But we'll see how the market behaves with NASDAQ up 200 and change. Russell up 32, the Dow up 134. We got more Tasty Live after this with Rising Star next. Nikki, thank you so much for your time. Who are you going to do the show with this afternoon? Is it you and Mikey? Because I'll be traveling.
Me and Mikey for the last call. The boys taking over.
And this is our last call for Webster Hall. If you want to come to New York, February 19th, hey, that happens to be tomorrow. We would love to see you. The doors open at 8. Please sign up at tastylive.com/events. Reserve your ticket. If it shows that it's on a wait list, just put your name down. We'll contact you. I'll put the chairs down myself if I have to. Show starts at 9. You'll be home or at work back by 11. Love to have you. We'll be back in 90 seconds with more Tasty Live after this. Peace.
Hello, everybody. We're back. I'm Tom Sosnoff, and we're here for another Rising Star episode of Shoot. Dennis, welcome.
Thank you. Nice to be here.
Great to have you here. I think you and I have crossed paths many times over the last handful of years at different live tasty events, and it's great to see you because I never know how anybody does. I think you said to me once. You're surprised how many people come to the live events, but it's good to see because then you realize you're not alone.
Yes, exactly. Yeah. I was curious because when I came to that event, I thought it was just going to be a sizable number of people, but the whole place was full. I had to go upstairs to the mezzanine.
Oh, yeah. We first started a long time ago, 25 years ago. We would have events in our conference room, which was like about a third of the size of this room where we're doing right now. Yeah. And we'd put people around the conference table and like 6 or 8 people would show up. So they would come a long way in that sense. The first live show I ever did was at a university here in Chicago, a small college. Mm-hmm. And we did it in one of the classrooms and there was about 12 people. And I think we all thought we were nuts.
How long ago was that?
25 years, 24 years. Yeah. So just to give everybody a little background, so this Rising Star segment is really designed to give you some insight into retail investors, do-it-yourself investors that have along the way discovered self-directed finance, that have discovered derivatives, strategic investing, and people that do it, in conjunction with or to complement everything else that you do.
Exactly.
So on your bio, it says that you own your own business. You're a mortgage broker, and you work with your wife and I don't know how many other people. And you and I, we were talking about mortgage rates before and things like that. But how much time do you have to actually trade?
I do it right in the morning because I have to create time. I gotta create time. I think this options trading has created an opportunity for me to determine my future. And I have to put as much time as I put in my mortgage brokerage business into this because I think it's an avenue for me to eventually sail into the sunset as an options trader.
I love it. I saw there was a line I read in your bio that you wrote up for us. You said you watched almost every market measure for the past decade.
Yes, yes, and I still do.
And you still do. So to give a little background, I think you said and I want to make sure I get this right, but I think you said you started trading stocks or traded your first kind of stock trade about 2015.
Yes.
About 9 years ago.
Yes, 9 years ago, yeah.
And you told me when you went to university, you were a finance major, but you also didn't really believe in stocks.
I did not believe in stocks, yeah, because this was around the time when the stock market had just crashed, 2008, September.
Yeah.
And the professor wanted to find out what we thought about it. And I took a stance that everybody in the class just looked at me wondering, what's wrong with this guy? What is he doing in this class? Because I stood up and said, don't believe in stocks. I'll never own some. I'll never own any. And it's a scam.
It's a scam. Yeah. My dad used to think that way. But other than that, I think, but then you start thinking about it and you're like, okay, well, because in 2008, they scared the children. It was kind of it was a pretty long bear market, about almost 500 days, and it was ugly. The economic meltdown was nasty. Yes. And I guess if you were in school at that time and you're looking at it, you're trying to kind of think about it in a macro sense, it probably was pretty scary.
Yes.
So do you remember your first stock trade?
I remember my first stock trade. It wasn't the smartest because I paid $9.99 to buy, I think, 2 shares. So my cost basis went up.
Oh, you paid $9.95 in commissions.
Commission to buy 2 shares.
To buy 2 shares of stock.
Yeah, to buy 2 shares of stock. Yeah.
2 shares of what?
I was some really cheap stock, so my cost base is really skyrocketed.
So you couldn't have broken even if you wanted to.
I could not have broken even. Yeah.
I forgot about the $9.95 commissions. Yeah. For 2 shares.
2 shares. Yeah.
Okay. Well, in that case, it kind of is a scam.
It was a scam.
Yeah. Because not much you can do there.
Yeah.
But so take me through the process. So first start off with 2 shares.
Yes. So I started off with 2 shares, and then a friend of mine told me, you can't do this. You gotta spread your $9.95 over several shares. So you could bring your cost basis down.
Okay.
And then I met a friend. Actually, a friend of mine was showing his trades on Facebook.
Okay.
And they were weird. Like, they didn't look like stock trades. And then at that point, he told me that he was actually trading options.
Got it.
So I
probably said, what the hell is an option?
Yeah. So I started learning about the strike price, the expiry date, all these different metrics that come with trading derivatives. And then I segued into trading options, but I was taking the long side.
Yeah, sure.
Buying calls,
that's okay.
Buying puts, and losing a lot of money.
Okay.
Yeah.
All right. That's fair.
Yeah.
But you were learning.
I was learning. I was taking L's for lessons.
And a big part of what I always talk about with trading, and especially, any kind of strategic investing is, you have to, there's a saying in Chicago, because this is kind of a blues city.
Yeah.
you got to suffer if you want to sing the blues.
Yeah.
And I think that that's the case here. You got to suffer if you want to sing the blues a little bit.
Yeah.
So, so I'm going to fast forward to you started trading options. I learned in around 2017.
Yes.
Okay. And like you said, you started buying calls and buying puts, but you're learning about making decisions. You're learning about leverage.
Yes.
You're learning about derivatives, but you're not making any money.
Not making any money.
So why'd you stay with it?
Actually, I took a pause. So I took a pause so I could focus on my business at the time as a mortgage specialist before I went into becoming a mortgage broker. So I took a break from options, and then I met a friend who told me, hey, these two guys who banter and go at each other and they talk about options and they're doing it differently. So I watched one of your shows.
Oh God.
You know? And then that's when I realized, wait, you could actually take the other side of the trade. And that's when the Tasty Trade Way started in September 2022.
Got it.
Yeah.
Got it. So there's a little bit of a 5-year period in there where, you're figuring things out. And listen.
Actually, during that 5-year period, I was holding mostly Canadian bank stocks.
Yeah.
I was selling covered calls against them.
So selling covered calls, buying bank stocks, selling covered calls, which was probably a good trade.
Yeah.
It worked out. You're learning about market structure. You're learning about taking risk. You're reducing your basis.
Yes.
Okay. So all the above. And then in 2022, you start watching Tasty.
Started watching Tasty, and then I got into this rabbit hole, and all those market.
It's like TikTok.
Exactly. All those market measures that you and Tony did from way back, I just started absorbing all of them.
Okay.
Yeah. And then I became intent on learning this and making something good out of it.
So when you started trading like Tasty style 2022, let's say, and do you mind saying how old you are?
I am 36.
36?
Yes.
Okay.
Yeah.
So in 2022, you were 34?
34, yeah.
Okay. How big was your account size?
It was about 60 grand.
Because people always write into us after we do Rising Stars and say, well, was he trading with $2,000 or $5,000 or $200,000 or whatever? So it gives some context.
Yeah, it gives you context, yeah.
Did your wife think you were crazy?
She thought I was crazy, but then she did believe in me. I had a track record of going into crazy things and pulling out okay.
Like what?
Going into the mortgage business was it's 100% commission. So going from a salary to 100% commission, that was a crazy jump.
Okay, that is kind of crazy.
That was crazy, yeah. And
you're just betting on yourself. It's okay.
Betting on myself.
Yeah,
exactly.
Yeah, that's okay.
Exactly. Yeah. So she thought I was crazy, but she believed in me, and she just let me be.
Okay. So how'd you do in 2022?
So 2022 was a short stint. I only had, I think, a couple of months, and I was still learning. So I wasn't doing too well. I think it's not until May 2023 that things kind of clicked. That's when I realized, okay, you just have to do as many trades as you can, let the law of averages or the numbers work for you, and eventually something is going to come out of it. So I went down, and then it picked up, and then once it picked up, there was no stopping after that.
So 2023 was really your breakout year.
Yes.
Yeah, and you did it. Your return on investment was 100%.
Yes.
So you doubled your money.
Yes.
So then you got to think like, now you're cocky because now you're thinking like, I got this thing down. You're like, I'm unstoppable, right?
Exactly.
If I double my money every year, I go 60, 120, 240, 580, and then I'm up to $1 million in 4 years. And I got this, right? Yeah, piece of cake.
Yeah.
I have to warn you that that's not exactly the way this works, but
and it didn't work that way.
There's always a rude awakening.
Yeah.
How many trades do you think you made in 2023?
I used to do at least 5 trades a day.
5 trades a day is pretty close to, let's call it on average, that averages out to about between 13 and 1,500 trades a year.
Yeah.
And, that's a significant amount. It's more than the average Tasty trader. It's a little bit, it's a little less than stuff that we do, but whatever. I'm sure you didn't think before that you're going to be making, when you paid $9.95 to trade 2 shares of stock in 2015, you didn't say, wow, in 7 years from now I'm going to be trading 1,500 times.
No, did not. No.
I think one of the most valuable takeaways from, and one of the most empowering things about making 1,500 trades is that you all of a sudden, you feel like, you don't feel like the markets own you anymore. Yes. Like you feel like you're responsible for your own outcome.
Yes.
Right? It's not like you don't blame,
No, you
not
don't.
blaming anybody else, or there's no manipulation. It's not rigged.
Yeah.
This is just, either, sometimes stocks win. Hopefully I win.
Yeah.
But at least at that point, you start to recognize this is what market structure is all about. This is what,
It's
this
all
is kind of
self-determination.
Yeah. I'm a big freak about controlling what you can control, which is obviously order entry.
Yeah.
How much time do you spend with managing the positions that you have on?
If it's a defined risk position, I usually don't spend much time managing it. If it's a naked position, then I'll manage it. The time that I spend.
How much of your positions are defined risk versus naked?
I would say 50-50.
50-50.
50-50.
Okay. Before we get into specific strategies and stuff like this, have you been very mechanical about managing early?
Yes.
Yeah.
So I manage at 21 days. I try not to get tested.
Yeah.
I'll move my wings. I'll move my strikes away if I notice that I'm getting tested. I will roll. I do roll. I realize that when you roll, you actually take a loss. But then in most times when I rolled, I've recovered what I lost essentially in the initial closing.
Do you prefer any specific sector or indexes, ETF sectors, or do you basically just rely on volatility?
I rely solely on volatility.
It's good.
Yeah.
I'd like to hear
mean reverting. Yeah.
So you're indifferent.
I'm indifferent. I could care less what the stock does.
Yeah. I like that. Good. I feel like you're following the mechanics way better than most of our other, rising stars. So
it's a market measures.
I love that.
Yeah.
So after 2023, 2024 has been a little. Whenever you go straight up, it's a little more difficult.
Yeah.
And 2024 has been kind of a straight up move. So this year you're up money, but just less.
Yes. I'm up in 2024. It was a huge lesson when that crazy Monday morning happened
on August 5th.
On August 5th, it was a huge lesson for me. I realized that I've been overextending myself.
Mm-hmm.
I didn't have any dry powder on the side to use, and I ended up in a couple margin calls.
Okay.
So I had to write up a trading plan. I purposely actually sat down and I wrote a trading plan that had 3 key metrics. So 50% buying power unused.
That's
at
good.
any given time.
Yeah.
50% cash.
Okay.
At any given time, and then the only thing is I don't trade as often as I would want to, even though I could see the buying power is there, but I'm trying not to use it. Yeah, but there's more capital that I'll be putting in the account that's going to help.
Good. I mean, listen, every once in a while, you need an event that scares you straight.
That did.
And that was, when you think about that in historical context, I know it was one of the top 10 moves of whatever the last 2 decades, but the reality is it wasn't very, it was very short-lived.
Yes.
I mean, it was literally one day. The next day we exploded.
Yeah.
So it wasn't like something that had a lot of follow through, and that it could have been a lot worse. This is, I guess, my point. When we talk about specific strategies, is there certain strategies you like more than others?
Yes. So I love the broken wing butterfly. Yeah.
You don't care which side?
I don't care which side. Yeah, I'll do it on the call side. I'll do it on the put side.
Yeah.
So that's one of them. And then I love strangles.
Mm-hmm.
I love doing short strangles. I'll do spreads on both sides, on the call side.
You mean like short verticals?
Short vertical spreads, yeah.
Do you sell a lot of naked puts?
Yes, I love selling naked puts. That's how I started, actually. That was the first market manager that I watched.
Selling naked puts?
Selling naked puts. It works. It's tried, true, and tested.
Yeah.
Yeah.
And you probably don't do a lot of covered calls anymore, but,
No,
I'm guessing, because it's just too capital intensive.
Exactly. And I also find that my covered calls don't do too well.
It's just not efficient.
Yeah.
I shouldn't say efficient. It's just not. It's too capital inefficient.
Yeah.
Yeah, I completely agree. As you kind of look into the future right now, you're going to be, you're trapped. You're going to be doing this for the rest of your life.
I know.
Yeah.
Look what you did to me, Tom.
I know. You're not getting away. You can't get away. because you're always going to think, because there is always going to be opportunity.
Yeah.
There's always going to be risks. There's always going to be opportunity. How do you think about this, like with all the other risks that you have running your own business? Because as an independent, mortgage broker, I mean, you have to go get your own customers. You have to make deals. You have to refinance places. You have to, the real estate market has to stay busy.
Yeah.
You have a lot of risk in that business.
Yeah. Exactly.
Yeah. And so how do you think about this, like, kind of big picture?
Yeah, the interesting thing is I love what I do. So I love both aspects of what I do, being like helping clients find financing to buy homes, and I also love trading options. So it's a nice balance between the two, but eventually I'm hoping that when I'm on an island somewhere, I could still trade options and not have to worry about picking up the phone to deal with to do real estate deals. So this is like my sail to the sunset type of plan. No.
I like the optimism there. I don't think you're ever. I always used to say the same thing, but I'm going to be here till I die, so it doesn't matter.
Yeah.
But what I was thinking about in your business is that one of the things that I like to trade a lot of is bonds, and I would think that most people that are in like the banking business and mortgage businesses and anything to do with like large financial services really don't understand some of the intricacies and nuanced know-how of how bond market really works.
Yeah.
And I would have to think that your ability to trade derivatives on like bond futures, bond options, notes, any ETFs like TLT and all that kind of stuff, really gives you a very different, unique perspective that will allow you to articulate like some of the interest rate risk very differently than some other mortgage broker. I would think that's a huge advantage.
You're very right. And I check the bond yield every morning. I monitor it every day. I see what the TLT is doing.
Yeah.
And anytime there's an announcement, I always rush to see how the bond market is reacting.
Does that help in your conversations with customers that you can actually explain?
It definitely does. And I'll give you an example. So you have clients who try to get the lowest rate possible.
Sure.
And most financial institutions will give you a lower rate if the bond yield has dropped.
Sure.
So I have to explain to the client, at this point, we're not getting a lower rate because look at how the bond market is doing.
Yeah.
Yeah.
I was once doing we were buying a building for work, and we were negotiating with the bank, and I remember I had traded bonds all morning, and I'm in there talking to the person who was handling the mortgage side for commercial lending, and they were trying to explain to me how interest rates work, and I'm like, I'm pretty sure you've never traded a bond in your entire life.
Yeah.
And I think I traded like 200 of them this morning. Yeah. Okay. I go, don't explain it to me. I know this works. And they're like, okay, well, most people don't understand it. I go, I understand this. Okay. Just give me the numbers. Okay. You don't have to try to explain this to me because how you're explaining it is not how this works. And I would just have to think that like for you, it's got to make you seem like you're just another level above. And being able to explain, how markets are actually efficient in that regard, and they basically move. I mean, mortgage rates move tick for tick with.
They do.
Yeah. There's nothing else to it.
By the second, yeah.
It's not rocket science. I mean, they move literally tick for tick. Yeah. So, not that I want you to start hedging interest rates, and offer that as part of your plan, here's a $500,000 house. We're gonna hedge your interest rate risk. Don't do that. No. You'll drive people crazy. So what's the game plan going forward in 2024? Like, how do you get better now? And like, what about 2025? Like what's the?
I think my game plan is to get as many people as possible into this, because this is the way out. And I've been what's considered a lonely options trader for the longest time, because you have your wins, you have no one to share it with, you've got your losses, you've got no one to.
You're here.
I can cry about all my losses today before I leave, So my game plan is to get as many people as possible into this, hopefully eventually get my kids trading options as well.
How old's your oldest?
My oldest is 8.
Boy or girl?
Yeah, it's a girl.
Nice.
Yeah.
You have hope with the girl. With boys, you have no hope at 8.
Oh, yeah.
Girls, you have a chance.
And I mean, tastylive is always playing on my TV the whole day.
They probably think you're crazy.
They think I'm crazy. Yeah.
Dad, this is the worst. Dad, this is the worst show ever. Can you put something good on? Yeah. I can imagine. I can imagine. So ultimately, building communities is obviously tough of other traders and things like that. But I do see more widespread adoption. Do you see that?
Slowly by slowly. The ones who discover it, they take it and they fly with it. Yeah. And then hopefully they become really big fans and they'll get full into it. Yeah. I have a friend of mine who got into it less than 6 months ago, and he's reading charts, and his name is Sam. He's crazy about options. He lives, breathes, like everything he does is just options trading.
That's great.
Yeah.
That's great.
Yeah. So the adoption is there, and it's eventually, we hope the finance space takes on this other side where you just self-determine your, active investing is what I'm.
Like I said before, it's really important in life to control whatever you know. The more stuff you can control about your own decisions is the best thing that can happen to you.
Exactly. Yeah. And this options trading has helped me with my decision making as well, because you have to make decisions quick.
It has to help. It can only make the way you process everything in your brain so much faster.
Yeah.
It's got to be a huge win for you.
Yeah.
Dennis, thanks so much. This was great.
Thank you. Thanks for having me.
Dennis is our rising star. I'm Tom Sosnoff, and I hope you enjoyed this. Thanks so much.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
And then I vociferously stood up for you.
Of course you did. You stood up because that was the smart move.
I appreciate you. You're
yeah.
Saturday morning, I look at my phone and it says Venmo $20.
I almost had to pay him $40 because there was a little stipulation. If we didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was beautiful.
On
It was beautiful.
Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain, and I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, filled everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. I said we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch.
He's hurt on this one.
Muskies. Some bass.
Very quiet. I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. When we got there, it was...
Now the RV on rvtrader.com.
No. Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens And then he's still doing this.
No, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this.
To me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay, I need help understanding. This is the largest monitor that I've ever seen. Like, I have to move back in order to see everything. And somehow when you're on air, you're like looking at this, you need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
Hi, everybody. We're back. It's another Rising Star show today, and I'm excited. Michael, in the house. Thanks so much for coming out.
Tom, appreciate it. Thanks for having me in the new studios. They're awesome.
Oh, great. Well, you haven't been out here before.
No.
But as we were just talking, I remember that we met, I don't remember how many years ago it was, but it was before the pandemic.
Oh, yeah. Probably eight or 9 years ago.
Probably 8 or 9 years
I just actually think. I don't remember.
Wow. I had thrown a pop-up dinner in Washington, D.C. I was giving a speech at CIA, and I threw a pop-up dinner that night, and you were one of the ones that won the invite to dinner.
Got the email.
I didn't even realize it until like 3 seconds ago.
Yeah, sitting there.
So that's awesome. Well, thank you for coming in.
Yeah.
And
looking forward to it.
Looking forward to hearing your story. Now, what struck me is when you first came in, you said that you were teaching at Georgetown, and I was like, okay. I remember having somebody at dinner that I was talking to that was teaching a class at Georgetown, and so I can't believe it's
one and the same.
So you started watching Tasty in 2012.
Yeah.
So it's been a 12-year relationship.
We're
like family, right?
In a way.
Yeah.
You share a lot more about your lives than I have with mine, I guess.
Yeah. Well, but it's cool, and I love the all that history there. So you know plenty about us. To give everybody a little background, because I'm not sure what's popping up on their screen, but civil engineering degree from Virginia Tech, master's in finance from Georgetown, and one of the key that they have marked for me is that you are the proud owner of a numbered cherry pin.
I am. Well, I wore it here today. Back when
I think I have a cherry pin on right now. Yes. Nice.
Oh, and opening an account, that was one of the things that you got back then.
There you go. And you wear it proudly. I like it. And before we get into kind of, some of your results and some of your stuff, I'm really fascinated by. So you're an engineer.
Mm-hmm.
You're an entrepreneur.
Yeah.
And you're also teach at two universities, Virginia Tech and Georgetown.
Correct.
So you're kind of like a techie engineer, and then you've got all this other entrepreneur stuff going on.
Mm-hmm.
In addition to, your trading. How much time do you spend watching markets?
I was telling some of the team out there this morning, I'll have the live show on almost every day for the first 3 or 4 hours. There's always a screen that I have up that has my account on there just to watch.
Nice.
Yeah, we can get into the trading a little later. I don't trade all that actively, decently so, but it's an awareness thing for me. It has so much context in a lot of the work I do outside of trading.
So what does that mean? I mean, explain.
I'll go on a little tangent, but I'll answer your question.
Sure.
In the one of the graduate courses, it's a Foundations of Finance. I mean, NPV, formula, basic. Let's talk about time value of money.
Okay.
And we have a discussion about what sets the time value, interest rates. Where do they come from? How are they set? Who determines them? What's the pull? And it probably wouldn't surprise you, but the vast majority of students, don't have that context to the bond market and have never traded a bond or a note and don't know what any of the spreads are. And, it's the interest rate's just something the bank sets. And, you get into the next question of, well, where are rates going? And, well, I don't know. Well, actually, there's an entire market that's
Do you tell your students that you trade the markets?
Yeah, we get there.
You get there?
Yeah.
Okay. Because I think it probably, I wish I had professors that had, well, I don't know how easy it would have been to trade back then, but I kind of feel like I wish professors would trade, and then I wish they would tell the students that they trade, because that kind of, that it means a lot more.
I actually, true story, in an undergrad class, I actually had a student come and ask if I've ever heard of Tasty Trade and Tasty Live. he was a watcher and was just started trading. Great. When we started talking about options, it like piqued his, he's like, wait, I know that. Let me come talk to you about it. So yeah, they're out there. Yeah, but the context, you have to try to put it in perspective of whatever environment we're in. And especially in real estate, which is a lot of the focus of what those master's classes are on, it provides that.
The only problem with real estate
there's many problems.
But. Well, I guess. As somebody who's trying to sell a building right now, sure. But one of the great things about trading for me is that it's actually something that it's actionable because of the liquidity in the markets. Mm-hmm. And real estate, as much fun as it sounds like on paper, sometimes it's not actionable because there is no liquidity. Yeah. So it's
correct. You could have the best building in the city, but if you can't transact,
that's
it doesn't matter.
You're so dependent on unlisted financial markets, well, even non-listed markets. They're regardless of what's happening, there's a bid and an offer, and there's some market somewhere.
Could be wide, but there's a market.
Well, or it could be very low and unattractive. It could be high, but there's a market. There's not always a market in everything else, and so the concept of liquidity is quite foreign to a lot of people when they think about taking risk, and that's one of the things I just love to hammer home. To providing context in your teaching, do you think that trading has played a similar role in the entrepreneurial ventures that you have, and in the engineering side of the business that you're a principal in?
Absolutely. Trading has taught, I don't want to call it instant decisions, but instant decisions. Like you have to make, with the information you have, with the risk you're willing to take on, do you get in a position or not? That is every day of owning and running a business. And
assessing risk and making quick decisions is something that I preach nonstop, but sometimes people have a hard time hearing that and actually wondering how they're going to apply that.
Yeah. There's decision paralysis on so many things in life. You can't have that in running a business. Doesn't mean you're always making the right decision.
No, but you don't have to always make the right decision.
Right. You can change.
You just have to make a decision.
Correct.
There's nothing worse than not making a decision, but I don't care if you're right. Just make the damn decision.
Just pick a way and figure it out later.
You'd be surprised, but you're going to be right a majority of the time, because that's just the way everything works. The favors go to those who make the quickest decisions, and for whatever reason, it just works out that way. So let's get into trading.
Yeah.
When did you actually start trading?
I opened first account when Tasty Works at the time, now Tasty Trade.
Had you done anything before?
2000. Yeah, I opened my first stock brokerage with Fidelity when I turned 18.
Okay.
To invest. There was never a day trade. Never try to speculate.
Mm-hmm.
There were no. I didn't do options at that time.
What'd you do? Did you just buy stocks?
Just buy stocks. That was back when you paid like $10 a trading commission, commission every time just to enter and exit a position. So couldn't do much with that. But it was just to get in. My dad was in finance, so I was aware of it.
What's your dad do?
Now long since retired, but was in higher education finance.
Got it. So he was a professor?
No, on the administrative side. He has a PhD, but he was at the administrative side, run college finances, Cornell, some Pennsylvania schools.
Got it.
Finance.
So you're aware of finance. Yeah, my dad was didn't believe in stocks. So it's very hard for me to make the transition because he's like,
had to relearn. Yeah,
a smart guy, but didn't believe in the stock market. So your first venture was just kind of traditional, passive, buy a few shares here or there.
Yeah, put it in the mutual fund. Set it and forget it stuff.
Set it and forget it. Go to sleep for 45, 50 years and hope when you wake up it's going to be significantly higher.
Yeah.
Still have an account?
Still have the accounts.
Okay.
It's higher, through no efforts of my own.
Mm-hmm.
But you said at some point in one of your segments long ago that you don't know how you can sleep at night with that because you don't know what risk that has on.
Yeah, actually, that doesn't bother me. Sleeping at night with a passive account I don't worry about that from a risk perspective. I worry about that from a know-how perspective. I worry about that.
There's no know-how.
There is no know-how, exactly. I worry about that from what's going to happen in 20 years when you know just as much as you know today, and you haven't figured anything out. You haven't experienced anything. That's what I worry about.
Yeah.
So you start watching Tasty in 2012. Did you start trading options then, or you waited?
I'll say I paper traded. I had the theory in my head because I was teaching it at the time.
Okay.
My first introduction to options was actually academically. When I was going through my master's program,
okay,
they had a professor who we had to draw out the option payoff diagrams by hand and understand how these things got put together. And something that just kind of clicked with me.
Something.
Yeah, wait a minute, I can quantify the risk and I can hedge it in the light sense, not financially hedge, but I can compartmentalize it. And so then I said, all right, let me start to see what's going on. And through a friend of a friend, I was actually on a golf course of all places when I first heard the name Tasty Trade and at the live show at the time, and started watching it, and you and Tony, and figuring out what all that chaos was about. But eventually it made sense once you got a few episodes in. And
yeah, it's not something you just turn on and go, oh, okay, I'll just watch this for the rest of my life. Yeah.
Well, so far we're in.
Yeah, no, that's great. And so you're messing around, you're paper trading,
Mm-hmm.
and you're kind of figuring it out,
Mm-hmm.
kind of. And you opened one of the first Tasty Trade accounts. Was that the first time you ventured into listed options?
No, so because I had the Fidelity account for forever. I got approved on Fidelity to go through their options, and for those with Fidelity accounts, I'm sure they're quite happy there. But it was a process.
Don't even get me started.
And, there's multiple levels.
Well, they don't love me, so it's okay. I'm good. Don't worry about it.
Then I traded a couple options at the Fidelity account with what limited authority and permissions I was allowed to do. And it kind of made sense, but it was not easy to do. There was some friction on the execution.
Did it bother you that you were restricted from doing certain things, or you didn't realize it at the time?
No, I very much realized it. It confused me. The restrictions were there. You had to interview to trade your own money in a way.
Yeah, of course.
And I'm sure you can make an argument from a firm perspective, but we won't go down that rabbit hole.
No, sure.
And that's when we were launching again, Tastyworks, the trading platform at the time, and I said, this. I like what I hear, and this is built by people who are going to click the buttons, so I'll give it a try and have it look back.
Perfect. Do you remember what you first did when you started out trading? I think that was 2017.
Mm-hmm. Yeah, opened the account, and I didn't do anything.
You didn't
let the money sit there for probably a week or two.
Okay.
It's one of the things when you get the new car, you don't drive it right away.
Yeah, sure. Well, you want to smell it for a while.
Yeah, you got to see how it goes.
Yeah, just admire it.
Yeah. And then it was trying to figure out a plan, right? Like $2,000 account. There's not a lot you can do.
No.
You can't do trade often. You can't have 30 positions on. And it really teaches you kind of a perspective on where and how to deploy capital, which you talk about a lot, to size a position with the risk you're willing to take on.
Mm-hmm.
You want a winner, obviously, but
sure.
Again, I'm trying to figure out a way to learn how to win, not necessarily always make the money right away.
That was kind of part of the whole genesis of Tasty was, before we can really focus on wealth creation, we need to focus on teaching people and showing people that, you know, how you can actually have probabilities in finance that are real, that are, you know, theoretical, that are practical, but that are not, you know, not completely just made up. You know, like,
well, and you know certainly more than I. Most people hear derivatives, and it's an instant association with gambling or high risk.
Weapons of mass destruction, as Warren Buffett once said.
It's a pretty famous quote.
Yeah.
And it comes from misunderstanding, right? They very much can be if someone's just going in and buying or selling a position that they're outsized to do. But
no
that
question about it. But that is the nature of leverage and, you know, and risk. And, you know, if you want an opportunity to have a high probability of success, if you want an opportunity to have some, you know, asymmetrical upside, you're going to have to take some risk. That's just nature. So I kind of feel like you're one of those weird case
Not the
studies.
first time I've heard that.
What?
Not the first time I've heard that.
Your wife tell you that too?
Many times.
Okay, I've been down that road. I feel like you're one of those studies, though, in that you had lots of different reasons to trade. It wasn't necessarily about, like, you're not going to open a very small Tasty Bite accounts and think, you weren't thinking at the time, I'm going to turn this into, you know, $10 million.
No, still don't think that.
Right. You're thinking, I'm going to teach myself how to win, and I'm going to teach myself about a little bit about kind of, I'm going to gain some know-how about financial markets. I'm going to learn about some of the intricacies of trading and strategies, and I can use all this in my businesses and my risk-taking, my teaching, all that kind of stuff.
Yeah.
Because the first time I met you had to be right around when we opened Tastyworks, or just after, and you were trading. And I mean, I didn't ask you any questions at the time, you know, but it's just like, I remember now asking you, you know, or you telling me that you were using some of the stuff that, I can't remember if you asked me a question, can I use some of the stuff in class? Because we have a lot of professors. Or that you were using some of the stuff that we were doing in class, which I was like, that's awesome, you know, because I want professors to change kind of the curriculum and bring it forward a few decades.
30, 40 years.
Yeah, 30, 40 years, exactly. And so I was so happy that you were doing that. And I kind of remember that, you know, conversation. I've had that with a bunch of professors all over, and it's cool.
Yeah.
So let's talk about the progression. So the first couple of years, are you like, you know, just kind of treading water?
Yeah. I mean, first year over year, I think I pretty much ended flat, like maybe $100 down.
Okay.
Which, you know, for a $2,000 account, it's a dip. But I was just all defined risk, I'm pretty sure, in the first year.
Yeah, probably.
Couldn't afford anything.
Yeah.
You know, I think maybe the affordable undefined position at the time would have been like Snapchat when it was, you know, like a $8 stock or something like that.
You're selling the $7 put.
Yeah, exactly.
$8. Yeah.
Yeah, it wasn't the best decisions, but you know, feeling out how to manage the position, right? And that's something that really takes time to learn, that process of how to properly manage.
Oh yeah, because, you know, anybody can manage a winner. It's the losers that where you start to get, it's the challenge.
Yeah. And you know, if nothing, the early years teaches you to be humble pretty quickly. You don't know anything when the bell goes off.
It makes you second guess your genius. You know, like you've been told your whole life, you know, you go through your undergraduate degree, your graduate degree.
It's humbling pretty quick.
Hey, my kid's a genius. And then all of a sudden you get humbled by the markets when you're like, I guess I don't really know anything.
Yeah, market doesn't care what your position is.
That's right. It doesn't care how smart you are. It doesn't care about your PhDs.
It'll go right through.
Yeah, exactly.
And so just learning to operate that environment. You know, it's a big box that you're playing in.
Hell yeah, absolutely. So you kind of, for 2 or 3 years, I don't know, you go sideways, spin your wheels, you know, like learning, grinding it up.
Couple wins, couple losses. You know, trying to learn from the losses. What went wrong? Did I not manage it correctly? Did the market just go through me? Which happens. Was it too big a risk for what I put on, or did I just have the wrong position on? You know, I I don't know that there was a theme there. It was just trying to figure.
I hope you teach your students that sometimes the stocks win.
Yeah. Oh yeah. But you have to, right?
Right.
You could have the absolute best position on, and there's nothing you can do about it. Like you should have been right, which you weren't.
Yeah.
You know? Probabilities are what they are, and 5% happens 5% of the time.
You could be playing poker and have 2 aces, and
we
you
both lost that hand.
Yes, exactly.
and you still
lost that hand many times.
Yeah.
Right.
Yeah.
So
sitting on 20 at a blackjack table.
Yeah, exactly. Sitting on 21 and you push, and it's like, how comes? So let's start getting into a little bit of the, when you started to turn the corner.
Yeah.
Like, did a bell go off? Did you figure it out?
No, it was comfort. I started to understand where and how I was taking on risk and what that meant in the position. You see the buying power reduction, which of course is the quantification of it, but what does it actually mean? How does that fluctuate?
Were you mostly trading equities or indexes or what?
No futures, no futures options at that time.
Okay.
It was would have been listed single stocks or ETFs.
Are you trading futures and futures options now?
Yeah.
Okay, good.
Yeah.
When you first, now we're up to 2020, you've been doing this for let's say 3 years.
Mm-hmm.
You're still, you have a small account, you're learning.
Mm-hmm.
Now you're 3 years in.
Yeah.
It's like a graduate degree.
Yeah.
It's longer.
Yeah.
And you're not being rewarded. You're not being rewarded monetarily, but you're being rewarded something else.
Yeah, I think I'm up probably a couple $100, maybe $1,000. I fit the exact numbers, but I've learned a process, right? Your analogy there to a graduate program, it feels about right. You don't remember every class and every lecture, but you've learned something along the way, and things are easier. You start to know what strategy you want to use, what environment.
And when you win, it doesn't matter. Even to this day for me, whether it's it could be a $100,000 win, it can be a $1,000 win, it can be a $100 win.
It's a win.
It's a win. I don't really care. It's a freaking win.
Yeah.
And winning is part of this game. It's you have to have wins.
Mm-hmm. Yeah.
You have to keep reinforcing.
Absolutely.
All right. So what happened in 2020 where your return in 2020 was 160%?
Mm-hmm.
So what happened all of a sudden?
That was, the world changed, but in a financial market, the right place at the right time.
2020 was the pandemic.
Yeah.
So you were home.
I had 3 years under the belt, so I'll say there weren't really any first day jitters, right? I wasn't coming in. So watching IV spike across the market, I'll say knowing, for whatever that means, no one knows anything, but anticipating that, as with every other time in the market history, it's overstated. Being able to act on that, right? That's the 3 years of trading practice to go, all right, to deploy the tools that you have in your tool belt.
Yeah.
And the returns came in. Great on a percentage basis, still a small account.
What strategies were you into then? What were you doing in 2020?
Probably just wide iron condors at that point. Again, taking advantage of the just absolute massive spike in volatility across the market. Not being comfortable to go undefined in those.
Okay.
I was probably trading undefined at that time.
Yeah.
But with such high IV, going, okay, I don't know what I don't know here, and this is when the train comes out of the left side and takes it all out. So I'll put the guardrails back on a little bit for my own safety.
I like
but still, wide enough that was able to reduce some of the friction of the downside of defined risk strategies.
And then, so we move forward into 2021,
Mm-hmm.
and in 2021, you make half. Your return is half as much, but it's still 82% instead of 160. 160 is not realistic.
It's not realistic.
Yeah. But the next year, 82. 82 is not really realistic either, but still you did it.
We lived in high IV.
Yeah, we did.
And that's where, throughout that year, I started taking those guardrails off, went more undefined risks.
Okay.
And
so what percentage were you defined and undefined?
Prior to that, I'd say probably 90% defined.
Okay. And what about 2021?
Transitioning through the pandemic, I probably came into 50-50.
Okay.
And now maybe are in the 60-40 undefined being the bigger part there.
Got it.
And again, it's just...
Is that the primary change, or was there something else that year, 2021?
No, that's the primary change. And then, an accommodating market. Again, I can't overstate.
Yeah. After the whole meme stock thing in 2021.
Stayed away from that.
Yeah, well, that's good. But I mean, after that, there was a volatility contraction kind of for the rest of the year.
Yeah.
So it was a pretty good year. And then we fast forward to 2022. But 2022, you lost money.
Lost money. It's good to have a losing year, I think.
What happened?
It got too big.
The classic.
Well, I got too big in that I went into the futures market and the futures market won.
And you didn't realize how big those products were?
Yeah.
Yeah.
I stand by it as an important lesson to have learned. No one likes losing year, but...
What futures market in particular?
Yes.
Oh, yes.
Yeah. It just, I honestly think I bought back the downtick in a falling market to help to cancel the crash, and it went up after I sold.
Oh, thank you very much.
You're welcome.
Yeah.
Emotionally, that's what it feels like for sure. But that's all.
Do you know how many traders think they sold the bottom? Yeah. Like everybody.
Listen, it's
multiple times.
It's a fishing story. We'll never know.
Sold the bottom both.
Somebody has to, right?
Of course. Everybody does. Everybody's watched the same movie. But that year you finished down 42%.
Yeah.
So you up 162, up 82, down 42. Did it shake you, or was it just like, hey, you know what, this happens?
Both, really. It was, all right, what happened? And you can pinpoint.
Because you had to be pretty cocky after being up 250% the prior 2 years.
I'll be honest, I wasn't, because the market's humbling. Right?
Okay.
You have enough losers where even when you think you're right and you're wrong.
How often are you trading by 2022?
2022, probably 2-3 times a week. Pretty light.
Yeah, that's not that much.
Don't have a lot of capital to trade with at the time. So a lot of it's watching and going, okay, do I have to manage this, or no, I'm just going to sit and see how this...
Did you get it discouraged at all in 2022?
Oh, absolutely. Anytime you get discouraged at a losing trade, let alone a losing year. But, take a step back and analyze where did the loss come from. Was it thematically an issue that I just had all the wrong positions on? Or no, it turns out it's, 5 or 10 positions that are just too big. And when they downdraft, they downdraft, there's nothing else you can do. And so you reset.
Everything you were teaching at the time come into question. You're like...
probably, right?
Yeah.
There's that moment where you go, look, like I thought I had this under control. Again, not in a cocky way, but I thought there's a strategy I'm trying to follow.
Well, 2022 was also a pretty decent-sized sell-off.
Yeah,
and
February, March is where most of the losses came from.
In a strange way, given your age and given when you had never seen, like, there hasn't been a lot of bear markets.
No.
2023, you make a comeback, and you're up 25% for the year, and you, it's a bounce back year. Anything change in 2023? I mean, obviously the market rallied because you seem to be better when the market rallies.
I generally trade pretty market neutral.
Okay.
I'll inadvertently have some positive delta on, but we're talking plus
Small.
10. Yeah, I mean, it tends to fluctuate around on pretty neutral.
Yeah, and are you, your ratio of defined to undefined risk kind of similar?
Now, I'm probably...
No, 2023.
Oh, yeah, pretty similar.
Okay.
The difference was stick to what I know. Don't play in the big markets.
So you didn't do anything different in 2023, except you stayed away from some of the futures trades that are a little bigger.
I got out of my own way in 2023.
Yeah.
Which is probably the easiest thing to do.
Yeah.
So, hey, I had a plan that was working. I spent a couple years learning this. Do it. Don't try and dabble too much.
Now, in 2024, where we are right now, you're up 73% for the year, which is great. Have you done anything different in 2024?
More expansion into undefined risk and more into the futures options market. Just
outside of ES.
Primarily still in ES, just more staying away from the actual future itself, more just into the options.
Got it. And what kind of actual strategies are you using?
Primarily ratio spreads in the futures options.
And you're doing like 1x2s, 2x3s, that kind of thing?
Precisely, yeah. Nothing too huge.
Nothing too fancy, nothing crazy. Just
again, that buying power, keep putting it in that size account. You have $1,000, $2,000 per position buying power.
Yeah, the ratio spreads are very capital efficient to the futures, more so than equities. are you doing any? What are you doing in the equity markets?
Chasing volatility, wherever it is. I'm product indifferent, right? If it's got, I am product indifferent as long as it's liquid.
Sure.
Which I think goes unsaid, but I'll say it nonetheless.
Yeah. No, that's great. What do you think, you need to improve on, and what do you do different this year, if anything?
It's a pretty heavy question. Improve on, I'll say, is reacting just a little quicker on putting the position on. Sometimes I'll
you think about it too much?
I catch up in what's the best strategy I should use here, and sometimes you just need to put one on. And you can put a second one on if you think of a better strategy, but put the first position.
Okay.
And I've probably missed a few moves for that, just waiting what I'm thinking.
I would think so.
Yeah.
Yeah.
Just the hesitation is like, how should be this?
By the way, I hate when I hesitate because it always comes back to bite me. I'm always thinking about it, and yeah.
I've also had, improve on a couple losers that I didn't manage because I was waiting for the market to come back.
How aggressively do you manage?
As aggressively as I can, with the losers being the ones that I don't and they come back and hurt.
How aggressive are you in closing your trades? Are you doing it, kind of like our mechanics show?
Oh, absolutely.
Early?
21 days.
Yeah.
And there's even times where I try to stay as close as I can to the mechanics, but if I have a winner who's coming, Tesla's a great example, coming into whatever announcement they had last week with
the
Robotaxi.
Yeah.
I had a winning position on. It was nowhere near 50%. But I took it off. Like it wasn't worth the risk of it.
Do you trade any binary events?
Occasionally, but they probably hurt me more than they help me.
There's no question. You hurt me, so I'm just asking.
One of my biggest losers this year was in the bond position around binary events.
Okay.
Even it was defined risk.
Yeah.
It still hurts when you lose a defined risk trade.
I like it. That's a good way to end this. Michael, thank you. This has been a really great talk, and I think that, Tasty Nation getting to know you is just, it's a bonus for them, and it's a cool story. So thanks so much.
Appreciate it. Thanks so much for having me, Tom.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you see the star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. force. Quiz.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mikey Butler and, of course, Mr. Thomas Westwater in the house with us today for our Thomas Tuesdays. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day. Get spend it with my buddies, Mike and Thomas. Thomas, good morning. How are you, sir?
I'm good. Nothing too new to report for me.
Fresh haircut.
Fresh fade. Yeah. Fresh
come
haircut.
on.
Fresh
Come
haircut.
Looks good.
Thanks. I appreciate that. Yeah, it always feels nice to get a fresh haircut.
Yeah. Did you trim the beard too a little bit?
I did the beard myself because my barber, they do like $20 to add on the beard trim, and I'm like.
And they got the razor. It's like
yeah.
I'm gonna take that risk.
I like the single blade shave is quite nice.
Yeah.
You know, I always find it weird how when you're at the barber, it's a person you kind of don't know, and you let them just put a razor
right there.
Your neck, and it's pretty trusting when you think about it. You know?
Could go wrong, but glad to see that you do it yourself. You remove your. That's the trader's mentality. The risk is not worth the reward.
Right.
So you do it yourself.
Yeah.
I
think a haircut's in my future soon.
I could fade you up too. I mean,
can you?
Yeah. In Afghanistan, I used to be the guy that faded my squad. So I got pretty good at it.
That was probably like a coveted, like that puts you in good graces, was there any like would you get like rations for it or something? Like was there any or were there multiple jobs like everybody had? Like you were like the haircut guy?
No, I was just a nice guy.
Oh, okay.
Yeah.
All right.
Yeah.
All right. That's fair.
Yeah, just a nice guy.
Yeah. All right. I like that.
That's good stuff.
Yeah.
He's taking out a page out of your book. He's making some jardiniere.
Yeah, with my peppers.
Nice.
I should have. This could have been a joint operation.
Yeah.
Batista Gardens and the Westwater Farms collab. Limited edition drop. Yeah.
You could. You still could. You do it in the future.
Yeah.
In the
I
fall,
could
make
next
some
year.
sauce. Like you provide the peppers for his tomatoes to make the sauce.
Yeah.
And then
But he does peppers too.
Yeah.
That's what I was saying. We could do the pepper, the jardinere.
Or you could make like a spicy pasta sauce.
Yeah.
You know?
That next year. I don't have as much land, so I can't contribute as much.
True.
You
actually have zero land.
I have zero land, but I have a metal balcony.
All you need is some sun and some dirt.
Yes. Yeah.
Yeah.
No, I got over the summer about 2 full gallon Ziploc bags full of peppers. I cut them up too, so a lot of volume. Not as much as I needed for my operation. I had to get don't tell anybody, but had to buy some extra peppers to get all So my label, which I have, says 98% homegrown.
98%.
It's probably like 70, 60%.
You gotta get John too. You can have the tasty trifecta with the jardinere.
John's is good. I
pasta.
tried his last year. Really good.
That's got some kick to it.
Oh yeah.
Hey, the world is your oyster here.
Yeah.
So
So
you can do it.
next year we'll collab. A limited edition drop.
There you go.
That'll be hot.
Put it in the tasty store.
Yeah. $20 a jar.
Yeah. Just jack that up.
Yeah.
Actually, by next year it'll be $30 a jar.
Yeah, $30 a jar.
Inflation.
Organic, homegrown, local.
Mm-hmm.
Come on. It's easy.
Yeah.
Beautiful.
So what's going on here? I've
6666.
Literally. Exactly right now.
Minutes.
6666.
Yes. Ominous.
Definitely
Scary.
ominous. We've got Fed tomorrow.
Yes.
So there you go.
Yeah, we got a lot of events this week. You have Fed tomorrow. I think you have some jobless numbers coming Thursday. Friday is triple witching, which is the expiration for stock, ETF/index, and futures, all expiring on the same day. Happens quarterly. It's nothing out of the ordinary, but it's a quarterly expiration. And then forgetting one other thing that we have. Vixpiration too. VIX futures expire as well on Wednesday, tomorrow.
Yeah, that about covers it.
Yeah, but that's a pretty action-packed week. No big earnings, but that's a lot. That's a lot coming. It's I think is the FOMC announcement all but baked in, or no? I know this is like Dylan actually, our Super Bowl, our resident Super Bowl, aka the Supernova, as he has penned this market and its continuation to the upside into infinity, the Supernova, says that it's a dip. FOMC is a dip. It's a dip opportunity, but you buy them with both hands. So he says.
I kind of agree with that. I mean,
is it too easy though? Is that too easy?
yeah, it's like, I think it could be a sell the news thing where we dip for a day or two, but I don't think it's going to derail the broader rally, so.
Yeah.
I don't know.
The until proven otherwise trade.
I mean, if there's a dip, it's going to get smashed.
You could go
It'll be like
both hands. So both hands and feet.
We
Just
joke
a full.
Yeah. Grab onto the wheel and
yeah.
We joke that these dips last like 2 days. But I think if there's a dip, especially if a sizable one, like 150 points, 100 points, could be like a 1 day thing.
How long?
1 day flash sale.
Okay.
And then we ride off into Santa Claus Rally sunset.
Yeah, 7,000 easily.
Yeah.
I mean, that's within stone's throw. What's the okay, I'm spooked situation? Like, how long is that dip? A week? 2 weeks?
I would be more spooked by volatility. So if there's a dip paired with a big volatility spike,
And vol stays high.
And vol stays high. But if there's a dip of 100 points, 150 points, and the VIX doesn't move that much, then that's what we're talking about here, where you might get a little dippy do, and then you see a dip buying situation here. But
150 points, about a 2 standard deviation.
Yeah.
I have about a 71 point expected move. So just to put that into context, which is shocking.
Yeah. Well, there's
how low vol is.
Oh, it's ridiculous. There's a 10-point expected move for the rest of the day today, which is extremely low.
Tells you nothing about to happen, or at least the market says nothing happens.
Yeah. And then you have almost a 50-point, 44-point expected move for tomorrow. So that's something. And then there's a little extra for Friday. So, Thursday. So 60 points through Thursday, and then it dies off again, 70 points through Friday. So you're seeing a big chunk of the implied volatility for the rest of the week in SPX priced into tomorrow and the following day for maybe a follow-up reaction move. So
yeah,
we shall see.
You do have relatively high volume, especially for halfway or less into the session here. 890,000 contracts of the E-minis have traded so far. Probably kind of tightening up, buttoning up into tomorrow's festivities. Is that at like middle of the day?
It's 1 o'clock.
1 o'clock?
1 o'clock, yeah.
All right, so we got middle of the day tomorrow, so I'm sure volumes will stay relatively high into that, just as people place their bets. The red or black.
Yeah, I think
green.
You'll see a vol. You'll see a vol pop. You'll see an extrinsic value pop leading up to the announcement. And
then
see
just
the ticker. It'd be good.
Got volatility a little bit today.
But yeah, I'm leaning towards. I think it seems a little too easy for it to just be like, okay, 25 basis point cut, and then the market rips higher. I think you get a little head fake.
See, I think everybody's in the dip and then buy it camp.
Yeah.
Like that's what I feel like is like
so
the
what's going to happen then? If that's consensus, it can't happen. So
then you either got to play for the face ripper or the big dip. So you got to play for vol.
Yeah.
I think you got to play for volatility in either direction.
Yeah.
Because there's no vol right now.
I mean, we've silently climbed to 6,700
without a downtick.
Without even
I think we had like 5 or 6 straight up days.
Yeah.
And then one day that was like down like 3 points.
Yeah, like today.
Yeah.
Down 12 points.
Nothing. Nothing. Just shuffling of cards.
But yeah, it'll be interesting to see what happens. Of course, we will be streaming live right before it.
Well, Tom will be true. It'll be truth or skepticism. So maybe you'll see Tom like squirm a little bit, depending on what way the market goes.
Yeah. And then we've got another event this weekend.
Yes.
So sign up for that if you haven't already.
New York.
Mike
and I will be hosting on Friday. My dad and I on Thursday.
Yeah, September 19th.
Interesting day.
It's going to be glorious.
Ooh.
Get your bagels.
That's another angle I didn't think about. Tom gone. And Tom gone is usually volatility.
Yeah. It's just the way of the
end of the week, too.
If anyone on this network is gone, there's something that's happening.
Yes.
So we'll see. I'm hoping we get a little dip because I want to buy it with both hands.
Yes. Okay. There you go. Well, to that idea, to pump the cherry picks, which is coming out later today, if not soon. Dr. Data in the lab right now working on that one. We're taking a look at rate cuts and rate hikes, just like rate decisions, because there really haven't been that many over the last 20 years prior to COVID. COVID's been like, kind of the big, and then you had like the crash in 2008. Those have kind of been like the big rate decisions. So we're looking at just like kind of indicating those on a long-term chart and showing, price movements around rate cuts and increases. So should be some good data for you to look at there.
Yes, I've got the link to the Cherry Picks newsletter pinned at the top of the YouTube chat.
Yes.
If you want to click on that, get it for free, definitely do so. We're also streaming live on YouTube. Just head over to the Tasty Live channel. You'll see this video front and center, throwing your trade ideas questions along the right-hand side chat.
Yes. Quick little market update.
Yeah.
Just to point out.
Please.
6666. We were there for quite some time. We are now a point higher. We're down 12 on the day on the E-minis. As I said earlier, we've got about 900,000 contracts traded. A relatively high amount of volume for the middle of the day, likely leading into tomorrow's events. People kind of buttoning up the, closing the hatches on the submarine doors. NASDAQ down 31. You got the Dow down 145 and the Russell, the weakest of the group, down 13. A little bit of a surprise with the way bonds have been moving. Oil catching a little bit of a bid, /CL up $1.09, 64.11. Volatility futures, as we were alluding to, a little bit bid today, up 12 ticks, but certainly near the lows here. Bonds 117 and change, almost 118. I think we had a 118 handle. We did. 118.01 was the high of the session here, so rates continuing to come down or at least stay down here. Gold up $5. It has gone parabolic. Silver actually down 14 cents here after its move higher. And Bitcoin going from red to green, finally kind of moving into the risk-on sentiment here. The money printer go burr sentiment. The rate cut sentiment here. Up $500 on the futures. Spot up 400 and change. Ethereum as well higher, or it's lower, higher from the open. Down $54 at 44.65.
Lovely.
U.S. dollar getting smoked too. Another thing to add. Yeah, don't look at those Tasty FX positions. Not looking good. We were due. The gambler's fallacy. Yeah. We were due for some pain.
Well, technically,
about $300.
Well, the beautiful thing about these contracts is that
gave up half my profits.
Technically, you don't have to close them. I've only closed winners on this little platform here.
Yeah.
On Tasty FX. Mainly because they're so small that I totally forgot that I have 4 positions on right now. But my total P&L is like $20.
Yeah,
so,
I have a sizable short, a long U.S. dollar, short basically everything else.
Yeah.
Position.
That's
which is not good right now.
I'm short the Aussie dollar, short the New Zealand dollar, short the Aussie CAD, short the New Zealand CAD. So I'm going to close the New Zealand CAD that's up $8. Just take some risk off there.
There you go.
But yeah, need some movement in these U.S. dollar pairs.
Yes.
But yeah, we trade such small lots that it's not an issue either way.
Becoming a thorn in the side. a little bit of
an annoyance.
Yeah. Yeah.
A little splinter.
Yeah. I could feel the knife to my throat like a haircut.
Yeah.
I'm a little scared right now.
It's okay.
I'm trusting the process.
Yeah, I mean, DXY having its worst day since August 22nd.
There you go.
This is basically the lows. I mean, we're right
Back
there.
in July.
So the 3-day rule. It's been about a week since we put these on. So if you've been waiting to get your better entry, it's now.
33 cents off the July low.
There you go.
Beautiful.
Yeah.
I closed a Walmart call that I had left over. I had it for like a month, and it finally recovered from earnings.
Nice.
I initially had a call diagonal spread for earnings. It was the 100-105, long October, short the August 22nd 2-day for earnings. Walmart sold off, held on to the long call forever, and almost a month later, back in the green, 80-cent winner. And then Adobe, same story. I had that short put spread, 5 points wide, that I had on for a while actually, but it basically naturally turned into an earnings trade just because I had it on for earnings. Got the rally there, closed that for $145. So two winners to offset my implied losses here in gold that refuses to go down.
Yeah, I got some tough positions there.
Potentially TLT, but someone in the YouTube chat asking about my TLT position. I've got the 90.89 put zebra. 3 days left. So this encompasses the rate decision, and I assume we're going to see TLT move based on what is said. So I'm not doing anything there. It's trading for 50 cents. It's down $100, but if we get a swift sell-off in TLT, that could come back very quickly because we're right there. It's a 90.89, so it's literally just out of the money.
Very nice. Very nice.
That's about it.
Quick little shout out if you like the platform and you want to see the trades as well. Open a Tasty Trade account, tastytrade.com. Give us some love. Keep the doors open.
Yeah. Yeah. Got some cool stuff on the platform. Active Trader tab.
Yep.
V2.
Yes.
Tasty FX. I mean, you can literally do everything on this thing now.
Yes.
Magical.
We got it all.
But yeah, let's pop over to the slides and talk about the wheat, which I've been long for 53 days.
I closed my put spread today into this up move, but I had 10 days left, so maybe this is my trigger to get a new position on.
Yeah. I mean, I got in a new position today. I did the 66-day out. I sold the 520, bought the 510 put, so short put spread, hoping it stays above that. We're at 532.50 right now. Today's a big day up. A lot of export pressure is building. It's after this extended downtrend. You know, we've had a nice little move up already, and we're still getting some strong buying. So
we haven't really talked like ags or wheat in quite some time.
Yeah, I had to throw it on. You know, I'm long wheat, I'm long soybeans, I'm long corn, so I'm long the triplex of products there.
Okay. Corn man is officially back.
Yeah.
I like it.
Yeah, I think we got something here. So we'll go to the slides. Go to the first slide. And these are just some headlines from Reuters. So Asia importers increasing their purchases. Indonesia, 500,000 tons recently. Bangladesh, 250. Sri Lanka, 100,000. Indonesia Wheat Flour Mills Association signed a memorandum of understanding to buy at least 1 million tons per year through 2030, and that's starting next year. So this new crop that's being marketed, that comes into play. So a lot of exporters are now deciding to buy U.S. wheat, and one reason they're doing it is because the prices have come down so much. So that's made it more attractive. Another thing really helping wheat and all the commodities today is that weak dollar. So a weaker dollar, you know, makes it less expensive for foreigners to purchase. Since you're buying in U.S. dollars.
Okay.
And last week, you know, we had the WASD report. They increased their wheat export outlook by 1 million, so to 24.5 million tons from 23.5 million. So the forecasters and the actual purchases, it's all looking pretty good. We'll go to the next slide. And this shows the actual amount of accumulated exports for the world from the U.S. So that red line is this current year. And just in the past 3 weeks, we've moved back above the previous year. We were trending right at it, just slightly above. We started the year, the first half of this marketing year, so June, July, a little up, but pretty much in line. And now we're starting to pull ahead. So we want to keep seeing those numbers, that red line go up. And I'm assuming it will with all these new purchase orders and news of purchasing coming online. They'll show in through that data in the next month, 2 months, and so on. So exports are looking good. That's really important to the wheat complex for the prices, everything like that. And we'll go to the next slide. And this just shows the shorts versus the longs. So the shorts is the red line. The longs is the blue line. Longs really haven't done too much, you know, through the past, 2 years. Shorts have built considerable positions a few times, especially earlier this summer in May, started to dip through June, and then July trading. Shorts rebuilt that position. And per the Friday's COT report that goes back to Tuesday, they built a little bit again. But that was before, today's move is a pretty big move. It is the biggest move since August 18th, so in about a month. So, I think with all this news coming online, the big move today, we're challenging the swing high from August. I think the shorts are going to concede pretty soon.
Okay.
Especially if we break that August level, which is right at 534 and 6.
Okay.
So we're right there. Today's move, it could actually be this could be forcing shorts out, some of the price action you're seeing.
Okay.
It's hard to know until that COT report comes out, but on Friday we'll get the data. They'll be up until the end of today's closing trade.
Okay.
So we'll see Friday if shorts are starting to get out of the market. I'd assume they would.
Yeah.
Shorts have plenty of more room to run to the downside. And we saw it back in June. We saw that spike. We saw shorts come out really quick. So perhaps they're on the edge.
That's a natural buyer.
Yeah.
So,
Squeezy.
Yeah, and there's good volatility in the product. I mean, the IVR is around 55.4.
Yeah.
Kind of in all the things. Corn, pretty good there.
Mm-hmm.
Soybeans, not as much, but still you got some volatility in there.
Do you think you see kind of across the board upside in all of them, like in corn as well?
I do, yeah. Yeah, I'm long corn and soybeans as well. Corn having a really nice strong move.
Mm-hmm.
We are at the highest levels since early July. We're trading above, all the relevant EMAs, stuff like that, above the 50-day SMA, et cetera. And then for soybeans, it's kind of the same story. Not quite as strong of a move as corn. But the China story is still holding soybeans back to a certain extent.
Mm-hmm.
The USDA, there's an announcement that they might step in and do this subsidy program for U.S. farmers because these soybean farmers are, they're getting hurt a little bit by the trade wars and China not buying. Brazil has displaced a lot of that U.S. product on the world market, especially for China. So, that might be a story that doesn't change anytime soon.
Mm-hmm.
It seems like China is pretty done with U.S. soybeans. So it would have to be, a specifically carved out deal within the trade agreement to come back into the U.S. soybean market. But U.S. soybeans still can't compete with the prices that Brazil is giving. Whereas wheat, we've become competitive again with those Black Sea exports, with Australia, with India. So that's part of the reason why these importers are taking in U.S. product again.
Is the U.S. dollar story a potential headwind here if the dollar goes higher, which we are obviously positioned for? Would that kind of, in the short term, it probably doesn't stop?
Yeah, in the short term, it doesn't.
Yeah.
It's really on market conditions more than the dollar, but the dollar is something that's like I see as a secondary factor.
Yeah.
When you get big moves in the dollar down, you usually see commodities get a lift.
Mm-hmm.
You get, big moves up, commodities usually take a leg down, and that's because all these commodities are priced in U.S. dollar, oil, wheat, soybeans, gold, everything.
Okay. So you probably attribute the dollar move to what's happening in oil.
Yeah, definitely.
I know there was some Middle East stuff today. There were like some missiles from Houthis somewhere, Yemen, something like that. I know that stuff is still brewing, but you think that move today is just kind of dollar weakness?
Some of it. There was a Ukrainian drone strike on a Russia oil refinery a couple days ago. And that looks like it actually inflicted some considerable damage. So Russia's exports are looking to fall a little bit. So the geopolitical premium is still there.
Yeah.
Especially when you look at U.S. and global inventories have been building, and OPEC's expected to gradually continue their production increases.
Uh-huh.
So, I mean, I'm still in the iron condor for oil, and it's been working out really well. I'm probably going to take it off soon, but I got it between 60 and 67.5.
Nice.
And, you know, we just been slinging around 64, 65, 63, so.
Love to see it. Yeah, it's been pretty range bound, even though we've had bouts of realized volatility for sure. But that 60 floor has been a pretty nice stable floor that hasn't been penetrated for a while, since June really.
Yeah.
But yeah, I like the dollar weakness, maybe funneling into this wheat rally, especially with your first slide showing all the orders and commitments coming in.
Could call it a hedge for your long dollar.
Certainly could. But yeah, I've been long wheat for 53 days, which is.
And you're getting bailed out today, kind of.
Yeah.
I mean, you're getting some money back.
Bailed out.
Yeah.
Ooh.
There we go. Money.
Yeah, I actually did make an adjustment. I had the 595 short call against my long option. So I own the 560 November call, 66 days out. I had the 595 short 10 days out that was worthless. So I rolled into the 580. So I moved it down and out to the 38 day and picked up 125 bucks. So my basis on this is like $800. But yeah, if it rallies, we'll be just fine. But just wanted to do something into this little rally here.
Mm-hmm.
You know, I'm not sure if this is a sign of farmers being in distress right now, but the farmer in back of me, he baled like all of his grass to turn into hay, and he set up like this huge tent. I'm like, what is this guy doing? Okay. And Saturday, there was music playing, like really loud music. I'm like, what's that music? And then it's like 11 o'clock, it's still going. 12 o'clock, it's still going. 1 o'clock, it's still going. And I like walk down the street a little bit, and I see like there's a wedding going on there. This tent is still up today. So I'm like, is this farmer now hosting wedding events in his field?
Oh, maybe that's a sign that the yield isn't good, or
Gotta offset.
prices are too low.
Do weddings on a farm field.
Oh.
For pennies on the dollar.
Yeah.
Could be a family thing.
Yeah, it could be. I'm not sure if it was a one-off, but I'm
Yeah.
like, is he now hosting?
Yeah.
weddings?
Okay.
That'd be wild.
Yeah.
That would be something. But was the music good at least?
I heard some Blink 182.
Oh.
Okay. So it wasn't a live band.
At first, I'm like, oh, teenagers are having a house party somewhere. And then I
Nice.
heard Blink 182. I'm like, teenagers don't listen to
No.
Blink.
They don't even know who Blink 182 is.
No.
That's the crazy thing.
Right.
They'll be at Riot Fest.
Yeah. Yeah.
It's wild.
Riot Fest this weekend. Gonna be fun.
Ride Fest is definitely like a millennial thing.
Oh,
It's
yeah.
the Unk. It's the Unk show.
Fest.
It's the Unk Fest.
Yeah.
Unk and Auntie Fest.
I mean, they've got Weird Al Yankovic there. That's when you know.
That's when you know.
Yeah.
Oh,
be great.
Amish Paradise.
Yeah.
Good one.
Classic.
Great.
Classic.
Absolute classic.
Yeah. Weezer.
Yeah, Weezer.
We saw Weezer in London.
Seeing him again.
Yeah. That was fun.
Jack White.
Jack White. Yeah.
Beautiful.
Yes.
So are you? Did you get in?
I did. I sold a put spread in wheat. In I went a little shorter dated. I went in the 30 day.
Yeah.
38 day. 520, 510.
Perfect. So yeah, that's $170 almost, risking 330.
Yes.
I'm in the longer term diagonal spread, long the 560, short the 580.
Okay.
So looking for a bigger move there, but still plenty of time. I remember placing that trade, and I was like, this long option has like 100 days on it. So
just let it marinate in your portfolio.
Exactly. So yeah, we'll see what happens, but definitely looking for a rally. And I agree with everything Thomas said here. I think if you get a move above this resistance point, maybe you see a gap higher, some shorts covering, which adds to the pressure of the upside. That would be great for all of us.
Yes. We had somebody ask about lean hogs as well. Or was it live cattle? LE.
Yeah, I mean, the hogs have been doing good. Live cattle had a dip and then it got bought up, but we're still not back at the highs. That screw worm thing, it's still going on from what I've seen.
Okay.
So USDA doing a lot of stuff with Mexico to try to get this under control. But, you know, a lot of it, I think, has been priced in. I think this recent dip that you've seen is all of those logs, you know, all the way back from the whole year, essentially.
Yeah.
Taking some profit. But we're rebuilding, and, you know, we're holding some key levels. So I'm going to look for like something back above 240 before getting back into live cattle, because I've had a few trades. They've all been good on it this year. And here we're kind of in the middle of this recent high-low range that we've carved out. So I want to see it reestablish the trend before I get long again.
Okay.
Hogs, I have not looked at much hog stuff lately. I mean, I'm assuming the supply is you know, helping that move here, but really strong, and seasonally not the time you usually see it at.
Yeah, it's turkey time coming up. I mean, like, you know, we're going birds.
Right.
No hogs.
I mean, I wish there was turkey futures.
Yeah, that would be interesting.
I mean, you do have your holiday ham.
That's true.
I would say that's getting more popular than the traditional turkey.
I don't know, turkey.
You know, we still do a whole chicken in my house because I'm not a fan of turkey. It's too easy to dry out.
It's just like,
it's hard to make a good turkey.
It is.
It's much easier to make a good chicken. A little beer can chicken, just toss a little beer in there, let that thing just evaporate.
We usually do a turkey breast so that everybody can have like one little piece, you know, like so you do the holiday thing, you know.
Yeah. And ham's easy too. You just get a pineapple, just throw that pineapple on there.
Well, we go.
Wait, 7-Up, right, or something like that.
Something, yeah.
7-Up.
We do a like lasagna too, sausage and peppers. Make it a little Italian. Have the little tiny little bite of turkey.
As one must.
Yes.
So yeah, turkey. Who needs turkey futures?
No.
Beautiful.
Yes.
Yeah.
Good stuff.
Love to see it. Would love to see wheat rip higher. And we will be strapped in for it. All right, jumping over to the YouTube chat now. Again, if you want to join us there, we are streaming live on the Tasty Live channel. James Bond, happy pre-hump day.
Woo!
Quite literally. Great haircut, Thomas.
Yes.
What are your thoughts on MCL? Are we just looking at a range? If we want to trade crude oil and not the futures, what else would you trade? XLE? Certainly could. USO isn't something we normally trade.
I haven't really looked at XLE in quite some time.
You could trade some of the majors too, like Exxon or BP.
Yeah, Chevron. I mean, there's a bunch of them that have pretty good liquidity. There's XOP2 if you want to do more of the explorers.
Producers, yeah. What expiration are you in for your CL Iron Condor? Are you the 30-day or
30 days out right now? So, you know, I'm going to take that off soon or maybe roll it.
Yeah, I mean, vol isn't like super high there.
Yeah, it's come down a bit from the 20s. I think we're high teens.
Yeah, if you're doing defined risk, CL, larger contract, you could go to MCL if you're looking for undefined risk. $700 in buying power for a strangle. Just threw on like the 60-70 strangle, collecting $1.20 over 30 days. Not too crazy, but I've just been buying the micro crude contract on dips closer to 60.
Yeah.
But yeah, if you want to trade this range, it's certainly been range bound. But I like Thomas's strikes. The 60, 67.5 covers the recent range.
There we go.
You just do the...
I did a 60, 69, and then I went 1 point wide. So small little... I did a 30-cent credit, so it's $300, $700 risk.
Yeah.
But I did it, you know, my risk is below 60 and above, you know, 70, 69.30.
Yeah.
So
Which is the recent range for the last 2 months.
Yeah. Oil's been a great trade.
Yeah.
Pretty much, I mean, we've had some short-term volatility, but we've stayed, you know, 60 to 70 basically, for the last year or so.
Yeah. So looking back at this TLT Zebra, I'm actually going to buy back this short put for 9 cents, just in case.
Yeah, you were going no cuts.
Yeah.
I
was going TLT sell off, and it has mooned. But I placed it when it was up here at 90 because my strikes are at 90, 89. I just bought back the 89 short put for 9 cents. So I now just have 2 of the 90 puts on, 40 cents out of the money. If you see a adverse reaction tomorrow, if you get a drop down to 89 or below, this trade will be just fine. So that's what I'm playing for. Risking 60 cents to potentially make back 200 on a 1-point sell-off.
I know that 25 basis points is basically baked in right now. The probability of a 50 basis point has come down significantly. It's only at about a 3%, 4%-ish shot at that, which, is obviously a very low chance of that. You think anything moved? I think the narrative in the news cycle has kind of talked about the change in projections going out to 2026 being kind of the market mover event. We've already priced the 25 basis points in, or at least we can say we all know that it's coming. You think Powell does anything that changes any of that projection? Like, you think it seems like it's very the market's very gung-ho.
Yeah.
It seems like. You think he does something to kind of tamper down the expectations, or he just does data-dependent status quo again?
I mean, I think the risk is going to be from the press conference and not the move itself, unless, of course, we get no cut or 50.
Yes.
Which
would be way outside.
Powell will come out, justify why. Keep saying we're data dependent. We've seen some underlying weakness in the labor market. Inflation has, been tame.
Yeah.
They've moved past the tariff-induced, one-time bump that they've been saying was going to happen.
Mm-hmm.
Oh no, I think if he comes out with a slightly less dovish commentary the markets are expecting, so I think this one we also get an SEP, a summary of economic projections. So you're going to be looking at the dot plot. You're going to be looking at, GDP expectations, inflation. So there's going to be some things to dig into.
Yeah.
I think this is going to be one where you see the initial move reverses maybe.
Okay.
Or an initial reaction doesn't get follow through. So maybe something like that. I'm not really exposed much to the equity market going into it.
Yeah.
So, I'm going to base my trades on what is said, in which direction we end up by the end of the day, not the initial reaction.
Okay. I feel that. I figure we got to get some tweets, too. We're going to have some Trump tweets.
Yeah.
I don't know if 25 is enough to silence him.
Not enough for them.
Yeah, I don't think so. So I'm sure we're going to get some commentary there. Maybe that's another market moving event. I should have added that to my list of things this week.
Yeah.
The anticipation
of some tweets,
of some truths.
Yeah.
Some truths.
Yeah, I agree. I think we get 25, and then if there's a move that implies more cuts sooner in a reactionary way, like an emergency type way, I think that's where you get the sell-off.
Mm-hmm.
But yeah, I don't think they're going to do 50. I mean, they're not. They can't do 50. They would shock the market if they did 50, which they're not.
Yeah.
It's not their objective.
Yeah.
So yeah, I think you get 25, and then maybe the narrative is digested in a 50 basis point way, even though they're getting 25.
Yeah.
Natty gas. Got any interest in that? Have you been looking at it? It's having a move today, a little bit of a wide range there. I know we've been dead wrong, horrible in our trades.
It's like the worst thing I've ever. I might as well turn my up.
Going into the winter.
Yeah.
Seasonality, is there anything to it here?
Yeah, I mean, I've held through. I've been in this position for like a month. It's a short put spread with the short at 3.
Okay.
So we're 9 cents above it about
There we
now.
go.
It's. I'm only 9 days to expiration on it, so I'm hoping there's a move higher in the next day or two, and I can get out.
Yeah.
With a decent profit before going down to the wire on it.
Mm-hmm.
The weather forecasting through the end of the month is actually pretty supportive for bulls right now, and I think that's why we've come back above 3.
We got 70s and 80s all week today, or this week.
Yeah.
Yeah.
I mean, today's like 70 something.
It's like the corn sweat's back.
Yeah.
Yeah, so I mean, right now the weather's working out for it, but it's still, inventories have built higher than average, through that end to August, the past few weeks. That's put some pressure on prices. Europe is going to have to start getting a lot more gas in the next couple months. So we're going to have to see this. I'm going to be watching the spread between the Dutch futures and the U.S. price.
Okay.
And that still hasn't, come up much. It's still trading only about $8 a premium in the European price versus the U.S. price. That's down from where we were in August, around, a good 70, 80 cents higher.
Mm-hmm.
The U.S. premium versus the Asian market is getting a little bit more of a lift, but not enough to really, ramp up exports to 100% and where you're expecting it to stay there.
So weak dollar isn't really at play here.
I mean,
as much.
Not as much, I don't think. But my view is that we stay above 3. That's the way I'm trading it.
Mm-hmm.
We've moved a lot higher off these August levels. We were trading as low as 2.6. So I mean, we're 40, 50 cents above that right now.
Yeah.
So we got to take out the high from early September, right around 320. And if we could get back above that, I think then we start eating into some of these levels that we traded in early July. And I think the winter, moving into the winter now in a couple months can help us do that. So, I mean, if I had to pick a direction, I was putting on a new trade right now, I'd be long more than short.
Okay. Okay.
Fair.
But expect that volatility. Today's a pretty wide range.
Oh, yeah.
Yeah, it's a huge day.
yeah.
I don't know if there was something that happened today, like a report or something like that, because this is
a big range, the biggest range I can see visually since July.
And it just moved at right 30 minutes before we came on the show or so. Got up to 3-1, 3-1-2. Chi-town.
Yeah,
It's our
crazy
area
range there.
code.
Huh?
That's our area code.
No, I know.
312.
I know.
Chi-town.
I know what you're doing there. 312. It's also a beer.
Yes, it is. Quite delightful beer.
Lovely beer.
Lovely beer.
Shout out Goose Island. Ooh. A few of us are still managing Oracle after earnings. I have a 300 straddle. It's right there in the center. If vol expands due to the VIX or from that move, does it make sense to just keep managing the trade indefinitely or cut losses at 3,500?
Do we know the expiration? Are they? 'Cause if you got September, you got an absolute bailout here.
Yeah. I assume they're in October. But, I mean, the premium is still there. 55% is nothing to scoff at. If you're rolling from September to October, you're picking up $2,000 per contract. If you're rolling from October to November, you're picking up $1,100 per contract if you just kept the same thing. So it's a tough question, but if you have a larger account size and you want to stay in this thing, then you totally could. But there's also nothing wrong with exiting on this perfect move for that position, at least right now, and going somewhere else.
Yeah. You could, if you have the straddle and it's a little bit too hefty of a position or a little too much risk, maybe you take it and roll it to an out of the money strangle or do that in combination with rolling out to November if you're in October and you want to give yourself more time. That'll move where your risk is a little bit further out on the curve. So that's another option. But yeah, this was 40, 50 points higher. So if you've held through this, you got back a couple G's, comma, as the kids would say.
It's a good move down for sure.
Yes.
Long dollar, how would you trade that with futures, or do you only trade it with Forex? So you can look at currency pairs against the US dollar, but the TastyFX embedded platform is certainly the easiest way to get super small and have a continuous position that you don't have to manage.
The euro is one of the bigger movers of the group. It also has relatively high implied volatility. I've been trading it kind of range bound between this 119, 115-ish range. So I've had some iron condors here. If you want to just lean directionally, you could look at a call spread here. I already have a position on here in the 52-day. So I am, I have some short delta here as well, along with just the currency pairs themselves. But yeah, this is a move. I haven't looked at any of the other ones really. Like the pound is moving higher as well. The dollar is weak. Everything else is strong. So pick your poison. But I think, from a liquidity standpoint, options specifically, I would look at the euro, 6E.
Yeah. Some people in the chat talking about UUP as well. UUP has super low implied volatility, but
UUP?
UUP.
It's like the Invesco.
The dollar. Yeah.
So yeah, there's nothing really spread off here. I don't think I would sell an option against it. If you want to just buy a call, fine.
Yeah.
But it's not projected to move all that much.
Let's see what this basket is.
This chart looks like it's moving, but it's only.
Is this an actual
cents.
ETF, or is it a VIX type, it runs off of DXY or something like that? Let me see. UUP. So it has government agency portfolio. I don't even know what that means. I know that it does track the dollar. I don't know if it's actually, I see they have 16% in T-bills. Let's see, that's CLTL.
Yeah. It's.
I think if you're looking to do something, either use the FX products directly, because that's pretty clean exposure, or you go and do something in the euro or British pound.
Yeah.
Too.
Any plays in live cattle? We talked about it briefly, but.
Yeah, I'm waiting. If we go back above 240, I'll get long. Maybe if we drop below this recent swing low, 228, maybe I'll get short.
Love it. What stock or ETF is liquid for commodities? FCX, MOS, DBA?
Are we talking gold and silver?
Are we talking stocks? Because for gold, it would be GLD for gold, SLB for silver.
Yeah, for the ETFs,
NEM is one of the miners. GDX, if you want a GDX and GDXJ are the two minor ETFs. Gold miners, not minor.
Yeah. They're definitely products. There's just not much volume there. DBA.
GLD is
GLD is fine. SLB is fine. But DBA, only 75K contracts, stock contracts.
Yeah.
FCX is better, 4 million. Freeport.
Yeah.
And then MOS, 1 million stock. So.
The problem with the ETFs that aggregate commodities is there's already so many good products. For oil, there's USO. For gold, there's GLD. There's already so many good things where you don't have to be in a basket of them, maybe. So.
Yeah. Or you just use the futures. The futures are liquid. You can make them small, sell spread.
Mm-hmm. Micron, 170, 175 call ratio.
This stock, I don't think I've traded it a ton. I don't know if my win percentage is exceptionally low to either direction.
I mean,
what are they thinking? What are they putting me in?
Look at that thing.
I know, it's straight up.
Call ratio 170, 175 in October. I would rather give up some of that credit and move it to a 170, 180.
Yeah.
Make it wider, especially if you're bullish. The 5-point wide for higher credit is more bearish. It's kind of just like selling the short put or the short call. With a 10-point wide where you're picking up $2, or even a 15-point wide where you're picking up 50 cents, that's much more bullish of a setup because you get your profit from the spread moving in the money.
Yeah. 10-point wide strikes above 190. I was looking to just cut some buying power and buy a wing, but you got to kind of move the ratio a little bit closer if you're going to do that, just because the 10, going from 200 to 210, you basically use the same amount as a naked position.
Yeah.
I don't know if I want to step in front of that train right now.
Moderna, what's going on with that? mRNA, big rally today.
That's a unlovable chart right there.
Agreed.
No more jabs.
No more jabs.
As they
Jab
say.
free. Jab free since 2023. Let's see. What do we got?
I mean, you could sell some puts there. $1.40, 24 strike, $800 in buying power. It's not top of my list.
What do you think of BLSH? Bullish? I don't even know. I've never heard of this thing.
Isn't this another broker?
I don't know.
Yeah.
They have earnings tomorrow after the close. Hard to borrow.
Cash secured.
Don't like any of this.
Yeah, I don't want any of that.
Don't like it. But yeah, it's tough because it's not that liquid in the options market. And there's not much going on here.
No, you can't do that.
Baidu, Iron Condor.
China stocks are flying.
Yeah, I was in an Iron Condor on Baba and trying to get out of that.
Yeah, that's some pain there. These things have just gone nuts.
Yeah. Baba, or Baidu. Iron Condor October, 115, 110 put spread, 130, 135 call spread.
October.
Mm-hmm.
So you're right. You're right inside the expected move, basically a 50-50 shot, a little bit less.
Yeah. Certainly a chicken iron condor.
Yeah.
By definition, collecting about half the width of the spread, a little more, which is why the pop is under 50% because you're within the expected move.
Yeah.
But I don't hate it if you think, if you plan on holding this for a couple weeks and you get a range-bound move.
Tons of call skew.
Yeah.
Yeah, I don't know. I don't know if I want to step in front of that train. Maybe been doing a lot of broken wing butterflies here. Let's see if we can do something like 130, 135, 140, 150, 5 by 10 for a small credit.
Certainly could.
Let's see if I can get like a small. This is my little engagement trade.
There you go. A little 5-cent credit.
Yeah.
Wow.
I don't think I'm going to get. I think it's going to be a debit, but.
Yeah.
Let's see if I can do a penny.
Give it to him for a penny. Come on.
Oh, it's going to be a debit.
Come
It's
on.
going to be like a 2-cent debit.
We'll
Nope.
see. Last one here. What are we doing with this target call diagonal? So I have the November 95.
Can't even do a 3-cent debit.
I have the 95-105 call diagonal spread, long November, short October. October is basically worthless. There's not much to do because like rolling down 5 points for 20 cents, I'd rather just not have the 20 cents. So this one is a wait and see. Down about 50%, a couple $100, but we're not that far away from the long strike. If you get a move back to 95, this option goes from $4 to $8. So wait and see. A lot of time. That's it.
Cool.
Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Thomas is at FX Westwater. We are all deeply long wheat, and you've got
small long wheat.
Yeah.
Not deeply long. We're not. It's a
He's
little.
got the Ags Fecta, wheat, corn, soybeans. Couple of oil trades there as well. But yeah, we'll post all these trades to the Tasty Trade follow page. But stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. Click the link at the top of the YouTube chat. Get your cherry picks today for free. But yeah, we'll be back same time, same place, 11 a.m. Central tomorrow. And we'll see you then.
Peace.
Having trouble understanding what your trader buddies are saying? Here's what a scalp is. We love those quick profits. A scalp is a trade opened and then closed in a short period of time, usually minutes or hours. A scalp is usually done for a small profit and is typically a very directional position. Scalps are most commonly done with future products because of the liquidity and added leverage they provide. But you gotta be careful. It's not always a profit. Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9.
Yeah.
It's same thing. It was right there. Right when we started.
He was my friend first, clearly. Met at work?
Yeah, at Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer...
Say it.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
What's going on, everybody, and welcome back to Risk and Reward. Today's Thursday, a little bit of some post-FOMC action. We'll touch on all the news, more all-time highs, but what's new? What's going on, guys?
Oh, man. Yeah, feeling good. Happy to be here. Happy to be here during market hours, as always. I got Novo Nordisk finally starting to gap fill a little bit for me today, so I'm a happy camper in that regard. They had some kind of bearish news yesterday and moved up, and then some bullish news today and moves them up even further. We're chilling at all-time highs.
Any earnings?
StubHub IPO was a flop. What else is going on? I'm just rattling off all the talking points here.
We got StubHub. We got
Ticketmaster's getting sued or suing somebody. And I'm not sure what's going on with that. But holistically, it's been an entertaining week.
It has been.
And being as obscenely long as I always am, it's been a good week for me.
I know it's feeling good right
Yesterday was hilarious. Which by the way, we drilled, and Bob Sala, if you're here, we drilled the Fed prediction, which was that we were going to get the 25-point cut, but everybody was going to be too hyped that things would sell off.
Right.
We sold off like 0.5%, and then immediately that dip just got bought back up, and we pretended like nothing happened.
I mean, I can't even believe where we're sitting right now after that sell-off. I mean, not only was the afternoon move that was put into the close such a dirty move, I mean, the gap up and then the continuation into the next day, I mean, it was just almost laughable at that point. I mean, I think that just paints the perfect picture for the overall market over the last year or so.
No, yeah, I was genuinely blown away this morning when we opened. I mean, my eyes widened for real. I was like, there is no way we're going to open this far up right now. Yeah, but here we are. The market does not care. The market cares not about frivolous things like rate cuts. We care about things like what Peter Thiel is buying.
We care about vibes, right?
We care about vibes, yes.
Big deal. What's going on? Chase, Tony. I know, Tony, you previously you were mentioning that Active Trader 2 or version 2. We'll touch on that here in a little bit.
You've been using the heck out of that Active Trader recently.
It's been pretty fun.
I see you over there doing it.
I mean, it's pretty cool. Like, having that order chain is pretty cool. Sometimes, even if you're not doing anything, it's really interesting just to see where these fat orders are being placed in the market, kind of watching them get executed and filled too. It's just very interesting. So I think it's a nice tool to stay engaged and just kind of get a grasp on, how other market participants are positioning themselves in the market. So we'll get into all the details.
Big deal. Is that to say that Errol has more drip than me right now? Is that what you're trying to convey right here? You are looking sharp today. You got
brother, I appreciate that.
Yeah.
Funny, I was actually just had the T-shirt on, and before I left, I put this on. I got an opinion. I was like, how does this look?
Yeah.
I think this brings it together a little bit more. So we're rocking.
I think it rocks. You need fashion's all about layers, and I can't really speak to it too much, but I know layers are important. Think about somebody on a red carpet. They got layers on.
We can layer soon. We can layer soon, right?
That's true.
In Florida, no such thing.
I ran into the same thing when I was living in Texas. Exactly. Yeah, it's really hard to dress in Texas because it's never cold outside. But when it's cold outside, you can put that shit on.
Wisconsin, right?
Ohio.
Yeah. Ohio. So it was a little chilly over there. You guys got the seasons.
Yeah. I had my Midwest exposure, but I moved to Texas when I was 13, 14. So it's my blood is thinned back out. I've lost all that cold tolerance. That's for sure.
Oh yeah.
But are you guys live or are you member? Wait, what? Oh, we are live. This is real, guys. this ain't no replay. This that real live on air stuff.
Oh, are you saying is this AI or live?
Oh, are we AI?
No.
I'm programmed to not be able to answer that question.
Yeah, what was it? I think whenever you test something, if it's AI, no, you can't even do that nowadays because of the machine learning and how advanced AI is.
Ask it to make a bomb.
That is true. You could do that. What I was thinking of was, it's like, yo, grab a fork right now and drop it, and like you can tell if it's AI or not. But now I feel like AI can rebuttal that a little.
I know the thing used to be that AI, and they fixed this now, but it couldn't make a picture of a full wine glass. Have you ever seen that?
I heard something about that on Twitter before.
Yeah, there was two things. It couldn't do a full glass of wine, like full to the brim and spilling over, and it also for a while couldn't do specific times on a clock because it's all pattern recognition, and any picture of a clock out there is just like 3 p.m. or whatever. So if you asked to do 12:27 on a clock, it wasn't able to do that.
Breaking it.
Yeah, and then there's no pictures of full overflowing glasses of wine, so nobody could do it. Is the red mustache fake? Is the blonde hair fake?
The mustache is AI.
The mustache is AI. No, this is all real, all natural.
To be real though, to have a very thick mustache, it's very well groomed.
Thank you.
Like for having a lot, it's put together.
Thank you. I do try. My hair lady, every time I go get a haircut, she trims it up for me, which is a
what
big,
does that look like,
big
some
plus.
scissors?
Yeah, she'll go grabs a comb and we'll do a buzzer across just the front parts, and then she goes scissors on the sides and stuff.
I gotta use clippers on the stash. That's
But my personal trimming method is not that advanced.
It's actually.
What if right now I was like, you got me?
I'd walk out of here right now.
Yeah, all the facial hair is red. I don't know why, but you get what you get. I used to be a little more strawberry blonde in the head, but not so much anymore.
Is one of your parents redhead or have the genes?
No, my dad had blonde hair just like this until he was older, and then which he still thinks he has blonde hair. Dad, if you're watching,
still thinks
I love you. I know what it says in your license. I don't mean to I don't mean to be. It says blonde hair on his license, and so that's always his point of reference. He's like, look, my license. It says blonde.
Hey, I'm not gonna lie. Whenever I want some facts, I ask for the ID too. So I think it's valid.
It's true. It's true.
In the eyes of the law.
But yeah, the red hair. I don't know where it came from. There's no history of redheadedness going on in the family.
When you have kids, and you have and one of your kids is ginger, you know it's somewhere in the blood.
That's true. That's true. I do know my dad's brother was born with red hair, but it like quickly went away and was blonde by the time he was like 6 or whatever.
Yeah, no, I was born with blonde too, and it just kind of went away.
Yeah.
I'm just kidding.
Yeah. Well, that's what happened.
Born with no blonde. No, we'll go ahead and jump into the
hair was
platform here,
blue.
do a little tour to market. Blue hair. It's like, yeah, sometimes my eyes look blue when you're looking at the light.
Yeah, it's a genetic abnormality. I'm kind of looking for somebody else that was born with blue hair so that we can bring this recessive trait into the world a little more.
Exactly. Got good genes.
Can't say that anymore. Canceled.
Okay. Go ahead and jump into the platform here. Do a little tour to market. NASDAQ ripping towards all-time highs, which makes me, we'll jump over to the other platform here. NASDAQ all-time highs.
You guys are seeing my goated ass portfolio right here.
Perfect time to do that, though.
I can get you NASDAQ.
1 minute, guys.
No, all good. NASDAQ ripping towards all-time highs right now, which is a little sad just because the vol is still a little dead. But look, market's at all-time highs. Things aren't making any sense to me right now. The market isn't a direct reflection of the economy either. So it lets me know. I've been saying this for the past month or so, but I think we got some vol creeping in the back door.
Yeah, VIX, man, we've just been, I was going to say stuck below 20, really stuck below like 17, 18.
This is literally what the options were trading or vol was at before I got into options. And I was like, what were you guys doing in 2017, 2018? Like, were you just twiddling your thumbs? Like, what do you do with a 15, 16 vol? But
you just get long over and over again. It's great. Exactly. I just get long.
I think that's the meta, though.
I get long 120 TTE and I wait, and then I do it again. I got 3 things expiring for max profit today on that strategy.
Right. Last time we got that vol expansion, early April. We keep talking about early April, but it feels like it was just yesterday, and we haven't been trading towards those levels since then. Do yourself a favor and fade the Russell. It'll always let you down when it looks most bullish every single time. I do appreciate consistency. So if the Russell's going to disappoint you every time, we appreciate some consistency in this world of chaos.
I have, I've been keeping up with this run that the Russell's been on. Obviously, small caps a little bit slower to recover than the rest of the market, and we actually are just now starting to surpass the highs that we set towards the end of 2024 in the Russell, which is a very different situation than the broader market. But yeah, the slow rotation into small caps is coming through right now. Yeah. Interesting situation with the Russell too. I'm interested to see how much further we will push through these December 24 highs. Given that we're just now beginning to break those, and the S&P 500. I mean, we've been reset to that level for 3 months now, and we are well beyond it. So yeah, interested to see how much this momentum can keep up. And obviously, the small caps are the first to go in times of uncertainty or weakness. So yeah, I mean, I think that logic might hold. Really, if we're going to come down, I think the Russell might move first.
Yeah.
2017 is when I started options instead of investing. Hell yeah.
2017 was a good era, a year after 2K16. Do yourself a favor, reminds me of photos of my dad from the 70s. Yeah, definitely that 70s vibe. So I thought about the stash before, and the stash used to be a little bit thicker, but when I looked in the mirror, who I saw? Eddie Murphy. I said, no, sir. I just think somebody with my pigment.
Shrek.
It's just Eddie Murphy. Like, you can't, and you have a little bit of a high top. I'm telling you, I know you can see it right now. That's exactly what I saw when I looked in the mirror. I got my Clippers.
I could see you're getting that. I think of Eddie Murphy as having a buzz with a lineup in my brain.
Oh, really? So I don't know why I have. There's so many different eras of Eddie Murphy.
It's true.
So I don't know what era you got in your head. But when I looked in the mirror, I saw Eddie Murphy because you have more of the coarse mustache, and it's like, and it just looks, Eddie Murphy for sure. Maybe Eddie Murphy for Halloween isn't a bad.
Oh yeah, you need to start prepping like now.
Right around the corner.
If you're gonna go authentic mustache.
I know. Let's go ahead and take a look at, what was it, Lennar. What was the ticker for?
Is it LENR?
LENR, it might be.
Len? LEN? LEN.
LEN. There we go. Oh, lean. LEN.
Lennar? I lived in a Lennar house for a long time in Texas. It was solid.
A Lennar house.
Had no complaints. Yeah, they're home builders is the thing.
I've just never heard someone, yeah, that's my builder.
I just happened to be familiar with it because we built that house, and it was like,
oh, really?
It was real involved. Like before we moved down and stuff, we were constantly making flights down like going to the model home and walking around our foundation and all that. But I just remember being very involved with Lennar. I remember our agent, Louise. She was very nice.
How was the process? Sometimes, dealing with home builders, I've noticed there's just been somewhere it's like, they'll get around certain things like, oh, that door shifted like half an inch to the right, and they're like, nobody sees that, right?
Well, yeah, no, I mean, it was pretty solid. You when you build and I guess you do this anytime you buy a house as well. You have an inspection and everything, but you have an inspection, but you go in and you put little pieces of masking tape all over the house on any imperfections that you can find, and then they circle back and fix them. So it was mostly just like little paint things and nail pops. We didn't have any doors or anything major like
I only
that.
bring that up because I remember my dad had some issues in the past, and I remember he was walking down the stairs, and he noticed the light that was at the bottom of the stairs was not directly in alignment with the staircase. It was shifted over to the left, and then noticed something else and it's like things you wouldn't notice unless you're the builder, and it's just like it's crazy that you're going to offer this product that you're selling that is probably the biggest purchase of anybody's life, and there's some hiccups, and you guys aren't going to take the extra time to fix it.
Well, yeah, it's interesting because usually the builders are really just aggregators of people who do the building. So it's like a bunch of independent construction companies work together. You have the foundation company and then the framing company, and your roofer is different, and you got your drywall guy and your carpet guy and your lighting guy and electricians. And so it's like a lot of the time they don't even know whose fault it was when things pop up like that. Did they put the stairs off 6 inches, or is it the light off 6 inches? Who even knows?
I'm not claiming that. I got people to feed. I'm not, is that, so, I mean, I get it. I get it. But no, Lennar's IV's there. I mean, just looking out into the 64 days, IV's there, nothing too attractive. Looking at that expected move, I mean, 97 cents of credit. Not too juicy right now. Again, we're playing with the VIX at 15. We got to get a little creative.
Big deal. Yeah, you're talking about Coming to America, which, yes, is a Eddie Murphy film from the 90s, as I recall.
Welcome to America. Welcome
to America, I think, was a movie more recent, if I'm not mistaken. I'm not a movie buff. There's like tiers to it, because I'll meet people and be like, what do you mean you haven't seen XYZ movie? But other people meet me and they feel the same way. So
I mean, that's me for I would say a lot of movies. I feel like I get that a lot. Like, how have you not seen that?
I feel like there's like a generational shift in movie consumption, just because there is so much more to consume now. I mean, like, I never sit down at home in the evening and watch a movie, but I will happily stream 2 hours of television or watch a 2 hour long documentary on YouTube or something. It's just, I don't know, little different.
I feel.
Why would you choose a Shirley Temple hairstyle and a Charlie Chaplin mustache? That's fine. I've never gotten that comp on the hair before. That's funny.
Is it red? Does it have a dash of red?
What, my hair?
Yeah.
I wouldn't say so.
I don't. Okay.
I think it's pretty much just blonde. A lot of red in this room. Might be reflecting around. I sure hope you two have seen Trading Places. I have not. There's a good example of a movie that I definitely should have seen by now, but I have not.
See.
Yeah, my dad did a good job of getting me to watch like a fair amount of classics. But
if Trading Places, if that guy was blonde and not brunette, that would literally be us right now. So instantly what I see. That's funny. Starbucks down on its butt right now. I've been getting hit pretty hard. Earnings after the bell, October 29th. We got another earnings season right around the corner.
I'm looking up a picture of Shirley Temple. Yeah, this is pretty freaking spot on. I'm not gonna lie.
Voted blonde. Let's see.
Hey, Shirley Temple had a whole team of dedicated stylists doing that hair. This is just me, so I'm gonna take that as a compliment.
Oh, okay. I can. I wasn't expecting that.
It's valid. Part's a little different, but hey, it works.
It's valid.
I want to talk some StubHub.
Yeah, absolutely. We can look at some StubHub.
Yeah, little stub action. This IPO was bad. First bad IPO like this that I can remember in some time. Just straight down into the earth off Stub? IPO. Yeah, Stub. Yeah, no options yet. It will be a few weeks on that probably, but yeah, just getting killed. Continues to move down today. I IPO'd at 25.35, I believe, was the starting price and has just worked down. Market is trying to price in what we're going to do with this company. I don't know what that 25.35 was pricing in as far as initial market cap to really decide if I think that was justified or not. But what I do know is that I go to lots of events, and StubHub has never once crossed my mind as a place to go buy a ticket. And there's just a lot of competition in this space now. I don't know. I mean, it feels like StubHub is legit 10 years late on this IPO.
Yeah, I mean, I don't know what their plans were, but whoever has some of those shares that would IPO'd at 25, they're definitely underwater right now for the next couple days until we turn around. Maybe,
yeah, I mean, maybe for the foreseeable future. I mean, this isn't like some kind of volatility event. It's just we are just working down.
It's price discovery right now.
It is.
We're trying to find the valuation of Stub right now.
It is.
Clearly, we IPO'd overvalued.
Yeah, and I'm shocked. I mean, I'm really shocked that you could IPO this high above where you should actually be at. I don't know who did their underwriting and all of this stuff, but this is some bad mispricing. I mean, 20% too high is considerable.
Well, I wonder if that came with any strategic decisions, knowing that we're going to get our first rate cut. You know when you were going to IPO, like, is there a coincidence on timing? Did you strategically do that when we were going to start cutting rates? Was that better for you? Like, I just wonder why now, too, especially. So a lot of questions. We'll see if Stub will rebound, though. Ticketmaster. What's that ticker for Ticketmaster?
Is Ticketmaster public? I'm not even sure.
I don't know who owns Ticketmaster.
I think Ticketmaster. Oh, is it Live Nation? Does Live Nation own Ticketmaster?
It may be. Taking a quick look at Oracle in the meantime. Oracle's been having a lot of volatility.
Yeah, Live Nation is the answer. LYV.
LYV. Take a look at that right after. Oracle. Let's see what some of these spreads are going for. Oracle only has $10 wide in the November cycle. But that will give us, I mean, that $5 wide at the expected move on the puts on Oracle isn't too bad.
Man,
getting over a half.
The puts on Oracle, that scares me too much. I think they're going to buy TikTok and go ballistic.
Oh my goodness. Is someone actually going to purchase TikTok?
Oh yeah, I mean, Polymarket's given a north of 80% chance.
Yeah, what are they saying over there? What are they pricing in?
Well, it's like north of 80% chance that Oracle buys it now. I'm kicking myself, too, because I don't have any money in a Polymarket account. But on the day when the news broke, there was a deal expected to close with Oracle in the next 30 to 45 days. They were pricing in a 71% chance of Oracle. And I was like, this makes no sense. We just learned that they're probably going to close a deal here very soon. But I did not put my money where my mouth was. And by the next day, it shot up like another 15%. So, you know, it happens.
Ticketmaster was what again?
LYV, which is Live Nation, the parent company.
Live Nation. Yeah, no, they're going ham. They've been doing amazing.
Yeah, Live Nation, hate dealing with this company as a consumer. Love it as an investor. Ticketmaster has just always had a whole slew of problems. There are new regulations now that are requiring all these ticket people to show the price, including fees, on the forefront. That was always my biggest problem with Ticketmaster. It's really more of just a principled stance now because they were the worst about that. Like Ticketmaster, I mean, it was like you would get to check out and they'd be like, oh, $60 a ticket in fees. And it's like, what in the hell are you talking about?
It sounds like those gas fees with Ethereum on. What are we doing?
Yeah, so it's really just more of a principle thing now because they were always the worst in that regard. However, as an investor and looking at the future of this company, I really, really love Live Nation. Ticketmaster is only growing. Live event space in America in general is only growing. And for some reason, and I fall victim to this too, but when people think about Ticketmaster or Live Nation, you tend to think about concerts first. But the reality is that they're doing way more money on sports all the time. And Ticketmaster is the exclusive ticket provider for lots of different sports teams and leagues, entire leagues. So
as in purchasing, for example, like if I wanted to go to one of the basketball games or football games next week, I can go and purchase my ticket on Ticketmaster. So that makes sense for the increase of volume in sports, right? Because of the frequency of so many different sports events.
Yeah, I mean, sports.
I would assume there's a lot less concerts.
Are growing as a whole, and live entertainment is growing as a whole. I was just reading a pretty interesting interview with the CEO of Live Nation, and he was talking about how now post-COVID, we've actually seen a bigger boom in concerts, like since COVID ended and people are able to do these things again, and that he feels, and I think perhaps rightfully so, that humans have just a generally greater desire to get out and do things in large groups and have these shared experiences now than ever before.
100%. Have you heard about correct me if I'm wrong, but the third place or a third spot, or it's like a place where people want to go and hang out outside of where they live, outside of their workplace. It's called like a third place or a third spot. And to your point, we're craving those things. I don't know if you've noticed those communities that are being built, in-person communities in cities, and it's like you're seeing these people gather people and see a lot of success with whatever it is that they're building. For example, I mean, I've seen a lot out here in Chicago. What's her name? But she built the Pilates club, and that thing like absolutely blew up. There's somebody that built another club. I mean, the run clubs, not to mention the run clubs in all the city. I think in-person gatherings, no matter what the industry or topic is, I mean, we're craving that.
Yeah,
everyone's flocking to it.
One that I would float to is East Bank Club, which is a gym and much larger hangout sort of space, which is very close to my apartment. These memberships are $275 a month for an individual, and that place is like packed every single time I see it. And it's mostly people our age, which is fascinating to me because I could not afford $275 a month gym membership right now. I mean, I could make it happen.
I mean, you could.
But I would have to make some sacrifices for it. And so I think that all of those other people are making those sacrifices for it because of exactly what we're talking about, because it can exist as a third place, because it's not just a gym. They got restaurants and cafes and tennis courts and golf simulators and everything else. And it's a cool place to go hang out with, you know, people your age, like-minded people. And I think there is just generally a much greater desire for that happening right now.
No, 100%.
Live Nation also, they are building a whole entertainment district in go outside. In Utah, Live Nation is building an entire entertainment district in Salt Lake City that is going to be like owned entirely by Live Nation, where they want to have, they said 100 to 200 events a year there.
Where's that going to be at?
Salt Lake City, Utah.
Okay, Utah.
So I think that that's a very interesting angle. There's no ticket company that's really tried that before. And so that's going to all of a sudden vertically integrate.
I'm sorry, I might have missed something. You said Ticketmaster.
Yeah, Live Nation.
Live Nation might want build out their own venue rather than leasing out or renting other venues that are convenient.
Yeah, they're working on it, but it's not just a venue. Like it's a whole entertainment district, like bars, restaurants, two different venues, one large and one small.
Oh, so they're also trying to help the city.
Yeah, exactly.
They're going to boost the economy.
Correct. Yeah, Salt Lake loves that they're coming, but yeah, it's going to do a lot
Lake's
to.
Pretty small.
Yeah.
It surprised me it's beautiful when I went out there.
It is gorgeous.
It was a lot smaller city than I would have anticipated.
Yeah, love Salt Lake. It's the cleanest city I've ever been to in my life. It's crazy. So easy to get around. I love that grid system where the streets are just like. Did you remember that?
Not too familiar with it. I went out there for a soccer game in college one time, so we just kind of went to the nearby food spots.
Yeah. The streets in downtown Salt Lake City are, I don't know which is which way, but say the ones horizontal are letters A to Z, and then the ones vertical are numbers.
Okay.
And so it's like a whole just coordinate grid. And if you ever want to like link up with your friends, you'd say, where are you at? And they'd be like, I'm at B4.
I'm off of Michigan, and like we're playing chess.
Yeah, exactly.
Right.
Exactly.
Literally,
it's
set up like a chessboard.
Yeah, it's
E4,
just.
meet me around the block.
yeah, exactly.
Yo, don't go by E4.
Yeah, so that made it really easy to navigate. I mean, even like you just drop in and in 10 minutes, you're like, oh, okay, well, you know, I'm on D and I see C is that way and we need to get to F. So let's go over this way. Yeah. Love Salt Lake, but I just think that's a very interesting thing for Live Nation. There's no ticket company that has vertically integrated like their events before. So I think that's a very interesting angle, and they're able to build it all out from the ground up, including hotels and lodging and all of the other things that people might need to make sure that people can comfortably get in and out of the city for events and get to these venues. So that's really, I'm really bullish on that.
I think that's going to be even good for the consumer. Like, you know, if they're helping control some of the hotels, making sure things are convenient for people that are coming near this area for something they're hosting on their venue, I would love a great experience if I'm traveling to another venue. I'd love for things to be intact.
Oh yeah, and also you know that there's enough accommodations, so they're probably able to keep down the price gouging and all of those other things that can go into.
That's not a bad idea. Yeah. Almost like creating your little own mini economy. Literally.
Correct. Yeah, I mean that is literally what they're doing, and I think it's interesting they have the power and the money to do that, and I think that it's going to do really good things for them moving forward.
Yeah. NVIDIA, I see some NVIDIA talk. Real quick, let's go over some of these positions. We skimmed it down a little bit. Google absolutely ripping to the upside. Both those contracts in the money right now. QQQ, same story over here. RKT, this one's been working for a few weeks now, to be honest, guys. We might have nobody on the other side of that trade. And then SPY. SPY, we're going to look to manage and then reposition or redeploy. This was one we've had on, I would say, most recent, maybe by the end of last week. But we don't have NVIDIA on right now. NVIDIA was one, I believe, was closed at about break even. We made a little bit of profit on there. But NVIDIA is just a beast. Are you interested in anything NVIDIA's been up to? Or has the tariff kind of noise worn off?
The tariffs don't worry me. The China stuff does.
Yeah. In what way? What do you mean?
They've kind of been at ends with China, and I know that China just said NVIDIA can't Well, it's worrisome to me. I mean, NVIDIA, obviously America is their predominant market, but China has a billion freaking people there, and they need chips too. But NVIDIA just worked for a long time to develop a GPU chip for AI development specifically for China, meeting their regulations, and then they finished it, and then China said, you can't import that one either. And so that's all a little bit nebulous and strange to me, but I don't know. NVIDIA is one of these names where, like, I guess I get analysis paralysis a little bit. I would put it in the same category as Palantir, where just every time I look at NVIDIA, I'm like, can this really go higher? Like, can this go higher quickly? I guess I should say, in an options trading context. And most of the time, I decide no, and most of the time, I am wrong. But it's just really hard to get involved with. Yeah, I don't know. I find myself gravitating towards mid caps, kind of just in general, as of late.
Would you like the volatility of those a little bit better, or what?
I wouldn't even say it's necessarily a volatility situation. I like good liquidity, and I like things that are going to stay out of the news cycle at the same time, which is sort of part of it. Because with NVIDIA, NVIDIA, while most of the news that comes out surrounding them is bullish, it's almost like this 2023 Boeing type situation where all of the littlest, tiniest bad things that happen to NVIDIA are going to get national press coverage, and that can potentially conflate things. Whereas, like, this position I have on Hormel Foods, no one's going to ever talk about Hormel Foods again since they took that dive down. Yeah. So I'm trusting that will just slowly churn its way back up, over time. Nice.
There we go.
You're killing it.
There we go. Colorblind, not blind. No, Hims been ripping right here. Let's see what the market cap for something like Hims is right now.
I love Hims.
What is Hims? Market cap 12.5 billion. I mean, it's not a big dog, but it's not small either. I mean, it's 12 bill.
Yeah, I like Hims a lot moving forward. I'm interested to see, because Hims has started trying to hijack a bit of the GLP-1 market share from the Novo Nordisks and Eli Lillys of the world.
And they've been struggling.
They have been struggling in that regard, but I'm interested to see if those companies will strike back and try to get at some of Hims' market share as far as hair loss, sexual health, those things.
Yeah.
Because, I mean, I certainly couldn't tell you what Novo Nordisk's hair loss treatment is off the top of my
100%.
head. And it feels like that's something that they could make a push for. I know a big thing that's propping up Novo Nordisk today as well is that they had good test results with their oral obesity drug. But additionally, they have partnered with some other company that is going to allow people to just directly order it online and have it delivered to them. And I think that's sort of the coming to be the convenience. And I mean, I think that's just the future. I mean, honestly, I think that we are.
Convenience is always the future.
It is, but I think we are adapt or die on this delivery thing at this point.
No, I agree.
Yeah.
I mean, again, after getting my groceries for the first time to my door, I mean, my jaw was on the floor. I'm not gonna lie, especially because I know we talked about ordering clothes. I've always had a thing with that thing. I don't think it's very smart to order online because I don't know what's gonna fit me right. Different brands fit differently. It's a waste of time in my opinion. Not very efficient. But it's just my bias because after getting the food too, I'm like, I don't want somebody handling my groceries. Like, I don't, but when I got it, I was like, oh, it's perfectly fine. There's nothing wrong with it.
No, yeah, it is.
The unknown a little bit.
It is good. Yeah, I mean, the convenience is just immense.
It just outweighs.
Especially with something routine like groceries, that it's like, I mean, if you add up all the time you grocery shop over the course of a year, like, it's a considerable amount of time.
the week rolls around again, and I'm like, oh, gotta order groceries again. I feel like I just ordered them.
Yeah. But it's always a time save, and I mean, I basically look at it as like I pay $20, $25 extra per grocery order for the convenience of it. So it's basically just like a $80 a month subscription to having my groceries delivered, which I'm willing to pay. That's fine with me.
The FDA is gonna go after Hims. We'll see if they do. Are we gonna short in Hims now? I know Hims is propped up right now.
Yeah, I know that the FDA is not pleased with Hims right now. That's true too, though, about the RFK thing. I do think that'll be beneficial to Hims.
Well, I mean, now there's going to be a lot more attention on this Hims earnings coming around November 3rd.
We're 24 pounds of pasta in the last month. It was on sale.
Yeah.
Nice. That's a lot. That's like a considerable amount more wet pasta than it is dry pasta, too.
It is. You just go butcher a cow now, get your own meat, put it in the freezer, and now you got enough meat for the next year. The next year of your pasta.
It always frustrates the hell out of me when pasta boxes on the nutrition facts put the serving size and wait after cooking because I can't.
Oh.
How am I supposed to?
Some scientist experience.
Yeah.
Are we cooking in the lab?
Am I supposed to be able to do the math on how much water this pasta is going to absorb?
Right, how much is going to evaporate by the time?
Yeah.
Yo, I kind of miss those labs now that you kind of brought up those details. Those labs are fun.
Do you think you buy more groceries when you order online rather than being in store? I would say I buy less.
I notice my bill is more efficient when I order online.
I would say that I buy less, especially now that I'm in the flow because it just shows your previous order along the top.
Yeah, I buy less.
So I just sit there and go through the items that I ordered last time and restock and everything that I need. But yeah, I'm definitely more susceptible when I'm in a store and walking by things on shelves to grab something else.
I'm definitely getting marketed more for sure in person. Yeah.
Yeah, and I honestly find that when I'm ordering groceries, like their algorithm is bad and does not know me at all. Like the things they're trying to upsell me on right at the end, like as I'm about to check out or whatever, I'm like, I would never want this. I don't like salted honey pecans. Like, that sounds okay. I'm not gonna buy that.
It'd be hilarious. Like together, you logging into my account to see my previous grocery list. I log into yours and be like, this is exactly what I wouldn't order. This isn't me.
Yeah, I also eat like a dog, which helps. I mean, I pretty much do the same like two meals at home just all the time.
Brother, if I could have one meal every day, I probably would. No, I'm just kidding. No, I feel you on that. I mean,
always have an abundance of Uncrustables in my freezer. That's a thing.
That sounds so good right now. I'm ordering that. I'm ordering.
Do it.
Order it this week.
I got no fewer than 30 in my freezer at this time. I eat like 2 a day. I put down on some Uncrustables.
What are you guys looking at? We're going to skim this high options volume list. We're going to toggle it by high IVR. And we're going to see which individual underlyings we can take some action without having to worry about earnings around the corner. We got an earnings season mid-October, kind of end of October here. So we have to be a little more particular or a little bit more specific with what we're looking at right now.
How much water does pasta absorb is literally easier than ever to look up. That's true, but like then I still there's like a bunch of math to do there. Also, maybe I'm mistaken, but I think the longer you cook pasta, the more water it does absorb.
Yes.
I would think that al dente pasta is a little bit drier than something that's more chewy.
Yeah, I would say so.
It's confusing, man.
Well, I mean,
just tell me how much dry pasta I need. Tell me the nutrition facts in my dry pasta.
There's no default pasta, right? Like the density of some pastas is probably different, which is going to affect how much it absorbs, how much water it absorbs.
Yeah, that's just true. That's true. I bet like how much water does penne absorb compared to like spaghetti?
I mean, low-key, it's true. And it's like, is the pasta made out of the same exact ingredients? Like, honestly, because I think it'll affect how much it absorbs, you know?
It's true.
Hims, yeah, he's him. Let's see what we got over here on this IVR list. Let's start from the top. I've been skimming a little bit, but we've had a lot of earnings in the way. So let's start there, then we'll check out our futures as well. Let's go. We could go lowest to highest to actually pick it up slowly.
Yeah, I see Micron around there.
If I can get this.
Oh yeah, Micron flying. Can somebody tell me what happened with Micron? Who invested in Micron? Was it Nvidia? I know they got a lot of cash they've been throwing around recently.
TSM, Taiwan Semiconductors, Pop. Everything is at its highs right now.
They got earnings report coming up. That can't be it.
These highs are really tough to trade. If you didn't already have, in my opinion, if you didn't have long positions on already, all-time highs is very difficult to trade. If you didn't already have on longs, in my opinion.
Interesting.
Puts you in an awkward spot too. PCG, not too much, 47.2 IV rank, not bad. Earnings November 6th. Let's see what this cycle's looking like.
ARM not affected by Intel deal.
No, not at all.
Yeah, Intel.
Oh.
I was wishing I caught the top end of this Intel move, like this morning, and I've laid off, and I should have just gotten in even when I had that thought that I had missed the move. This seemed like overextended on the open, even with the investment coming in from NVIDIA.
Why am I blanking on Intel? What's that ticker?
INTC.
INTC.
But yeah, big gap into today. Yeah, Intel. I don't know. This one's interesting. I'll tell you what I've been kicking myself about. Maybe I've said this on air before. Is IBM. I am so upset that I missed the wave on IBM. I should have seen this coming.
I mean,
IBM.
what was the wave?
I mean, IBM was just miles and miles ahead of everybody on AI. I mean, they had Watson on Jeopardy in like 2012, and I mean, freaking Deep Blue, if you want to send it back to 1988.
We call that fumbling the bag.
It's true. I mean, they haven't fumbled it, though. That's the thing, is I thought that they had fumbled the bag.
Right.
And I stopped paying attention, and then suddenly they just take this. I mean, the past year has been immense for IBM, year plus, I should say. And I missed it. And I'll tell you what, I had a professor my final semester of college, and he was an older guy, and it was like a class about the stock market, more or less. I mean, really just about asset classes in general, but it doesn't matter. Anyway, the whole point is, anytime he needed an example of a stock, he would always say IBM.
Right.
And I would always be like,
OG.
yeah, and I'd always be like, oh, this funny boomer guy, like nobody cares about IBM anymore. Like, why isn't he saying Apple? Like this guy's still stuck in the 1980s. And here we are. Here we are. IBM flying again.
I know.
I'm sorry, Professor Craig. My bad. Dr. Craig. My bad.
You guys are over here filling each other's orders on IBM now. All the turntables.
What do you guys think about Apple? Apple is an interesting one. I don't know. I mean, I obviously like Apple as a long-term growth asset, but it's just kind of become harder and harder to trade in an options context to me. I mean, the volatility is still there and is okay, but the stagnation on this thing has been pretty crazy. But also, Apple is a stock that I never want to be neutral on. I know it's going to grow with time, so it's always put me in kind of a difficult spot trading this as of late. I mean, we've talked a lot on this show about how Apple has kind of stagnated a little bit when it comes to innovation, and they have made a very smart pivot in all of these services that they're offering now in Apple TV Plus. They got the Fitness Plus subscription. They got the arcade thing that you can pay for, Apple Music. I'm sure that they see something when people do transactions on Apple Pay. They got the Apple Card. So they have really diversified their holdings here, and we're not just relying on these cyclical hardware releases. But at the same time, yeah, it's a tricky one. Apple, I feel like they haven't done anything groundbreaking in a while. I feel like I grew up in a world where twice a year Apple did something earth-shattering, and it hasn't happened now in half a decade plus.
I feel like it's not only me. Let me know how you feel about it, but the anticipation just for the new iPhone releases, I feel and believe, have gone way down. I think the excitement and the anticipation used to be a lot higher for Apple, and I feel it's just the overall sentiment that I feel, and I think that kind of adds to that stagnation.
Yeah.
That Apple's kind of been going through.
Yeah. Apple also can't believe they don't have glasses yet. I don't know.
I mean, bro, they skipped the glasses. They jumped to the Vision Pro.
They did go straight to the Vision Pro, but like, yeah, I don't know. I feel like they're really missing the boat on the glasses, because there's Meta is with Ray-Ban, and then now Warby Parker is with Google, right? That's what just happened?
I believe so.
Yeah, so we're going to get Google Glass, which was way ahead of its time.
Just the marketing of it. Google Glass. Google Glass. Like, I don't know.
I mean, they tried it once. You remember the original Google Glass?
The Spy Kids?
Yeah, the Spy Kids with
That's what I'm saying, but it's not around anymore.
Had like a thing you could flip on and off.
But nobody wants to feel like.
Well, that was just they just were way too early with that one. I mean, that wound up just being it looked like Spy Kids and was pretty much just tech bros that were snapping that thing up. There was no retail consumers that were particularly excited about that, but retail consumers are excited about these Meta glasses. I mean, I kind of want a pair myself. I don't know. I don't really vlog, so like I don't know how much utility they would really have for me. But I think it's really interesting, all the stuff that you could do with those Meta glasses. And I think Apple is missing the boat here.
Yeah, I think with the Meta glasses, I don't know, just such an interesting perspective. It feels like it's just a new camera angle when you're on social media and you see that perspective or that angle. It just feels like fresh content.
Well, it's like Meta has crept up and suddenly I think are the Apple of the VR space. And I think that is bad for Apple.
Well, I mean, they are called the Metaverse.
Sure, but
trying to take it home.
Sure, but like when you look at like even now, Apple versus Android, like people like their Androids, but there's still a perception of like luxury versus cheapness, even though Androids perform better in a lot of aspects.
Right.
And so I feel like Apple could have done that with VR if they got on the boat at the right time. But now Meta has run away, and they're on the 3rd or 4th edition of the Quest at this point. It works really well. People really like it. They got the glasses going now, which I think integrating the Meta Quest tech into the glasses is going to be the next level up for them there. And I think that Apple has missed this party. So, I mean, maybe they could inject themselves back in. But yeah, I mean, the Vision Pro,
That's the only way I see them get their foot back in the door in terms of like leading innovation again, is if they do something with Vision Pro.
Well, yeah, and I was excited about the Vision Pro when it came out. I mean, I was thinking, okay, I'm going to wait.
Excited about it.
I was like, I'm going to wait till the second version of this comes out, and then these prices drop, and I'll get myself a Vision Pro. But the Vision Pro, new off the shelf, was literally 10 times the price of a MetaQuest.
Buy a literal brand new MacBook or a PC.
Oh
set.
yeah. I mean, it was north of $3,000. I mean, you could get a MacBook, a phone, and a MetaQuest to boot, and you're going to be at that price.
And
point.
again, with that price point, I don't even believe they were looking for this to be adopted by the masses. I think it was just like, yo, whoever our techies out there that have a bunch of disposable income, here's our first wave of something that we're trying. We know 95% of the population is not going to purchase this, but like, you guys have extra disposable money, like try these things out. We'll get a lot of real world feedback, and then I believe that's when they're going to send new updates, or maybe a Vision Pro 2 like you were mentioning. But that price point, they had to have known that was not going to get adopted by the masses.
No, yeah, I would think so.
That's
and
an 05 Honda.
Yeah, I think that they're certainly testing the waters, but at the same time, it's like, they might have tested the waters with just an inferior product, to be quite frank. I mean, I have yet to see.
Used it?
I haven't used it myself, but I have yet to see any demo video of the Vision Pro doing anything the MetaQuest cannot do.
Oh, right.
And in addition, it had wires in that like annoying battery pack you had to keep in your pocket.
To be fair, did they market it to be able to do something else?
I don't think so, but that's my point. You're saying here's the same product for 10 times the price.
Well, Apple thinks they can stamp their name on it, and they think it's going to pop off because they think they're Apple now.
Yeah.
Brand equity.
Yeah.
Yeah.
But it's just I mean,
yo, did you get to use the MetaQuest 3 yet, or?
No, I haven't.
Oh.
I haven't pulled the trigger on that yet.
Cool. Again, let me know.
But no, I will. That'll be sometime in the next month here.
Cool.
I'm getting the MetaQuest. Yeah, you guys, let me know if you'd like me to come in here on air sometime with a MetaQuest with giant googly eyes on the front. I think it would be very funny, but I want to gauge the waters on that.
I don't know how long I can look at you, just face to face.
It would be great.
Googly eyes.
You'd be watching TV over your shoulder.
Literally. I'm like, what are you looking at, Gus? I'm over here. QCOM. You don't got anything in QCOM right now. QCOM's been ripping over the last few days. Everything's been ripping right now, guys. I know I sound like a broken record. But the options market, IV is pretty low over there. XLE, some more energy sector.
Yeah, I see some talk about
I
Baba.
would be so trading at work with the meta glasses, he says. Dave.
I know Baba's been moving. This, to be candid, is not one that I have kept up with it too heavily, but to my
talking QCOM?
No, Baba, Alibaba.
Oh yeah.
To my knowledge, though, and correct me if I'm wrong here, chat. Jack Ma has returned to this company, like in a Steve Jobs with Apple sort of way, which is a big part of the reason for this move up. And then additionally, something with AI happened.
I had seen some individuals, some highly credible individuals as well, that might be in the next Market Wizards books. They just had some of their best trades of their career on Baba. I was like, why were you guys looking at Baba 2 months ago? Like, what was so interesting about it? But now Baba's at its highs, and I don't know. We'll see how Jack Ma responds to all this previous action here.
I'm seeing this QuantumScape now. QS.
That's a video game, no?
Google dropped the ball when they didn't call their glasses googly eyes.
We got earnings October 22nd on QS.
Yes, I have confirmed that Jack Ma has returned to Alibaba, and he is running. He is returned with the catchphrase "Make Alibaba great again." MAGA. But yes, he is back. From what I can glean here,
Funny you ask now, big deal. What you been up to? Funny he pops back up on the scene when you pop back up on the scene.
I am entirely too aware of this pullback in UNH, but we could take a look at that as well. It's bouncing a little bit here.
It's been a little quiet. If we get a nice pullback on UNH, I'm taking advantage of that, and I'm loading in the boat just a little bit. I'm getting long.
Man, you should do it now.
I'm throwing some long delta. No, I will. I mean, we can look at some of the spreads. I'm not opposed. We do have earnings before the bell, October 28th. You excited?
I guess.
I don't know.
I guess. Yeah. I
don't like that news cycle while I'm in here.
Yeah. I mean, I never love being just naked long through earnings, which is going to be the situation here.
Nobody said naked. Oh, you're naked right now.
Yeah. I've been naked. However, to that same end, I don't know what they could really say at this earnings call that could possibly make things worse. I feel like this earnings call could pretty much only have positives outside of the actual core numbers. I mean, whether they hit or miss consensus estimates there. But holistically, I have a hard time seeing anything UNH could do to drive this down like much further. I mean, they've had the worst sequence of events a company could pretty much ever have in the last year, and we're still on recovery.
They're
road
resilient.
Here. No,
What's
yeah.
going on here? I mean, the Buffett bought, so
yeah,
that's
yeah. If Buffett's gonna hold through earnings, I guess I am too. Jack Ma missing was just American propaganda. Yeah, I kind of like vaguely recall hearing about the Jack Ma was missing thing, but
I didn't know if it was.
I guess he just left Alibaba. I see stuff on social media all the time about Jack Ma's son, and I don't care at all. I don't know why I keep being showed these things.
What is he a high-profile individual? Why?
Yeah, I mean he's son of the richest man in China, and he's an exchange student at MIT.
Does he have a social presence?
Something like that. He doesn't have a social presence, but he moves like a billionaire as a college student, and so often there's videos of him like I mean, he has a driver in a Rolls Royce taking him straight to his classes and stuff, and then he's like getting out in a Burberry trench coat and walking in.
He's not like aura farming, is he?
He kind of is.
Oh, okay, so he's aware.
Yes, I would say that he's aware.
Okay.
Yeah, I don't think it's just like
he knows he's him.
Yeah. He's got a girlfriend now too, I think. But I see that. I see him all the time on my social medias, and I never ask for it. But he's been fine this whole time. I can tell you that much. Wish I would have bought Apple stock instead of the first iPod. $243,000 right now if you just bought Apple stock instead of an iPod.
I honestly really wish I had every single generation of iPods. I actually think that's really, really cool to see this.
It's hilarious. I had a Shuffle. I never had a Nano though. I went straight from a Shuffle to a Touch.
I'm not opposed to getting long here, UNH, right before earnings.
Yeah, I think it's an attractive spot.
I mean, it is $10 wide. I don't mind getting a little bit more credit, have a little bit more risk on this trade, but.
Bulletproof Glass Company. See, now we're thinking with our heads. Big deal. I just saw Taylor Swift came into the Chiefs game behind that. Taylor Swift?
Yeah. Okay.
Oh, yeah. Did you just mishear me?
Oh, I thought you said Ticket Swift.
Oh, okay. That's valid. I was like, what? But yeah, no. But I saw that she just came into the Chiefs game on Sunday. Did they play Monday night? Regardless, she came to the most recent Chiefs game, and she had a large bulletproof black barricade that was like being pushed around her, like 5 feet by 5 feet. Yeah, it's walled on three sides.
Like one of those shields?
Security detail behind her, and then she was walking like into the game. But it was the bulletproof thing is conjecture. I don't know that anybody's even confirmed that. It might have just been like a privacy thing for her, which whatever.
I mean, was it clear?
What?
What kind of privacy?
No, it was black.
Oh, it was black.
Yeah, you couldn't see through it at all.
Okay.
So yeah, not sure that it was bulletproof or not. But to your point, big deal. Yeah, that certainly may start to happen. People using some more bulletproof glass.
That's wild. UNH, we got filled at 408, so we'll be in there.
Still have the first iPod. Still works. Kind of hard to put anything new on it.
I remember whenever the iPod 3s, I think it was like the iPod 3rd generation, I just remember laying on the bed with my mom, and I remember she got like this Dell laptop for the first time. It was when Dell was popping off. They had all those colorful laptops. Lollipop. Wasn't that the commercial?
Maybe. I don't have any recall of that.
Hey, somebody back me up. Don't make me look crazy right now.
Somebody remembers.
With the lollipop commercials. Come on, guys. I think that was Dell. But anyways, I remember looking up.
It would have been an iPhone 5C thing. That's also same time frame.
I think this was so it was a commercial.
I don't know what I'm talking about at all.
Okay. I think I know. I think I know, but according to my memory, like it was a commercial with all the Dell laptops. It was on like a what is it called? What are those systems that just keep going with the track on it?
Like a conveyor belt?
A conveyor belt. It was like Dell laptops on a conveyor belt, and it was like different colors spitting out. But anyways, I know somebody will pop up and validate me here soon. And a put credit spread, yeah, I sold a put credit spread on UNH, getting on some long delta. Only $10 wides in the November cycle, but we were able to collect well over a third of the credit on it.
Yeah, lots of talk about ETHA here as well. I don't have any ETHA. I'm not opposed to trading it. I am long IBIT. Have been long some IBIT for a little while. I like these crypto ETFs, the exposure that you're able to get through them. I do not like crypto treasury companies. I will say that as well. I saw that there's, can't remember the name. There's a company that just pivoted to being a Solana. Oh yeah. Ticker Ford actually is what it is. FORD.
Ford.
Yeah, but not Ford though. It's like Ford Technologies or something like that. but they just converted into a Solana treasury. They are loading Solana is their business model. And this just keeps working. This can't just keep working, guys. Why does this just keep working? This is dumb. You can buy the crypto yourself.
What are you talking about?
Like
IBIT?
No, I just mean these crypto treasury companies like Ford, like MicroStrategy, GameStop did it a little bit. We talked about a company that was an ETH treasury now, Peter Thiel investment deal.
Yeah. Recently we touched on it.
I don't know why the name of that company is escaping me right now. But yeah, these companies just keep converting themselves into crypto treasuries and saying our entire business model is we're going to buy crypto. And then they moon. And I don't understand why. I don't understand why that excites anybody. You can buy the crypto.
I mean,
just do it.
It's a buzzword again.
Yeah, it is for sure. But it's like, why would you buy MicroStrategy, a company that, in addition to just holding a butt ton of Bitcoin, has fundamentals behind it and management and all of these other moving parts when you could just buy Bitcoin? I don't get it.
I think
why choose to get your Bitcoin exposure that way?
In all honesty, I think it's just a lack of education. Honestly,
I think it must be.
I think that's the only logical outcome.
Yeah, I think it's because they are marketing it, and there must just be a lot of people who are like, this is the way to. And I mean, there is an angle of it could present you more leverage because they're managing the crypto for you, and they could make good moves. Like, I get that kind of thing, but yeah, I mean, at the same time, if you believe in Bitcoin, you could just buy Bitcoin on Tasty Crypto if you so choose. You could also just buy IBIT or BITO or the other one. There's 3 Bitcoin ETFs.
Yes, we have a few.
Yeah, and same thing with Ethereum. You could just buy Ethereum. You could buy ETH.
Okay, one thing I do know is maybe the options could be a little bit more liquid on one asset or over the other. Maybe they want to use a different derivative. I know having those crypto ETFs gives you the ability to then trade some different types of strategies that you otherwise maybe couldn't on some of the outright Ethereum crypto itself or Bitcoin.
Yeah, and there is a volatility angle to be had as well, like in a short-term context. I guess I should say I'm more broadly talking in a long-term holding type of context. Because I mean, volatility. If you're just trading for vol or direction, I don't care what you're doing that on. Whatever will make you the most money is absolutely what you should do.
Just directional and sentiment overall.
Yeah, but just holistically, leverage, money wandering. That's a good name. Leverage. I see that. Oh, we found the lollipop commercial. Hell yeah. I guess.
Run it.
I guess it does exist.
Run it.
Yeah. Oh, here we go.
There we go.
Lollipop, lollipop, oh lolly, 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 lollipop. Boom, boom, boom. Call my baby lollipop. Tell you why.
At least I know I'm not crazy.
Sweeter than a cherry pie. And when she does a shaky rock and dance, man, I haven't got a chance.
Treat yourself to a Dell Inspiron laptop with intelligent Intel processors.
My mom had one of those
Dell,
red
yours
ones.
is here.
I thought that was actually pretty good marketing.
I love that. Well, it's clearly pretty good marketing because you remembered it like 15 years later.
Yo, I don't know. Dells were popping off. Dells were so popular. This was before like the MacBook was the thing.
Sure.
I think at that time too, I think Apple was just more known to be more of a expensive, higher end product because it was newer. And so Dell really had the chokehold on the masses at that time.
Well, yeah, and I know that there was big reservations, some of which I still hold today about like iOS or Apple OS versus Windows. Like Windows was still just so incredibly dominant at the time that it was like.
I mean, we can all visualize that desktop image right now.
Oh, yeah.
Windows from a kid.
Yeah, for sure.
That green landscape reminds me of Teletubbies, to be honest.
Did someone AI generate that? No, that's a pre-AI commercial. Soon enough, that's going to be the only defense that we have against things not being AI. But that was
timestamp everything.
Yeah, that is pre-AI. It would be interesting to see how well AI could recreate that, though. Today.
Oh yeah,
because I bet you that, especially at the time, took a lot of editors a lot of time. I bet that's a multi-million-dollar commercial.
On 100,000%.
Yeah.
Oh yeah.
So yeah, that's interesting.
Yeah.
I don't know what we can do with VO3 on that or whatever, but somebody should try. We should try.
I'm really happy we just watched that and brought that just like scratched something in my brain. No, with that being said, we are coming to a close here. We got a couple hours left of market open. Anything else to add before we hop out of here today, Gus?
Yeah, no, nothing in particular. Keeping my eye on a couple things that I have expiring here pretty soon. But yeah, kind of just chilling. Like you said, it can be difficult to find good positions to take against these highs. I will say, I didn't get to say this with our StubHub conversation earlier, but I am seriously eyeing StubHub for a long here, just because I don't think it's going anywhere, and at a point this has to become oversold. I mean, I have to trust their underwriters at least that much.
Right.
Like, could the underwriters really have been 25% off like that? It feels like we're starting to get to that point. So at some point this shifts over to being a buy for me. I don't know exactly what that point is. Maybe if I start seeing a sub 20 peek its little head out, I would do something about that. But yeah, StubHub, I got my eyes peeled. Live Nation, love it for the future. Yeah, StubHub kind of recovering off this 20 level now.
Yeah.
Ugly. I don't know if I want that.
A little ugly. We'll see how it digests after the IPO, and then we'll see how FOMC digests after this massive short. I think we got a little bit of a short squeeze action that we saw over the last 24 hours, especially into the close.
Yeah, for sure. I saw that there was a really good segment on yesterday about they drew out the research team a mathematical formula to determine how memey a meme stock run was. Were you watching that?
I'm gonna have to touch on that though.
Yeah, it was very interesting. It was just like they were assigning multipliers to like social media mentions and percentage increase intraday and like all these things, and then they created a meme stock index that was 1 to 5 or 1 to 10 for like how much it was a meme event. But yeah, I thought that was really interesting. Might have to start throwing the meme stock index around a little bit more with some of these things.
I like that, the meme index. You know, Melvin Capital is going to check that out for sure.
Yeah.
For sure.
Yeah, we're getting poached.
No, yeah, Dr. Jim on next. Thanks for taking the time to hang out with us. We will be back tomorrow. Be sure to stay tuned with Dr. Jim coming on right now. We'll catch you guys next time. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I got Joe. Joe in Houston, what's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. You know, it was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for, 5 out of the last 6 years. And so just, I really appreciate you guys. I can't think of another company where I can pick up the phone and call the CEO, the trade desk, and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing. For guys like me out here, what you're doing is really spectacular. So really appreciate it.
Thank you, my friend.
I really appreciate it.
You made my weekend, man.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the option's price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show. Welcome to the program. Welcome to the Thursday edition of what it is that we are trying to do today. We are going to shoot from strength and talk a little bit about theta. So, John, go ahead and cue us up on the title slide. So we are going to start a little two-part series on the two sides to theta. And today we are going to address the positive side. Now, before we get to the information, let's think about what theta is. Let's think about what we are trying to accomplish as traders, as option buyers, option sellers, whichever side of the fence you might be on. We're trying to make money, right? We're trying to generate returns. Well, how do you do that in the derivative space, specifically the options space? You basically do it one of three ways. You do it through direction, you do it through time, or you do it through volatility. Well, theta is really going to highlight the time aspect of generating returns or potentially earning losses, whatever it might be. It's going to really kind of, drill down on the time element of the returns, because theta is the first derivative of the Black-Scholes model with respect to time. So it is going to literally show us how an option price is going to respond when time itself changes. So John, go ahead and bring us into the information today. So the positive side. So there's essentially two sides to the theta discussion. There's the positive side and there's the negative side. You're positive theta or you are negative theta. There are times when you could have essentially zero theta, but those are going to essentially be very few and far between, a lot less common than either being positive theta or negative theta. So today we're going to talk about positive theta. When you sell an option, you are always able to generate positive theta. Always. Like always, always, always. Now, if you sell a spread or if you have like a complicated strategy, then that may not necessarily be the case. But if I'm just talking about a very single, basic, plain vanilla Betty Crocker option, I'm selling a call, I'm selling a put, whatever, you are going to be able to generate positive theta. It doesn't matter if the option is out of the money or in the money or at the money, you will have positive theta. But I'll have a bit more to say about moneyness here in just a couple of seconds. The natural decrease in extrinsic value as you approach expiration is helping you. This is what positive theta essentially means. So if you remember, just recently, we did that deep dive into extrinsic value. And we'll even link down to that show on YouTube for you guys so that you can easily find it. But we did the deep dive into extrinsic value. We talked about time. We talked about volatility. We talked about the proximity effect. And one of the things that we mentioned in that series, I don't think I spent a lot of time on this, but it was definitely something that came out of the woodwork at one point or another. Whenever you have an option, it's going to have some amount of extrinsic value, right? And obviously we talked about how those three different factors impact and influence extrinsic value. But one of the most important things to understand right here and right now is the following. Whether you're 7 days away, 21 days away, 35 days away, 65 days away, it doesn't matter. You have some amount of extrinsic value in that option. When that option finally reaches expiration, it will have zero extrinsic value. There will be no extrinsic value left. The option price will collapse down to its intrinsic value only. And if the intrinsic value is 0, then the option price will be 0. If the intrinsic value is 5, then the option price will be 5, and so on and so forth. But understand that option prices are going to slowly decrease as they approach expiration, ceteris paribus, all things being equal. That is because as time withers away, as time decreases or moves closer to expiration, the theta of the option is putting downward pressure on the option price. Specifically, it's putting downward pressure on that extrinsic value. Because remember, intrinsic value is just determined by the moneyness of the option. It's only determined by whether or not the option is in the money or not in the money. And so time and volatility, that doesn't impact intrinsic value at all. It's all extrinsic value, which we talked about again in that deep dive inside of extrinsic value that will be linked down in the show notes to this show. But that slow decrease in an option price as you get closer to expiration, right? That downward pressure, that is going to help you when you sell an option. Because remember, if I sell an option, I'm selling it at some price up here, whatever it is, $2, $4, 85 cents, it doesn't make a difference. I want to ultimately buy the option back for some lower price. So I want to sell it for $2 and buy it back for $1. I want to sell it for, $1.85 and buy it back for $1.15 or whatever. I want the option price to move lower. Okay, put these pieces together. I've got positive theta because I've got this downward pressure on the extrinsic value over time. That's what I want. I want the option price to move lower. So having positive theta by selling options is going to help me reach my objective just by time moving forward, because it's eliciting this downward pressure on the option price in the form of a slightly lower extrinsic value day in and day out. Okay, now let's put all this together. This isn't as much of a deep dive as maybe we went into for extrinsic value. This is more of kind of a basic kind of theta 101 type of course or type of discussion. When we sell options, because there's a lot of other things we could get into, but I wanted to keep this somewhat neat and somewhat tidy. When we sell options, we prefer to sell out of the money options. Now, from time to time, we might sell an at the money option, and there are some, really, really rare instances where we might sell an in the money option, but the default setting, kind of our status quo, is going to be to sell an out of the money option. Now, why do we do that? One of the main reasons that we do that is because if you sell an out of the money option, you are going to have a probability of profit, a pop, on that position that is greater than 50%. You are going to have a greater than 50-50 proposition. And we generally feel like, man, that is a great foundation to work from. Like, what a great, kind of framework to kind of build out the rest of my portfolio from, where I have probabilities working in my favor. I have them on my side. And then there's all kinds of adjustments and managements and other little tactics that you can deploy, along the way. But this is kind of the base level foundation. Okay. The reason why that is the case is exactly what we've just talked about over the course of the last 4, 5, or 6 minutes. Probability of profits being greater than 50% for an out-of-the-money option. The reason why that is the case, and it's the sole reason why that is the case, because those options have positive theta. In other words, I don't need to get the direction right. I don't need volatility to move in my favor, right? The other two things that are essentially driving options P&L. I just need time to move forward. I just need this option to get closer and closer to expiration, which of course we all know that is going to happen. There's nothing that I'm going to need to do. There's no additional energies I'm going to need to, exert on this position to essentially make that happen. It's going to naturally happen itself. And so because of that, when you sell an out of the money option, a call or a put, it doesn't matter. You will always see your probability of profit being greater than 50%. The reason why that's the case is because factored into those probabilities is time working on your side, right? Positive theta working in your favor, that downward pressure that is being placed on the extrinsic value that is essentially helping you as an option seller, which leads you into a situation where you just need the stock to not beat you, right? You just need the stock to essentially stay in a certain spot and you will be fine. Again, We just feel like that is such a great foundation to work from when it comes to building out all the other things that we like to do. So that is a brief introduction to understanding the first side of theta, the positive theta side. So John, go ahead and bring us into the market now. So now that we've done, we've done the work today, we've done what we needed to do. Let's take a look at the market now. It's like, man, let's get the hoodie on, let's get the sweatpants on, and man, let's do it. And I see you guys, by the way, man. I see you guys in the chat. Man, troll me. Let me know. I feel like that was a B- effort today. I feel like we were kind of right there in our lane, and that's where we're at our best, right? Not too good, but just enough to maybe make it to the next class. And so there you go. But man, I see you guys in the chat. Sergio's in the house. Greg Lutton's in the house. What's up there, Greg? Appreciate you. Mount Go Rail in the house. Man, look at you guys. I appreciate you. iPod Touch in the house. Man, the Event Horizon himself has materialized in the YouTube chat. And so, all right, let's take a look at some market dynamics here. What do we got? You mean S&P's up 38? I mean, why wouldn't they be up 38? Right? I mean, did you guys see it yesterday? I talked about this a little bit with E on today's assignment, but did you guys see what happened yesterday? Once again, do you really think he's going to go with anything other than purple? I mean, he's only got like 3 appearances left or whatever, 7 appearances left or whatever. You really think he's going to ruin the Cal Ripken streak now? Like, you really think he's going to ruin the Aroldis Chapman, 50 innings not letting up a hit streak now? Or 50 appearances or 50 batters or whatever? You really think he's going to ruin that? I mean, the Athletics ruined that last week, but he's not going to ruin that. Like, he's taking this thing all the way to the end, like 100%. So the next time that, there is a Powell public appearance, I guess it would be the next FOMC, or sometimes he does like weird, like a breakfast meeting at whatever, or, you've got obviously, Jackson Holes and whatever. Whenever you have that, man, I would hop on to some prediction market somewhere. And I mean, that seems like the safest play in the universe, right? You need to fade the field and just go purple all the way. Because again, he walked out. When you saw him in the back, you couldn't tell. He's just toying with us, man. He's just 100% just toying with us at this point. It looked like it could have been black. It looked like it could have been dark gray. But it was a very, very, very deep shade of purple. And again, it just had to be, man. That's the only way. That's the only way. And of course, the market was down significantly on the number yesterday. And then, of course, it rallied back because why wouldn't it rally back? But EME S&P is up 36 now. You've got the risk-free instrument, also known as the NASDAQ futures, up 270. You've got the Boomers up 139, and you've got the Russell 2000 futures index. Man, is this an all-time high for the Russell? Up 53 on the day? Wow, that's some crazy stuff. Got bonds down, which, I mean, that doesn't necessarily make sense. You got notes down. You got oil down. You got UB40 down. You got gold down 43. Man, somebody check on the shifties out there. That is not good. You've got silver down 7 cents. Okay, that's a little bit surprising too, I guess. But yeah, the metals are kind of getting beat up. I mean, silver was over 43 just before the number yesterday. And I mean, gold was flying high up to 37.40 or something, right? Let's take a look at this. Gold was, let me see here. Gold was, let me look and see. I don't want you guys to see my super secret system. We're looking at my super secret system here, looking at 6-minute bars. Like, forget about the 1 minute and the 5 minutes. No, y'all need to be on this 6 minute, these 6 minute charts. But let me see. If I go to, let me just do like a 1 hour. Then we do like a couple of days just so I make sure I'm looking at what I want to see here. Yeah, yesterday on the number, like, there you go. Yeah, 37.44. So it was a clean 70 points higher on the number. And of course, it was 25 basis points. I mean, that was the chalk. That's what everybody expected. And then everybody, you can parse out his commentary however you want to. I didn't really have a chance to actually go back and see. I wanted to, but I couldn't do it. And I mean, some people are like, it's a dovish cut, it's a hawkish cut, it's it's whatever type of cut. And it's always funny to me that, again, everybody's just talking their book 1,000,000%. Don't ever think it's anything other than that. And that includes me, by the way. Like, I'm included in that group. Don't ever think it's anything other than that, because we're trying to be objective. Some of us are better at it than others. I don't know if I'm that great at it, to be honest with you all, but we're all speaking through the lens that we see the market. And the funny thing about most of the time in the market, maybe even all of the time in the market, you can make a case for whatever you want to make the case for, right? It's just like using, statistics to prove your point. Statistics are a crazy thing because you can essentially craft whatever story you want to, as long as you cherry pick the right stats and you do this and you do that. I mean, having done, academic research back when I was a professor, like I know that you can do these things. I'm not saying I ever did these things, just to clear the record, but it can be done. These things can be done and they're done all the time. It's sort of the same thing when it comes to bulls and bears in the market. It's like, we're all just seeing the market through the lens that we want to see it. But anyway, there's my commentary on yesterday. And yeah, I mean, we're crashing. We're going to be crashing here any second. Basically any minute. If we make it to the end of my show, I'll be shocked. I'll be absolutely shocked. And so, what's funny about, we'll go through a couple things in the portfolio here. But if you look at SPY, so SPY, we did this long put spread for the number yesterday, and I wasn't able to, I was watching the market reaction, but I wasn't looking at this specific position. And so I wasn't able to take it off, but I'm pretty confident that it was quite profitable at one point. And so if you did tail a similar trade, which I don't know why you would be doing that at this point, because I've told you very, very clearly you should be doing the opposite of all the directional moves that I make, which if you did the opposite of this trade, you'd be doing pretty well today. But you would have had plenty of opportunities to manage this guy for a winner yesterday. And so if you did happen to take this trade or something similar, you were in a great spot yesterday as the market was crashing. I mean, the NASDAQ crashing. Wasn't even down to 4%, right? But again, I mean, that's basically a crash now. Like, that's how we have to kind of relabel things. And I mean, it's 2025, so you can change definitions. You can do whatever you want to do. It's just whatever you need it to be kind of in that moment. But SPY, I'm kind of shocked that we're actually not down more than we are. We're hanging in there. Tomorrow we've got OPEX, right? Tomorrow we've got September expiration. And listen, guys, somehow we made it through FOMC. I don't know how we did it. I'm still not quite sure that this is actually real life. But let's assume that it is, just for the sake of argument. Guys, I've been trading a pretty long time. It's been almost 20 years now. I've been through a number of option expirations. I've been through a number of triple witchings. I've been through a number of economic data points, FOMCs and NFPs and CPIs and PPIs. I mean, the US CPIs, the Canadian CPIs, the Spanish CPIs, right? All the important ones. I've been through all those things many, many times. Tomorrow's expiration, I don't know that I've seen a more critical juncture in the financial markets than what we have coming on down the chutes tomorrow. I mean, this triple witching, it is a triple witching unlike any other. It is a triple witching unlike any that have come before it. And so you've got essentially 24 hours left. You've got essentially 18 hours left to get your act together. I would get all your ducks in a row, get all your affairs taken care of and settled, because I don't know. I can't see a way out of this. And so that is tomorrow. And I hate to be the one to tell you all that, but it's just, it's unavoidable at this point. And so I think we're going to hold it, because if we do go down tomorrow, then maybe we'll have a little something to talk about. Now, again, remember, tomorrow we're going to do, we'll do the second side of the theta conversation. Obviously, we have to do the negative theta side as well. And so we'll do that to lead off the show and kind of shoot from strength. But yeah, let's leave SPY on and just kind of see where the wind blows us on that position. And then, we're getting beaten up a little bit in HIMS. We're getting beaten up a little bit in IWM, obviously. And so IWM, yeah, like this guy's not looking too great. Let me look at IWM for a minute. So I think, yeah, I mean, we're 10, 11 points up on the call side here. Let me look at this. We rolled this a couple times, right? I think we did. And so if I go back 60 days, I think that's what I need to see here. So the beginning of the trade, let me see here. Oh, that's HIMS. That's HIMS. Yeah, I was like, that doesn't look right. Let me bring up my trusty chains here. Cue up a little rooster, and let's see where we're at. All right, so what's amazing is we're only down $5 on the trade. So we're only down $5 on a position that is in the money. I mean, look at this. Look at how amazing this is. This is honestly kind of the power of options. This is kind of the power of positive theta. So a quick little shout out to the segment that we just did. That even if you just saw it live, I fully expect each and every one of you to watch that when it's released on the weekend on YouTube. Watch it in its entirety. Watch it a couple of times. Just put it on like one of the other tabs that you haven't looked at in like 6 months, but it's still open, of course. Put it on one of those guys and just let that guy play on a loop. Like, your boy needs that watch time. Your boy needs that those views, right? And so I fully expect all of you to come through for me when it comes to that. But yeah, look at this, man. It's in the money by $11, and we're only down $5 on the trade. That's pretty cool. that is pretty cool indeed. And so, a lot of it is a testament to all the rolls that we've made. And so we've been able to improve our basis along the way. But now we're in a decent spot. And so it's obviously very helpful to understand kind of where you're at in space when it comes to a given position so that you can make well-informed, decisions when it comes to the adjustments and the different things that you might want to do. And so I think for us here, I may just move up to the straddle. Let me take a look at what it looks like to move to the straddle. So if I move this 228, because remember, I'm going to be out Monday and Tuesday of next week because we are going to be going to Legoland. And let me tell you something. My kids are so excited. They're so excited. So Amelia's never been to Legoland, so she's 5. But Penelope and Eli have been. We've been a few times. And each time, it's been like over a year, I think, since we've been. And each time we went, Amelia, we just felt like Amelia was too young to really kind of appreciate it. But now that she's 5, she's very clear of the concept. Very clear of the concept. Well, what's really cool about going now, because it's like the middle of September, they already have their like a Halloween deal on Saturday night. Like we're going on Saturday morning and then we're going to be there Saturday, Sunday, Monday, Tuesday. Well, they have a little thing on Saturday night called Brick or Treat. And my kids just found out about this. And so I actually, I was prepping for the show. I was doing other things. I was answering emails, whatever. And I came in the house for a minute to like fill up my water or whatever. My kids all swarmed me. They swarmed me. They said, Dad, we're doing Brick or Treat on Saturday night. And they were like so excited, like so pumped up. I'm like, yeah, this is going to be super fun. And so we've got Brick or Treat on Saturday. We've got Legoland this weekend. And so being mindful of the fact that I'm going to be out, Monday or Tuesday of next week, Monday and Tuesday, I should say. It's not even in either or. It's kind of a both and. I want to be mindful of kind of where I'm at, in space here. So for this IWM trade, if we roll in from the 228 to the 233, it's only 70 cents, but it's a little something, right? And because we're only down $5, I don't really feel like we need to make wide sweeping moves at this point. Like, I don't really feel like it's necessary for us to just do super crazy things to try to bring this position back. Like, I really think we can continue with like a methodical approach, be very mindful with the adjustments that we make. I don't like to go inverted if I don't have to, because I feel like that's kind of the final stop on the train tracks. Now, some of you may feel differently about that. Like a bomb now's not for Pony Babista, but we haven't talked about them in a while. These are fictional characters, by the way. They're not based off of any real people that you might know. Well, they, hypothetically, like to buy the guts and sell the wings, right? Well, that's essentially what you do when you have an inverted strangle and you're going to, kind of make it back or turn it back or uninvert the inverted strangle and turn it into a regular strangle. That's what they mean when they say buying the guts and selling the wings, You can do that. I don't typically do that, but maybe this is the time to start doing that. I don't know. I'm open to it. I'm very open to it. But I think for now, let's just go ahead and sell. Let's just go into the straddle. I think this makes a lot of sense. It's only 70 cents, but it's a little something. And again, I don't think we need much. All right, so there you go. So now we're in a straddle in IWM. We're in a straddle in IWM. You can see that right there at the 233 strike. And yeah, so obviously we're bearish on IWM. I mean, any type of down movement in there is going to be helpful for us. I mean, we don't have any real estate left between the short strikes, and so it's going to be a little bit more slippery to manage. But again, because we're only down a few bucks on the trade, I still feel like we're in a pretty decent spot. So all right, so that is man, my nose is itching. So that is the IWM adjustment, and then other than that, I mean, I think we're good, man. I don't know that anything else requires our attention. I mean, I could go through and, kind of offer some commentary across the board, of course. I mean, we could have a good number of lamentations we could get into. But there is an entire book that you could look at for that if you wanted to, which would be much better than anything that I could offer up. And so, yeah, I mean, I think we're good. I think IWM was the main thing I wanted to do today. Obviously, Meta's not coming back. Google's not coming back. These are both in the money. In the money spreads. And so I will be addressing those tomorrow. So tomorrow, I want to give it one more day because you never know, man. You never know. Maybe today's the day, right? Maybe they go ahead and just pull the rug on everybody and you got NASDAQ down 450 on the close. I mean, is it likely to happen? No. Is it impossible? Apparently not. And so tomorrow we'll do Google and Meta and end up buying back both of those guys. But hey, we paid for the one extra day. Let's go ahead and take our one extra day. And so, all right, let's see here. Where are you guys at though? Man, I see you guys in the house. Man, look at you guys. Let me see if I can't surprise and delight somebody in the middle. let's see here. Where are we at? And so, man, I look at you guys. Man, I appreciate you guys so much. Well, Scramble Everything says, "Oh, hey, I'm ready for my daily dose of B- humor." Well, I mean, we're here for you, man. Like, this is it. Like, don't expect anything more. That's about the most you can get out of me, but it's pretty consistent. Like, I don't know that we're too far under B- most of the time either. Like, we are right there, just kind of hitting our lane, staying in our lane, and just hitting them with the consistency. And so let's see. But where are we at? Oh, Scramble Everything. This is another Scramble Everything. Wow. He just said, Dr. Jim, your position page, you're almost about to need to scroll. Yes. Good job out of you. Yeah, I don't know if it is a good job out of me. I mean, I am about to need to scroll, especially since I've zoomed in on the platform. So you may have noticed I've zoomed in a little bit. We are doing the, like if I go here to the settings and I go to the general, like we got our little 110% zoom on. Like I went ahead and I capitulated, man. I acquiesced. I said, hey, the multifocals, I mean, these things are a little bit brutal. I've been in this type of multifocal now for almost 2 weeks. I'm probably going to switch I have a couple different ones I'm going to try. And so I actually went and got glasses yesterday. I got brand new glasses yesterday. I'm super excited about these glasses. My wife loves them. You know, the woman at the eyeglass place loves them, but obviously, you know, she's very biased. I mean, she loves everything. That means you're gonna buy glasses from her, which I get it. But I actually like her a lot. She's really nice. And so I'm excited to unveil the new specs to you guys. It probably won't be for a couple of weeks, but I'm super pumped. And so I got the glasses I have right now, the ones you guys see me break out from time to time. It's been 17 years. I've had those glasses. I got those glasses when before I met Autumn, like 2008. And I met Autumn in 2000. Wait, no, let me think. I met Autumn in 2006. We got married in 2009. Wow, are they 20 years old? They could be, actually. They might be 20 years old. That's crazy. But my prescription hadn't changed for like a long time. And so it was time to go ahead and upgrade those guys. But anyway, we went ahead and acquiesced. So that could also be contributing to the zoom factor there, Scramble Everything. But yes. All right, where are you guys at? Let's go to the beginning. Man, look at you guys. Man, look at you guys. Man, I appreciate you guys so much. So let's see here. Let's see. Sam L's in the house. What's going on there, Sam L? Uncle Jay rocking the dark purple tie. That's right. And still no market dump. Well, there was for a brief second there. Like just for a brief, tiny little second there. You had a little something. And that's how they got you, man. That's how they got me. That's how they got you. That's how they got everybody. And so now, you know, it would really be something if, you know, I mean, I think today is probably done and dusted, but you never know. I mean, it's not impossible. I think it would really be something if they reversed course going into the close today and then tomorrow, because I think a lot of people now think we're out of the woods. Like I think a lot of people now probably think it's just all systems clear. And this, of course, this is just classic bear talk. Again, we're all talking our books. I'm no different, right? But again, it does. I kind of have this feeling of, you know, we got through Powell's tie choice, which we all knew what that was going to be. I'm not even sure why people were concerned. Like, did you really think at this juncture in his tenure, he's going to mix it up? He's going to shock the muscle? Like, no, he's going in, chest and back on Monday, right? Legs on Tuesday, so Tuesday's an off day, and then maybe shoulders and arms on Wednesday. Like, Powell, he doesn't have a lot of time. He can't be doing chest on one day and back on another. No, man, my man's got to be clumping some things together. He's got to be hitting multiple muscle groups on each day. He just doesn't have time, right? Doesn't have the time to kind of devote to, you know, the traditional bro science like we all might be able to do. And so he's not going to mix it up. Now there's just no way he's shocking the muscle. And so we made it through the tie. We made it through the rate cut. We made it through the commentary. Everybody feels like it's all, you know, it's all good at the end of the day. And I'm just not so sure that it is. And so we will see, my friend. We will see. Brian Dowdy, hey, Dr. J, how about a short put at the 1 standard deviation for FedEx earnings? Man, look at Brian giving me the exact. So, Brian, I appreciate it. So, FedEx has earnings today? Okay. I mean, I have to say, I'm a FedEx guy, not really a UPS guy. Now, I go to UPS because Amazon makes me, right? Just like we all do. I mean, I'm not necessarily choosing UPS. I would always choose FedEx over UPS. But we don't have a choice. We don't have a say in the matter. The powers that be, they tell us what to do. This is going to be, you know, your Bezoses. This is going to be, you know, your Sosnoffs. This is going to be your Batistas. Like, they're the ones that are calling the shots. We are not calling the shots. We have no power in this relationship. And so Bezos says you go to UPS, you go to UPS. Bezos says you go to Whole Foods. You're like, it's 25 minutes away, but there I go. Bezos says you're going to Kohl's. You're like, wow, they're still in business? But man, you will be at Kohl's later that day. It's not your call anymore. And so anyway, I'm bullish on FedEx. So let's go into FedEx. So I like it, Brian. But I actually like the fact that you gave me, you laid it out, like you dummy proofed it, man. You dummy proofed it. So even I can't mess this up. And so this is some good stuff. So Brian is saying, let's go. Did you tell me the expiration cycle? No, you didn't. But I'm thinking if we're selling a put, maybe we could do October. I mean, we could sell the 200 put in October, 16 Delta. Buying power is only $2,000. I actually like this trade a lot, my friend. I do. I like this trade a whole lot. So, I kind of want to deviate away from just lighting stacks of cash on fire every couple of days with these expecting move butterflies because we are in a real cold streak and we haven't necessarily been able to turn the tide with this long put spread in the market just yet. And so, because of that, I'm kind of thinking, man, let's do something a little bit different. Let's take advantage of positive theta. There it is again, right? Just like we talked about at the beginning of today's show. And let's sell this put at the 200 level. And I like it, Brian. I like everything about it. I mean, the pop is 83. Again, there you go. It's over 50, just like we forecasted earlier on the program. The P50 is 89. Now it's 90. And so we can round that up to 100 for our mental records, even if it's not actually true. The delta is 15, theta is 12. That's pretty solid. A little positive theta for you. Maximum profit, of course, is going to be the credit collected. Maximum loss would be if FedEx hits 0. I don't necessarily think that's going to happen, at least not in the next 29 days. And so we may lose money, but I don't know that we're going to lose $19,750. And so buying power effect, that looks pretty good. That's about 6.5% of the account. And so I'm kind of thinking, I like this trade a lot there, Brian. Thank you very much, my friend. Let's go ahead and let's push this guy out. We'll get this guy on. And we'll see what happens. All right, so we got filled at 251. So there you go. There's your short put in FedEx for FedEx earnings tonight. Man, there you go. Oh, and then Brian follows it up, ready to take you down 3x. I should have read that before I put it on. I think the last time you and I were joined, and I think we were joined it was a situation where you told me to do a trade in a given stock. You didn't tell me which side you were on. I put on my trade that happened to be, I think it was bullish, and you ended up also being bullish on the trade. Not Lululemon. It was a different trade, I think. Maybe it was Adobe or something. I don't know. You could just look at the follow page and look at any of the losers that I've collected over the course of the last few weeks. There are many to choose from, so it may take you a while to kind of sift through all the different options there. But thank you, Brian. I really like the trade, though. I really do. I think we might be okay. Samuel says, Doc, check out Intel. It looks like NVIDIA coming to the rescue. Samuel goes on to say, man, does anyone even know if Intel's still in business? Yeah, that's right. Or are they just hanging out for nostalgia like iPod Touch? Well, he's here. You could ask him. iPod Touch is here. He's in the chat, so ask him yourself. You don't even have to wonder. Just ask him. I think he got swept away in the event horizon, but I could be wrong. Intel. Wow, look at Intel up 23%. Doing pretty well for themselves. Looks like the joke is on us. Intel's got the last laugh here. Wow, that's really crazy. Isn't this the stock that doesn't Trump and the administration have a 10% ownership stake in this? That doesn't feel right to me. That doesn't feel like the way it's supposed to be. Now, maybe there's some, strategic reason for it or defense reason for it. I'm sure they're conjuring something up. Whether we are going to buy it or not is a whole nother deal. But isn't this the one? Or what? It wasn't Google. I think it was Intel. And so it's just, Intel up $5 today. That's really, really crazy. Let's see here. Intel. Yeah, I don't know, man. You got earnings on October 30th. I don't know, man. I don't think we're gonna. Oh, you're telling me NVIDIA came to the rescue somehow. I'm curious as to how that went down. Let me know. I'm not gonna do anything in Intel because I don't really feel like it. Rancher, what's going on there, Rancher? Appreciate you. I do see a big deal. I do see Big Deal Donut saying Oracle bought TikTok. Did they really? Oracle down $3. I didn't even know that was allowed. Oracle down? No. Something's gotta be wrong. Oracle down a few days in a row? No. Look at that. Did they buy TikTok? I caught wind of that being a possibility too. I didn't know that anything was finalized though. And so let me know if did that actually happen? I'm not sure that happened, but Oracle has since cooled off. Wow, it's cooled off quite a bit. I mean, it was up to 340, right? Yeah, high of 345 right after earnings. And then it has cooled off. Sold off 50 points. That's a lot, man. That's a whole lot for a $350 stock. And so that's okay though, because Oracle reports earnings like every couple weeks. And so they're probably due for another one any day now, I would think. And so once they do that and they kind of goose the numbers, they'll be right back to 350, 360. But let's see. Joe's in the house. Dr. J, watch out. The P&L, the P&L bros are looking for you. Yeah, I won't be too hard to find. I've got lots of P&L opens that they can come for. We got this one up here. You know, we got this one right here. Although look at Chipotle up 8 cents. Man, they doubted us. They doubted us. Ash Finn, I see you in the chat. I know you've got a Chipotle position on too. Ash, they doubted us, man. They laughed at us. They mocked us. They jeered us. And look at us. Chipotle up 9 cents. Speaking of having the last laugh. Yeah, that's how we do it right there. And so, but let me guess. What are you doing for FedEx? Could it be another expecting a butterfly? No, I'm trying to be strategic. You know, I'm a changed man. What can I say? I mean, doing these educational pieces is like, again, I might wear a shirt and a tie tomorrow. Like once I get these new glasses, I'm gonna come in like tie, like buttoned all the way up. I'm not even going like open collar. I'm not even going like one button loose. We're going all the way up. Might throw on a little sport jacket, right? Might even comb the hair. I mean, let's not get carried away, but it could happen, right? It's a possibility. And so yeah, but I'm a changed man. And so no expect to move butterflies in FedEx, but we did do a short put. Compliments of Brian Dowdy. So thank you there, Brian. Appreciate you, my friend. Yes, Ashvin, Dr. Jim, let's go. What's up, my friend? I appreciate you. Good luck on your Chipotle position, and don't let them tear us apart, my friend. And by that I mean it's every man for himself. So good luck to you, my friend. iPod Touch, iPod Touch in the house. Jimmy, what's up, man? 6666. Event Horizon was initiated from the 2009 666 lows. I mean, if there was ever going to be some type of numerical coding for the Event Horizon that you've already correctly called, like you don't need to call it again. Like once you call it once and it comes through, you don't need to, go back into the cookie jar. Like you're already a winner. You've already taken the victory lap. So I don't disagree with the numerical coding being like, all right, this is probably not good. But again, my friend, you called the crash about 2 weeks ago. The NASDAQ dropped 38 points and that was it. Like what more could you possibly want out of this market? I mean, a 38-point drop in the NASDAQ, that's like 10 basis points, right? How much more could you possibly want? And so you were already right, my friend. Take your victory lap, just like the Boston Red Sox did last night on the game-winning hit by Nick Sogard. And so, yeah, everybody's fan favorite, Nick Sogard with the game-winning ground ball to second base. It was some good stuff. And so let's see. But iPod Touch, thank you, my friend. Mount Go Rail, Dr. J, I appreciate your brilliance, man. Look at you. I appreciate you. I'm going to send you that cash we talked about for you putting this in the stream at this very time. So thank you, my friend. I hope the Theta piece was helpful for you in some regard. And I know many of you guys have been trading for a while. And so when I do kind of these beginner educational pieces, it may be a little bit elementary for you, and I understand that. But what we're really trying to do with those pieces is to reach new people and to find new people where all of this stuff is brand new to them. And so the idea of like coming at them with like a leptokurtic distribution, that's not going to help anybody, right? Because it's not necessarily what we're trying to do with that. But my hope is that still by taking some deep dives and some shallow dives and kind of mixing up, the depths of the dives that we do take, that maybe you're able to pick some things up here and there. Like maybe there's a little mortar around the bricks that's just it needs a little refresh. It needs a little, extra kind of, mortar in that area or whatever it might be. And so that's my hope at least. But Jared Kramer, time for Dr. J. I sold my Intel Leaps yesterday, man, feeling a little slatey. I don't know what slatey is. Slatey. I don't know what that means. Can somebody help me out in the chat? What does slatey mean? Is that good or bad? Oh, did you mean salty? And it's a typo? That's what I'm guessing. Because I don't know that slatey is going to get you too far. But yeah, okay, so you sold your Intel Leap. So I'm assuming what you mean is you had some Leap calls in Intel and you missed today's move, of course. Hey, man, it's the worst feeling ever, right? I mean, but we've all been there as traders. Like you always feel like a knucklehead. You always feel like a goober, like, oh my gosh, if I had just waited like another day, another couple hours sometimes. I mean, it can be, it can be a tough pill to swallow. There's no question about that. But yeah, hopefully it was still a good trade for you. And so you can still kind of chalk it up as a W. But Greg Lutton's in the house. What's up there, Greg Lutton? Gasman's in the house. What's up there, Gasman? Our Pepsi Strangle is looking good, my friend. As if there was ever a doubt. I mean, again, just a delicious, delicious product. Emmett says, hey there, Dr. Jim. I'm here to learn from the master. Yeah, well, he comes on right after me. So stay tuned for another few minutes, and the master will be here. And so Flower Power 2222 says, rate cuts near all-time highs have seen stocks higher a year later, 20 out of 20 times. And when last year's cuts reached the 1-year mark, we could have 23 out of 23. Yeah, sometimes I forget that they did cut last year. A quick little, a little 50-pointer bazooka cut. Right, which is like, okay, all right, that doesn't really make a lot of sense, I don't think, but okay. Hey, again, I'm just taking orders, man. Like, I'm just listening to the powers that be, and they tell me what we can and can't do. Like, that's the way that this works, of course. And so yeah, but if it's 20 for 20, is that like an ESPN 30 for 30? Like, that sounds pretty good. Like 20 for 20 is not too bad. And so, you would think that they're going to be higher next year. I'm going to take the opposite side of that trade, of course, and I'm going to fade all of that and be the contrarian at this point. But good luck to you, my friend. Absolutely, good luck to you. Sergio, greetings, Dr. Jim. What's up there, Sergio? Appreciate you. Away from the numbers in the house. Hey, Dr. Jim. On station and tuned in following a tour of Belgium, man. That's really, really cool. I hope that you had fun out there. I don't know if you went there for work reasons or family reasons or just a vacation, maybe with your family or with friends or whatever. That's awesome. Like, I really hope it was fun. And you're in London though. So isn't Belgium like right next door? Like, it's not far away. Let me think. Did we make it up to Belgium? Did I go to Belgium? No. When I was in France in 2003 and I studied abroad and I made it to London. I made it to Austria. I made it to let me think. I don't think I ever made it to Belgium, Brussels. Yeah, I don't think I ever made it there. I'm pretty sure I didn't. But if I'm not mistaken, it's all pretty close though. I'm pretty sure that's right. RC's in the house. What's up there, RC? Appreciate you. The Preston's in the house. Dr. Jim, where are the Bears? If you mean the Chicago Bears, they're in the film room today figuring out ways to lose coming up this weekend. But if you're talking about the market Bears, man, I have no idea. But man, just hold on. Just hold on. It's any minute now. It's any minute now. Sure, we've been saying that for 14 years. But hey, just hang on. Just hang on tight. It's any minute now. And so let's see. Emma Morrison says they're hibernating. Yes, they could be. That may very well be true. Let's see. Warren Mann's in the house. What's going on there, Warren Mann? I appreciate you. Good day, Dr. Jim. What do you think about RGTI? RGTI, what is that? Rigatoni? RGTI. Rigetti. Is this Dave Rigetti? The old pitcher from like the Yankees and the Angels in like the 80s? Rigetti Computing. You got to have another career outside of baseball when it's over. Like, I get it. I have never traded Dave Rigetti and or his computing company. If I look at the overview, it's got a decent amount of liquidity. That looks like 4 stars, but with the multifocals, you can never be sure. IV rank of 28. Stock is only 25. That's not too bad. You've got weekly options. If I go into October, yeah, you've got decent markets. I don't hate it, Warren, man. Like, I like this a lot. Every time I see your name, I think of Warren Moon. And so that's pretty funny. But if I go in here and, what are we doing here, Warren? Are we selling a strangle? Like, what do you think? Got the stock up 366? What could possibly go wrong? I think I like it, man. What if I sell a 2131? 2132. Wow, look at that buying power. Wow, look at that. That might be, wow, that's crazy. I only have a couple seconds left, but if you're listening to the show, thank you so much. The buying power on this trade, I'm in Rigetti, RGTI. I'm in the October cycle with 29 days to go. It's a $25 stock. What do you think the buying power should be on this trade? Whatever you think, it's a lot lower. It's $250. That's really, really, really low. That feels very, very, almost like too low in a lot of ways. But man, I like this trade a lot there, Warren. Let's give it a shot. And so if you do something similar, then, you'll be down there in the foxhole with me. And then we'll just try to, find our way out at some point in the future. So let's push this guy out. A little Dave Rigetti action. And let's see. See if we can get filled. And then I'm out of time. I got to run and get you guys to Jamal for engineering the trade. But let me get this filled really quick. 310. 307. We should get filled. All right, so we got Phil at 307. So there you go. There's Spaghetti. Thank you, Warren. That's awesome. And thanks for popping into the show. I don't recall you having been in the chat before. But guys, I got to run. I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com. Or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, train them heavy, and stay generous. We'll see you guys tomorrow.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I got Joe. Joe in Houston. What's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. You know, it was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for, 5 out of the last 6 years. And so just, I really appreciate you guys. I can't think of another company where I can pick up the phone and call the CEO, the trade desk, and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing for guys like me out here. What you're doing is really spectacular. So really appreciate it.
Thank you, my friend.
I really appreciate it.
You made my weekend, man.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
What's going on, everybody? Well, they did it. They cut rates. That's right. The Fed finally did what we've been expecting for a long time. We'll talk about that. NVIDIA, of course, made a huge investment today, making a lot of things move, not only Intel, but a lot of other related names. We'll talk about what's going on there. And then finally, it was a week of interest rate decisions across the globe. Bank of England had their rate decision. We'll talk about what they had to say. We'll talk about those three things and more. We'll take a look at some of the things that I've been trading more recently. I got a call ripper for the weekend. We'll see how it plays out for tomorrow. And yeah, just take a sort of inventory over the last couple of days of different instruments and what's happened. I know some things might be a little confusing. We'll try and clear it up. You know what I'm saying? Here on Engineering the Trade. Welcome to the most dangerous show on the Tasty Live Network. That's right. It's ETT. I'm your host, Jamal Chandler. Hope you guys are having a great day. I had a golf tournament yesterday. It was one of the first times I was really excited about it. Because I've been playing some golf, man. Like for the last year now. It's been kind of an interesting thing that I've started to enjoy. It was pretty fun. I hit them pretty decent yesterday. It was a scramble. You know how that goes. If you don't know anything about a scramble, I mean, it's best ball, right? You take the best ball. You're kind of moving along, pace of play. It's for a charity. It is what it is. We shot 2 under as a team. Probably could have been better. I probably could have had some better shots. One of my boys, he's really kind of come along with his game. We used to trade together at a prop firm. He's really good, man. So he did his thing, obviously putting us in good positions yesterday, and we just had to kind of clean up. You know what I'm saying? But somebody had like an 11 under. I mean, Jesus Christ, what are you going to do about that? Whatever. Let's pull up the slides and briefly go over the biggest stories in today's market. What can you say? I mean, we've been anticipating this move here for the Fed for a while. The Earth hasn't changed. The Earth hasn't shifted. I'm a little shocked that we're not down. Usually, it's kind of a buy the rumor, sell the news in these type of situations. Market has been running higher for the most part on the idea that the Fed was going to cut 25 basis points, and I tell you, it didn't disappoint. As a matter of fact, at this point now, really, it all boils down to the jobs market. Really, right? I mean, that's kind of what it's kind of unusual to see a situation where inflation is still high and jobs are starting to falter. I'm curious to see how long that's going to last. Nevertheless, they're already forecasting another 25 basis points at the October meeting and 25 more at the December meeting. I'm sure you've heard about this, but still, it's the biggest thing going on in the market, right? Tariffs are not really the concern anymore. It's just a question of how bad the job market is going to get and what's going to happen with rates and how much they're going to change. So, not really much of a surprise here. What is a surprise, honestly, is that bonds, I'm sure for a lot of you, bonds are going lower. On 30-year, that's a whole different story, to be honest with you. I think one of the reasons why they are going lower is because people are starting to get worried now about jobs and how much that's going to affect the U.S. economy. And so I think that's one of the reasons why you're seeing ZB, ZN kind of trail off. Not so much because, I mean, it doesn't really, I don't think, it's almost kind of signifying maybe there's a potential mistake in policy, but the Fed has to do what it has to do. If people are starting to, if the jobs reports are not that good coming in more recently, it's time for them to cut rates. So it's just weird to see bonds trailing off the way that they have been, seeing yields go up the way they have been. I mean, the 2-year yield is up big. That's kind of weird. It shouldn't be doing that. And so there's something strange going on with bonds. More to come there. NVIDIA announces a $5 billion stake in Intel. Intel, if you're counting now, that's 3 big stakes in Intel over the last couple of weeks here. The U.S. government, obviously being one, SoftBank came in with a $2 billion stake, and now NVIDIA themselves are buying stakes in Intel. It's crazy. I think this currently represents like a 4% stake from NVIDIA in Intel shares, and they're going to collaborate on designing chips and data centers. And, I mean, just the beginning of this year, there was questions of whether or not they were going to break up Intel. Yeah, they were going to break up the foundry business and the other part of the business and separate them out. And now it's like, no, they're keeping it together. It's in the U.S. and they're investing in it. So kind of fascinating to see that happen. What else could they do that with? Bank of England also had a rate decision, and they're in a sticky situation. I mean, the odd part is they're basically in the same type of situation as us in a way. They're seeing issues with jobs. They still have inflation. They're choosing not to change rates, and they are around 4%. So it's interesting because they were already cutting. Now they realize they can't cut much anymore until they get the situation under control. U.S. kind of waited, and now it will be fascinating to see if the U.S. does cut these other 50 basis points that are expected for the rest of the year. BOE did not change. I think Bank of Canada also had an interest rate meeting. They're down to 2%, but they did not cut. So now everybody's kind of locked in where they are. No moves expected coming next. Leftovers. Are video game movies ready to take it to the next level? Let's move to the next slide. Any questions so far? What's going on, Rancher? How you doing? Agent Purr. Scramble is the only way to play golf, along with drinks for sure. Smack Lovin'. I will get to that in a second. Good question on Intel. I see. I will answer that when we get to the platform. Demunded. I will answer that in a little bit when we get to the platform and finish up the slides here. These are the worldwide box office grossings for the games. I'm sorry, start that over. These are worldwide box office numbers of the highest grossing movies based on video games. Super Mario Brothers movie, $1.36 billion made. Minecraft movie, $954 million. Super Mario Bros. Obviously I played. Minecraft I never played. My oldest was playing it, and I really couldn't understand because my whole entire existence, anytime we had video games, we wanted better graphics. We wanted cooler graphics. Minecraft literally flipped that on its head and said, we're going to give you this block type of world, and it looks like it's from 1983. Enjoy. And kids love it. It's kind of the same thing with Roblox a little bit, although Roblox took it up a notch, but kind of funny. Sonic the Hedgehog 3. You know what? I'll be honest with you. Those Sonic movies aren't really that great. It's personal opinion. $490 million. That was number 3 so far as far as video game movies. Warcraft, never played it. The beginning, $439 million. Pokemon, also too old for that. $433 million. Rampage, $428 million. That was always a pretty good game, I thought. I mean, there's something about an ape just completely going ape on a city. Uncharted. I actually never played that game, but I always heard it was good things about it. $407 million. Sonic the Hedgehog 2, $404 million. So these things are grossing. Not too many are grossing $1 billion, but still, these movies are grossing pretty big numbers. You imagine over time, you get the right game, you get the right situation. Easily over $1 billion. Let's move to the next slide. Speaking of billions of dollars, quantum computing stocks have really been on the move more recently. QBTS, IonQ, they are making big moves, especially in these last couple of days. This week alone, honestly, they've made some huge moves here, some big runs. I was just looking at some of the names that have made big runs this week, but IonQ is up almost 50% this week. And where's the, I forgot the others. Let's do mid to small cap. RGTI, Rigatoni, as I call it, over 53% this week. QBTS over 48% this week. These names have really had some humongous moves. I just decided to sell Vault and one earlier. I'll show you that when we get to the platform. Let's move to the next slide. Oracle, speaking of huge moves, boy, that earnings was something else, and that's where the huge historical vol line shows up there. But vol is remaining elevated. Look at the implied vol. Now, have we seen it higher? Well, the only other time we saw it higher was when during the crazy market moves in April and May. And so obviously, you had the huge move on earnings, which is where this historical line comes from, leading to implied vol still being bid. I am deciding to sell this one too. I'll show you that in a little bit. Let's move to the next slide. As far as things that are due to come, huge options expiration coming up tomorrow, supposedly one of the biggest ever, from what I understand, on record. It's also quadruple witching, right? So it's futures options, futures themselves are expiring, step futures, and the options, equity options and index options, so all 4 of those. We also have GDP coming up, which GDP really isn't that interesting, I'll be honest with you. And you can tell from this implied line. This is not one of the things that's expected to move the week. Core PCE, again, it's the market seems to think that it should move. It should have a little bit of bump to it volatility-wise. But I think we're starting to notice, like, the market doesn't really move as much on that. We kind of know where inflation is by the time we get to core PCE at the end of the month. Then it starts all over again, folks. That's right. I mean, there's really not many days left in September. Last week is the last full week of September. The week after that, you get to jobs week. You get the JOLTS report. You get ADP in there. You get the non-farm payroll. Then the week after that, as of now, I can't find any major macro events the week of whatever that is, October. Let's see. The Wednesday is the 1st, 6th. So yeah, the week of October 4th or whatever. Yeah, I just can't find any major events that are going to be going on that week. It's going to be fairly quiet. And then the following week after that, we get all these earnings starting up and CPI and PPI reports. It's going to be another busy one in about 3 weeks. So it's going to be a little bit quiet to begin next week. Maybe a little something towards the end of the week. Maybe not many earnings again. Then the following week is jobs week. It's going to be kind of wonky around here. We'll see. It might be a time to take a little bit of risk off the table. As far as it may be a little bit. It may be time if you haven't already. And I'm contemplating that over these next couple of days, even though I've added some risk on today. Let's move to the last slide here. Earnings, we do have FedEx, we do have Lennar, and again, it's the quadruple witching expiration. Number of SP 500 stocks above the 50-day moving average is 56%, 282, down 10 from the day before. Let's move to the platform, please. Through the rest of the day and tomorrow, 36.25 points expected move. It's an expiration. It's a quadruple witching expiration. Who knows what we're going to really get? Smack loving. Jamal, into this news-related pop. What do you think about selling a 1 DTE October put calendar at the 30 strike? Intel up 23% today. Feels a little bit euphoric. What do I think about you want to... I'm guessing you're talking about buying a put on the 30 strike, the put calendars, buying this put, I'm guessing you're talking about. And is that what you want to do? You want to sell? I'm a little confused by your trade, but you're saying it's euphoric. I guess you want to play downside is what you're really talking about, right? Like, I assume that's what you're talking about. Does this feel euphoric? I mean, look, this is investment. It's real. They bought 4% stake into the stock. I don't expect that much of a mean regression on this one. I think it would probably, what I would almost want to do is just outright sell vol. I would like to sell, I'd probably just sell a little bit upside, to be honest with you, is what was a little bit more interesting to me. 37 here. Let's look at a long-term chart of, let's see here. Look at a weekly chart going back. You know, this is a dangerous part. This thing is touching the 200-day moving average on a 3-year chart of 32 and changed. The next level up would be around 37. Yeah. Once it gets, if it were to get through this 32.50 and close there, next level up is 37. And me looking to sell November, it makes me a little nervous. Just as a momentum person, I'm a little bit worried now. After these big moves, I don't think I want to sell upside in here. As a matter of fact, the only thing I would sell would be downside, to be honest with you. So, but I don't really love these strikes. Geez, I hate selling something for less than $2. And the only thing that's down to $2 is the 36 delta. I'm going to stay away from now, but I would personally just sell vol in here. I don't necessarily play for the mean reversion pullback because I think this move is telling you that it's real. And the fact that it's such 200-day moving average, if it climbs up again, I think Intel's going to start going higher a little bit. Not like NVIDIA AVGO type higher, but I think it's going to start going higher again. I mean, this is a huge investment. This is very good, very positive news for them. I wouldn't play for the mean reversion. David Gonzalez, did I manage to sell my SPX Fly? The put fly you're talking about. No, I did not. I kept it on. I still have it on. It's my biggest loser today. I've got a lot of other things coming up for it. I'm doing well. Okay today. I'm up like $800 overall with all the different other things. So it's just offsetting. You know, it's my biggest short delta play right now. At this point, there's only $400 in premium left. I paid $1,700 for it. I mean, I'm probably just, I was trying to analyze whether I'm going to just hold it through tomorrow. Do I want to close it and move it to Monday? I don't know how much that helps, to be honest with you. 66, 65, 64. Oh, shoot. Hold on. 66. This is one of the things I was trying to decide before the show started. Do I want to just close that and roll it, or do I just keep it on and, whatever? I could do this and give it an extra day. I don't necessarily know how this helps really. It's just paying more. One of my biggest losers to date is, I think maybe I will spend a little money on it. My biggest loser today is SPX. I just have not been able to get it right, really, for most of this time period. That's the 19th. Let's close this one. Yeah, I mean, it happens, right? It happens a lot of times when you're hedging. This is why I always say, do you want to win on your hedge, or do you want to win on your actual main? What's going to be your main play? If you're long something, like long deltas, positive deltas, and you buy a put, which one do you want to win on? And that's where you try to figure out, like, okay, I'm gonna lose on one of these. Which one is it gonna be? I was willing to lose on this SPX put fly. I made more money on like long deltas, right? And I leaned long deltas and some things against it. The experiment worked, and so you just have to stomach losing in something, and that's the thing I lost in. But it didn't take me down, and that's the important thing, right? So I did win overall. It would have been nice to have won on the SPX put butterfly, and I guess it still could happen tomorrow if we have some huge move, but I'm not anticipating it. So anyway, I moved that to Monday, and now I got an extra day to see if something happens. Let's do that and that. So yeah, that's it. Let's see. Somebody asked me another question. Hi, Jamal. Do you have a consistent time of day you prefer entering and exiting positions? Profitable longs run to the close. Yeah, you're right. Profitable longs a lot of times will run to the close fairly often. So what I often do is I do have a certain time where I start trading. I probably start trading around like an hour to an hour and a half into the day. That's usually when I end up trading the most. In our case, that's Central Time. That's 9:30, around 9:30 to 10. That's usually when I put on a lot of positions. When I close a lot of stuff is typically at the end of the day, unless it's like this exorbitant move, or I'm up 100% in a short time period or something like that, and then I'm like, okay, maybe I can close this. It just really depends. So I do have certain times of the day where I'll kind of open and close. Like I said, it's usually early in the morning where I'm usually opening, closing towards the end of the day. Right now, you can kind of flip my portfolio in terms of extrinsic and see certain things. Like I have some calendar calls in JP Morgan here. That's been my play. Interest rates coming in, should be good for banks, should be good for housing. I don't have any housing plays on at the moment, though. Euro, I haven't decided. I got this. This is in January, and this is a. No, I don't want to do two. This is a put butterfly that overall I want to be short the euro, short delta. I have a put butterfly, which again, this is it's more of a slow moving trade when you have a butterfly, right? I just kind of tailed off some risk because I didn't want to be long so much premium. This is like about a $1,200 position when I bought it, the put spread initially, the 118, 115. I eventually sold the 115 and bought the 112, so sold that put spread, right, and turned it into a butterfly just to absorb any sort of losses from the dollar continuing to fall, which it has. I still want to be long the dollar, but as of now, it's still falling. So I'm not changing this position as of yet. But at some point, I will buy back this 115, 112 put spread at some point, maybe some point next week. You saw what we just did here for the SPX butterfly. ZN, I've been long this call for a while. It's on December. I'm going to roll this thing up. How much up am I going to roll it? 113? Do we want to put that much delta on it? Yeah, why the hell not? We'll do that. Let's see. How big is this position right now? It's currently, so this would make it like $1,000 worth. You know what? For now, what we're going to do, remember ZN got up to a high of 3 weeks weekly. It got up to, let's see, 1 year to date, 1 day. Got up to a high of 114 earlier this year. Yeah, I think we will move to the 113. Do we wait? Because this is looking pretty ugly right now. I got to say, it's looking pretty ugly. It's looking like it wants to fall more. We might wait on this a little bit. Here's the top from May, and that was right around here, 112 and 20 ticks. Yeah, right now it looks like bonds are struggling with a little bit of an identity crisis, but we're going to roll this to the 113, get a little bit more delta on it, smash that and go. Publish that to the follow feed. I still think there's a case for bonds to eventually move, unless there's just something really wrong with the U.S. economy. Then we're just really all in trouble. So I put a little more delta on that position. That's some extrinsic there. So I've got my positions right now laid out by extrinsic, as you can see. This is a zebra, the CRM. I did just put on a long call trade for the weekend. A little bit of fun here. Palantir looked pretty cheap to me. I just did a strip of calls earlier today. Maybe you saw it on the follow page. 177.5, the 180s, 182.5, and 185. We'll see if this stock makes a move, another solid move until the weekend. Maybe it can jump another $10 tomorrow. That would be pretty awesome. VIX, I still have this VIX trade on. You know, I mean, this is 33 days out. This is October VIX, again, 16-18 zebra. October VIX currently is at 19. I guess we'll hold this for a while, see what we get there. And IBIT is a zebra. And so these are all my long, basically paying, right, extrinsic plays. You can see these are negative. Here are some collectors, and see what these are the areas where most of these positions I've actually sold recently. Now, RTY is a long call spread that just happens to be mostly in the money, so that's why that extrinsic is positive. But the rest of these are short. IonQ, Baidu, Oklo, and Oracle are all something that I have sold in recent days. So IonQ being the most recent one. I mean, these stocks have been on the move more recently, and this vol has popped, and so it just seemed pretty interesting to me to sell some vol in here. I think it was about a 70% pop. Sold that strangle. We'll see what happens. Oracle. Look, this thing is jacked, man. These vols are jacked. I'm glad it didn't run more on a lot of this. This news cycle with TikTok is been really kind of good for them more recently, and you've heard a lot about it. What is this? I was looking at rolling. This is a 71% pop. I could get greedy here and get an extra $1 if I want for the 360 strike. Yeah, I'm gonna leave it. It's good. So short of strangle in there. What else did I mention? Oklo was another one I just put on earlier. I will tell you, I was a little annoyed this morning. I tried to pull the trigger. The stocks are so wide. Until you guys have seen me buy strips of calls. I was trying to buy this strip of calls right here for $2.50 earlier in the day. No lie. I mean, this was like, around the time I start the trade, around the hour to hour and a half time frame into the market. And I just watched the stock continue to climb. I completely missed it. Next thing you know, it was up big. This thing was as high as $17 at one point. I was so annoyed, but it's come back in. I just think it created an opportunity with this big move today to sell some vol. So I sold some vol out here, sold the strangle, the 140.75 strangle. That's my position now. And and then Baidu is the other one. Another thing that's been moving pretty big this week. Some of these names, Baidu, Baba, have moved pretty big this week. I decided to go with the strangle in here as well. So yeah, I got quite a few strangles now all of a sudden here. Some pretty high pop trades, and it's been going well. It's been going well. We'll see how this rolls out. Jamal, when your son's team wins the football championship, we'll be awarding him with his own Taste Trade account. Yeah, definitely. I mean, why not? You're never too young to have one. It's a good time to learn about money anytime. Folks, that's the show. Thanks for watching, and as always, be smart, be patient, trade them small, and trade them often. We'll see you.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Hello, everybody. Well, post FOMC, we're still green. The momentum from yesterday is carried through. We are at lifetime highs across the board. At the moment, ES, NQ, RTY, YM, green, 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 green. Crude oil's down. Gold is down pretty hard. My all short portfolio is actually up a little today, thanks to energy and a couple of other good positions. Got a lot of symbols, so we better jump in and get started. We begin, as always, with the spider, which, as always, is at a lifetime high. We will say goodbye to this horizontal because, we have busted through that completely. So there we have it. Lifetime high on the spider, looking like a lifetime high close, dead ahead. No meaningful events on the horizon. Obviously, earnings season is weeks away, and the big event of the FOMC is behind us. So now it's just kind of like fumes at this point, I guess. So up it goes. The diamonds also lifetime highs, like so. All the buzz from yesterday is continuing to flow through. The cubes, same deal. We are up over 1% on those, and in a lot of cases like Alphabet, more lifetime highs on the mega caps, the multi-trillion-dollar companies. And overseas, a little bit different. EEM actually showing a bit of red. Emerging markets have had a tremendous run up, almost uninterrupted until today. You can see here just a straight blast off. I think almost every single day higher. And then we've given up yesterday's gains, so we're back to where we were on Tuesday. So a little bit of a reversal there for emerging markets. One of the biggest pieces in news this morning was Intel. A few months ago, Intel looked really in bad shape. It was completely left out in the cold in an otherwise very hot sector, semiconductors. And the president was looking askance at the CEO, virtually accusing him of being a spy for China. And boy, has that turned around. Not only did they have a good meeting, but the US made a major investment in Intel, and then NVIDIA shows up with $5 billion and buys up a bunch of their stock. So the US actually is a handsome profit, I guess, on that investment. So we've got a tremendous pop in Intel, and that has helped semiconductors across the board. One somewhat exception to that, which I appreciate since I'm short it, was AMD. AMD was very weak early today. It's been fighting back all day long, but it is still in the red, which is pretty amazing considering Intel there was up like 28% or something like that. We still, let's just anchor a line right there. We need to get below that line in order to get anything more interesting going with AMD.
I'm sticking with the short, even though we've been pushing back all day long. It's a profitable short. I'm going to stick with it. Hopefully, we don't push above this line here. But yeah, AMD is defying this big rally. But in general, semiconductors are very strong. NVIDIA lifetime highs again. Here's SMH, which has just exploded higher by 4%, like so. And you can see, even at this distance, this incredible lift that's taken place in the past 5 months. So SMH itself has gone from around 170 to approaching double that amount. And remember, this isn't one microcap. This is like the overall ETF for the whole sector. 100% almost gain in those 5 months. Another short, which I appreciate and is pretty much a daily visitor to this segment, is Cracker Barrel. CBRL reported earnings, and it's down hard, almost 8%. We all remember the brief kerfuffle about their logo. Around here is when it hit the culture wars. There was all this screaming and gnashing of teeth about Uncle Herschel going away. And a few days later, they raised the white flag and said, terribly sorry, Uncle Herschel's coming back, and didn't mean a thing by it. So everyone celebrated by buying up the stock. That was a good time to short it, because people were just buying it just to say, thanks, Cracker Barrel. But the fundamental path of the company has been pretty clear for years. And so I shorted it and have been cheerfully hanging on. I didn't even know earnings was this morning until I woke up and saw it was down hard. But just going to keep hanging on. It's a good one. You just tighten up the stop along the way. Over in precious metals land, you may recall that a couple of days ago, I sheepishly offered that maybe it was time for gold to take a breather, and it's breathing. It is easing back. Lest you missed it the first 90 times I said so, I'd love to see it head down to this level here. I think that'd be a fantastic place to buy gold. As it is now, I'm keeping a very safe distance, and still long-term bullish and medium-term bullish, short-term bearish to neutral, I suppose. But yeah, gold, the front month is down about $40 in the contract, and GLD is down about 0.5%. Miners, strangely unchanged, just about. They're actually holding their own pretty well up here, like so. Although Newmont, the biggest of them, is down about 0.5%. And from a charting perspective, in a very precarious spot. This trend line had represented support, now it's resistance, and as you can see, it bonked its head against it after this amazing run. From late last year, it went up triple digits percentage-wise in a virtually straight line, but it conked its head on that trend line. It's starting to ease back a little bit from that. I will say, again, sheepishly, that I've tiptoed back into palladium again. Not full on. I've put in half my intended position. Just to review here a little bit, I bought palladium back here, and up it went. I sold it, whatever this day was, the 12th, and it tumbled. And I was just sitting it out for a while. But today I decided to get back in again, based upon the fact that we have sealed this gap. There is a decent amount of trading activity in this zone here, which I think will represent some support. Plus, long term, I think it's still a terrific looking chart. As I say, it is only half the position. If gold plunges and palladium freaks out and goes down to, okay, fine, I'll take the loss. If it holds its own, if it doesn't cut below support there, yay. The firmer it gets, the more comfortable I'll be taking on that second half. So just kind of put my toe in the water, see how that goes. Long term, never had any change of disposition. It's a really good looking long term bullish chart. Speaking of bullish, just some few odds and ends here of charts that are doing quite well lately. No particular sector or anything, they're just good looking charts. Here is AMPX, which is has based quite nicely. This is a beautiful cup with handle pattern down here. It zips higher, consolidated a bit more, and then zip, up it goes again. So we're getting about a 10% pop today on that. App 11, lifetime high on this. This has been in a crazy uptrend. It was a single-digit stock. It's over $400 now. So this just keeps cruising higher. Terribly expensive, of course, from any fundamental perspective. Yeah, PE of 84. Quantum is very hot again. It had paused for a while, it consolidated for a while, but it has been getting firmer and firmer. Yesterday, a very good day in the quantum sector, and then today augmenting those gains. So QBTS, D-Wave, which when we talk about quantum, I've always mentioned D-Wave as my favorite of these. Having a good day, up again about 9% to a lifetime high. Reddit, RDDT, lifetime high there too, up about 3.5%, and ostensibly a big source of training data for the world of AI. And one other one here, also quantum related, Rigetti, RGTI, up a lot, 14% lifetime high, coming off a very good looking pattern here, like so, cutting above yesterday to another lifetime high, and then another lifetime high today, like so. So across the board, quantum doing well. Over in crude oil land, here is the right triangle, and we're slipping on this decent amount. I believe I mentioned yesterday that I was tiptoeing back into XLE, the energy sector. I'm short a couple of ETFs. One of them is TLT, which we'll look at it a little later, and then there's XLE. So far, so good. This is down, not much, but it's down. And this is probably, that's a little tight for the anchor point on that one. We'll just lift that up a little bit. But it's edging down in the right direction. Some individual energy shorts I've got looking pretty good. BHP, this is down 1 2/3%. You can see those rounded tops right there. And Occidental is up a little. Very big pattern though, and so long as it doesn't exceed this red horizontal, I'm okay with it. Interest rates. Of course, interest rates have been a big deal this week because of the FOMC yesterday, and my projection has been they're all heading lower for a long time to come. I think interest rates have got a long way to go down, and that's starting to play out across the board in just about any chart I look at. Just here's a hodgepodge. Here's the market yield on U.S. Treasury securities, and you can see I've drawn out the tops on these, and in some cases the tops are complete. Here's another Treasury securities, very long-term chart going back for many, many decades, tumbling down there about 0.5%. Here's another one, U.S. Treasury securities, not going back as far, but you can see these major tops going on and what followed. 2-year Treasury, like so, getting very close to completion here, but you can see top, just again and again and again. It's not a huge one, but there's a little BB one over there we might as well highlight. So that's been a very steady predictor of what's to come. And corporate, this too is getting right near completion. Massive top on this one. So just to drive this home, I think a lot lower interest rates coming, including mortgages, by the way. This is the 30-year fixed rate mortgage. It peaked quite some time ago, and I think we're going to be seeing years of lower rates in this one. Oddly, and happily for me, Treasury bonds didn't get the memo. They are falling, even though interest rates, generally speaking, are falling. You would typically think they'd be inversely correlated. But yesterday, I shorted TLT in size. It was my biggest position. And it was based on one simple thing, a price gap. There's the gap right there. Before the Fed even announced, I went ahead and shorted it with a nice tight stop at 91.15. Didn't hit it, luckily. It fell for the day, and it fell more today. There's another gap, so I've tightened up the stop to 90. But yeah, it's encouraging that even with all this good news on yields, TLT still finding a way to get lower. And the last bit, just to show how powerful the bulls have been and how powerful this bull run has been, small caps, lifetime high. So at this giant Fibonacci range, we're pushing even above that. So that is all, and I'll say fare thee well, and see you tomorrow, and we'll wrap this week up then. Thanks, good night.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
If you missed the live show, here's our cherry on top weekly recap.
I went to the pool at the,
You went to the pool at the Soho House?
yeah.
And you didn't go to my pool?
Yeah,
Do you think he wore his Crocs?
100%.
100%.
You can't.
100%.
You wear your jorts? You wear your booty jorts with like your ass hangs out just a little bit in the back? I'll gross myself out.
I just threw up in the back of my mouth a little bit.
Daisy Dukes in like a crop top with Crocs. Meow.
All right, so the X date on a stock, what does that mean?
The X date for a stock refers to the X dividend date, which refers to the dividend of that stock. So if you have a short in the money call and the extrinsic value is less than the implied dividend, then you would be at heightened assignment risk. So the X dividend date is something you want to make sure that you are aware of so that you can either roll or close that position to avoid that extra assignment risk. What does it mean when you hear the term pin risk?
So pin risk refers to options that are usually on a round number and the risk of a pin at the end of the day or the end of the expiration for that underlying. So this typically is applied to SPX or very liquid underlyings that have monthly or weekly expirations where the stock price or the ETF price or the index price is right at an even number where a lot of volume and open interest is. Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
Mikey, my friend, we are back, and boy, do we have a face ripper of a rally today. E-mini S&P 500 futures, they're down about 5 in the last hour or so, but they've been just a straight up move. They're up 36 here at 66.95. We've been pinned at that 6,700 mark for most of the session. NASDAQ up 257. You got the Dow up 116 and the Russell up 56. The Russell, the strongest of the group today. Oil selling off a bit, /CL 63.37. Volatility futures actually at the high of the session here, or near the high of the session, basically unchanged. They have gone from 1725 to 1780. A little bit of vol getting pumped into the market right now. Bonds down 27 ticks. A little bit of a weird move in bonds given the rate cut projections on the table. Gold off $41, close to as much as you need. I think you need another 40 points or so. Maybe we'll get that. Silver down 6 cents. Bitcoin up $1,600 on the futures. The spot is up 122, and Ethereum down 30 cents right now. But it's been pretty much a buy everything day for most of the session here. I don't know if I take too much out of this. Quick little closing of longs into the close here.
Yeah, I mean, to quote the great Bat, as foretold, the market is ripping higher. Volatility is basically at zero. Gold's down. It's just like, it's like exactly how as we said it could go yesterday.
Yes.
Big US dollar rip. I closed a lot of those Tasty FX positions that we put on with Glenn. Those were great. Just long the US dollar in a myriad of ways. But yeah, I mean, you're seeing some recovery in some of these single name stocks. AMAT up $12, Nvidia up $7. It's kind of wild to see just this buy everything scenario. And yesterday was crazy too. Yesterday I saw everything was red. I was like, oh, here we go. We might actually get a multi-day sell-off, and then they bought them up same day.
Come on. Multi-day sell-off. What is that?
I don't know anymore. It doesn't exist.
That doesn't exist.
It's crazy.
But yeah, I think the move in the currencies today was certainly an interesting one, given that it was kind of a sentiment, a weak sentiment on the dollar going into rate cuts. That's kind of reversing today. You did point out a bunch of stocks that are higher today. A lot of the chip names, Nvidia on there. I'm just looking at the S&P 100 here. Intel had some news here on investment from Nvidia, so it's up $6-7 here on the session. A lot of these chip names, IBM is up, GE is up, you got Caterpillar there. Even Adobe is getting a bid. But yeah, there's not much to the downside here. These downside stocks, not a ton of those are really heavily traded, other than Netflix, which really has kind of just been chopping around this 1,200-ish mark for quite some time. I think it's a little bit interesting. We've got volatility creeping up here into tomorrow, triple witching. So a quick PSA for the SPY peeps, if you have positions on there. There's a dividend coming up. So if you look at the weekly expiration and you look at the extrinsic value here in this at the money long stock position, so the way we can estimate the dividend coming up, this should trade to parity of whatever the stock is trading at. And by stock, I mean ETF. Whatever the SPY is trading at. So this should actually trade at about a 50-cent debit, and it's marked at $1 credit, which means that there's $1.50 of free money baked into this trade, essentially, based on where it's trading. We know that there's no free money there, and that's going to be the dividend that is coming in SPY. So I would imagine it's going to be somewhere around this extrinsic value number, which is this should be a 0 extrinsic value position. It's not, because of that dividend coming up. So it's probably somewhere between 150 and 170-ish is what I would expect going into tomorrow, just to give you a little heads up on that. For those people that are trading, obviously, if you're in September, I would be rolling out. But in October, if you are somewhere with a short call, let's say 615-ish, those sort of options are at risk. But really the ones you should be worried about, if you have any deep in the money spreads or something like that are in the September expiration, I would look to close those out. It'll save you, $100, $200 there.
Yeah. You don't want to be assigned prior to X dividend, because then you would owe the dividend.
Yes.
But yeah, that's about in line. The previous dividend, June 20th, was $1.76. So that is spot on from your analysis for the projected dividend, or the dividend they're pricing into the options, we should say.
Yes.
Yeah, I was pretty active this morning. Did a bunch of stuff. So closed some positions. I had that TLT, the 2 long puts from the put zebra I had on. Closed those into the sell-off. It actually, I got back $200, so it was still a 40-cent loser, but it went from basically max loss to gaining back $200. So that was nice. Mm-hmm. In AMAT, I've just been holding on to a 190 call in October, and I finally got the rally we were looking for, and I sold a 200 strike call for next week for $1. So I re-diagonalized that position and reduce my cost basis by another $100. So now I have a 10-point wide diagonal with the short option expiring next week, the cost basis of $874. So I feel a lot better about that position now.
Mm-hmm.
I
like that.
Marvel, that was a call diagonal spread, closed that for a $100 winner. That was a trade I put on yesterday. Thanks to the YouTube chat. Shout out YouTube chat.
I have a similar position on, I think.
And then SMR closed a $140 winner. That was a short put expiring in October. And AI, this was that short put I had on. I think this was from Fast Market, but I've had this on forever. And I realized it was 1 day to go, and we got a nice move higher. So that was a 65-cent winner. So yeah, just a lot of risk removal today, for sure.
And a lot of those names are fringe names. Like I was looking, I had a couple emails about Oclo today. It's reached $100. It's up, $30 in 3 or 4 sessions here. I have a position in BE, which is Bloom Energy. I have I had a call ratio spread. The stock has gone just parabolic here. I sold the 65 puts against it, but this part of the market, these stocks that are just going absolutely bananas, like, getting bailed out on your AI short put is another one. These high flying, high vol stocks going nuts is usually a it piques my interest as like, okay, maybe we get a little bit of a dippy do at some point soon. You know, like when you got the pigs, like these, you know, like, come on.
This is peak euphoria is what you're saying.
Yeah, when you're talking about things being here, I've been telling my friend to buy a stock for quite some time, and the stock was up pretty significantly today. It was up like 7 or 8%, and he texted me back. I'll give you the word for word because this is a sentiment check for everybody. He texted me, so he goes, "These days, if something isn't up more than 15% in a day, I'm not impressed." That is a word for word, okay?
That's insane.
So, you know, we're at that stage. We're at that kind of, I don't want to say it's you know, a top, but we're getting to the stage, it feels.
Yeah. I mean,
and that's a direct quote. And he is a very he's a lawyer, he's a really smart guy. That's a sentiment check for you.
That's just the state of the market we're in. It's wild.
Yeah.
But yeah, speaking to gold, interesting to see a nice sell-off here. Yeah, I need this down. So next week I have the 7-day butterfly. I need this down below 35.90. So we're getting pretty close. We're right there. That would be really nice if we could get a move down below 35.90. But yeah, other than that, I have that long IWM short NASDAQ diagonal spread on. So the net position is up $200 now, which is nice. Down $140 in the Qs, up $350 in the IWM position. I think what I'll do is I'll keep my eye on the short put. This is a long-term one, so I'm long December, short October for both of them. Okay. I'll keep my eye on the QQQ short put. Still has $200 of value. If that gets below $100, I'll just buy it back. And I'll probably just close the other one because the IWM call diagonal is about to be fully in the money. I have the 245 short call. So I might just take the whole package off, honestly. But
good trade.
It's nice.
You do have one of your favorite earnings after the close today, FedEx. You got FedEx and Lennar, LEN. Let me see if we have anything tomorrow.
FedEx is scary.
Why?
Because they've just had poor earnings recently. Earnings results, I should say. Last year, it was just up only. Not the same this year, but pretty decent expected move. 17 points for tomorrow on a $225 stock. Pretty good chunk. I think I'm going to sit this one out, though. I don't have any. This market has just clouded my judgment, we'll say. Similar to your friend who texted you about the 15% or bust. Daily 15% or bust.
Yeah, I texted him, you know, my stock was up, 8-9%. And he's like 15%. I don't get out of bed for 15 unless it's 15%. That's just incredible.
Yeah.
E-minis here limping into the close, only up 32 here. What are your thoughts into tomorrow? You think it's more of the same or you think a chop fest? I mean, we've got the nice round 6,700. If we can close around there into triple witching tomorrow, we can all pat ourselves on the back for a new all-time high. You know, you can have a nice weekend and not have to worry about anything. Is that the game plan here?
I think so. It feels like a nice 6,700 narrative pin.
Yes.
I mean, yeah. Why not?
Why not? What would spook you?
Well, I said it before the announcement of the rate cut yesterday. What would spook me is like a 150-point sell-off plus a vol spike. We're just not seeing vol move in any substantial way, which tells me that, like yesterday, if yesterday's sell-off held, I was prepared to put on bullish positions because vol didn't really move.
Yeah, vol was what we talked about on last call. Volatility was actually contracting into the down move. Like vol was down 30 or 40 ticks into that 40, 50 handle move to the downside.
Which tells you that the market was fearful of a 150, 200 point sell off on the announcement, but we didn't get it.
Yeah.
It's crazy. Even though the market was projecting what, a 50 point move in either direction. But yeah, it's just that's what I'm looking for. Really, is like for me to be prepared for more like bigger downside moves. I need to see a vol spike here. Like look at this chart. It's not looking too good for volatility, we'll say.
Yeah, agreed. I've got a couple people pointing out that just in general, the Mag 7 stocks are pretty much flat today. If you look at Apple, down $1.40, kind of a weird divergence from the rest of the market here. Amazon down 50 cents. You have Tesla down a handful here. You've got Netflix, of course, is one that like just really hasn't participated at all. On the flip side, you have Nvidia up a handful here at up 6 and change. Meta has been relatively strong. Google has been relatively strong. So you have like basically the 50% of the market is essentially zeroed, and then this move is kind of all the other stuff flying, is what it feels like. You know, your INQs, which was up like $5 earlier in the session.
Yeah, it's just kind of wild to see some of these names just ripping, like Bloom Energy. That is it's one for the ages.
I know that's a 20 to 80 move in 2 months. It's this is the 15% a day trade.
Yeah, some people in the YouTube chat saying UPS is a great way to trade FedEx without the extra premium, assuming you're buying premium. You could see a little sympathy move there. Obviously similar companies, but people looking at SPX, butterflies, trying to play for that the pin, if you will.
Where are they thinking?
Just at the money. One day at the money.
You do like the 6,600, 6,590, 6,675, 65 or 6,685 for 280.
Or you could just buy the 1 day 6,700 call butterfly.
Let's do. I'm gonna do the 1 day. We're gonna put a little risk on here.
There you go. Little iron condor.
Yeah, right at the expected move. Just play for a chop fest tomorrow. Yeah. There we go. 310. 1/3 the width of the strikes.
AMD big recovery today. Yeah, it opened at 150 or just below it.
What's it at now?
158.
157.
Yeah.
There you go. Yeah. AMD was not participating in the everything rally in the chip space. I was looking at LRCX, AMAT, NVIDIA, of course, AVGO has been relatively strong. I mean, these things are just, you got to buy them today. They're cheap today, more expensive tomorrow.
Indeed. Yeah, I think we get a little chop fest tomorrow. I would be shocked if we got any sort of substantial sell-off, even though vol's picking up a little bit here. But yeah, I think when you have the news came out, market sold off, but it was immediately bought, which it literally made me laugh. But I think the best movement that we're seeing, or the most tradable movement, could be in the US dollar. I mean, you're getting a lot of, if you're on the Tasty FX page, you're getting a lot of 0.5%, 1% moves in these currency pairs today.
Yeah, that has been a good trade today. I mean, and there's a lot of room to go. If you pull up the dollar sign with DXY, that's the dollar index, you can see we've taken it on the chin. The dollar is not strong at this point. If you were looking to put on something contrarian, that might be a place to go.
But yeah, I think we get a chop
tomorrow. I think the narrative is in.
Yes. E-minis have reversed their sell-off, now back up 40. 10 minutes with a handful of minutes left to go. 6,700 is the soup du jour today.
Just pin that level. Post JPOW 6,700. We're almost at SPX 6,900.
There you go.
We got to get those crypto coins before they sell out.
Yeah, I will say I'm going to be looking at the Guess the Market contestants over the next couple weeks because we have that coming up at the end of September. I know that you're a little bit far off, but you're pretty close relative to some of these other more inside the expected move guesses that the show hosts have put out there.
What am I at this quarter? 66, 66?
Something like that.
I think I am at 66, 66 this quarter.
Let me see. If I can pull it up real quick.
I would love to win one of those. It would really please me.
Okay, so I'm pulling it up real quick here. So you're at 6,900. Oh, 69 for Q4.
Yeah.
But you're close. You're right there.
I mean, yeah. We could be there easily.
Katie's at 65.65 on SPX.
Okay. Pretty close.
She needs a 50-point down move from here.
So 13 days out, 12 days out is the quarterly expiration of September 30th in SPX, plus minus 100 points. So yeah, I mean, you just have to triple that, and I'm there.
Yeah, 2-3 standard deviation move. You're right there.
Yeah.
I love it. Should we bring in the boys before we get to the closing bell
action
here? Yeah, E-mini's up 35, NASDAQ up 246.
Hello.
Are we still buying them, gentlemen?
I mean, we're gonna run it hot. That's what we're learning here from how the markets read the Fed. I mean, dollars up, yields are up, gold is down, and the stock market says, you know what? I didn't want those rate cuts that much anyway. We're gonna run it hot. Apparently, until we hit whatever wall, but that's a problem for later us.
Were you surprised by the move in the dollar? I mean, I felt like the consensus was to be short the dollar. I know you've been leaning long the dollar.
I've been leaning long, so I'm loving this.
It's a good move, but I'm a little surprised.
I was straddling both sides of the dollar going into the FOMC. I was short the euro and long the pound. Overnight, I took P&L on my pound long, said thank you very much for this little tidbit, flipped long dollars against the pound, sold some Aussie, sold some Canadian dollar. The FOMC announcement, I mean, yeah, we got a cut, but everything else was hawkish. All of the revisions were hawkish. The forecast was hawkish. Powell said he is not in any way, shape, or form endorsing market pricing, and said this was a maintenance thing, not a easing for bad reasons thing. And so said, you know what, the balance of risks has changed, and didn't bless any of the market's sort of more dovish instincts, which, by the way, are still on the board in Fed funds futures. So it sounded hawkish, and the markets reacted hawkish, except in stocks, which is interesting. And
I
tells me that they just want to run it hot.
I reject all use of the word hawk.
Let the
You're
dove fly.
Hawkish now, Dylan. I mean, you.
I'm in the Ratigan trade. Long dollar, short gold, short NASDAQ. Dollar's working. NASDAQ we shan't speak of.
Yeah.
And gold is working.
Gold's working. So of the things we can talk about, it's working perfectly.
Well, Dylan, our long IWM short NASDAQ pairs trade we put on, that's working beautifully.
That's a dandy, but again, the NASDAQ is mildly agitating, and as such, I suggest not talking about it.
Fair.
Well, you got the YouTube chat. saying that because Vecchio's no longer here, you started thinking, Dylan. And now you're going against your number one rule of not thinking. And
I know I decided to start thinking 48 hours ago. It might be the end of my cash balance.
Come on, man. Can't do that.
I've stopped thinking about
At some point, a
stocks
man has to
completely.
think, okay?
I've decided that thinking depends on asset class. If you're in currencies, if you're in commodities, by all means, think.
The best way
if
to
you're
make
in
money,
stocks, ill-advised.
best way to make money is suspend all thought. Unfortunately, I have been overcome by thought. And as such, I'm short the NASDAQ and short gold. And as a result, I'll probably lose money. But at least I'm long the dollar. And at least I have the gratification of the occasional utility of my brain cells.
Mikey uses a phrase. He'll say, just buy them and then like go into like a cryogenic chamber so that you can't even close them or think about the valuations or the prices or anything. You like turn off access to your account.
Exactly. You have to suspend thought. Although I prefer to call him Mike Butler. I don't know who Mikey is.
That's fair.
I actually read a fun article today that Kevin Durant has not been able to access his Coinbase account, and his agent's like, well, it's only worked out for him because he hasn't sold Bitcoin.
Somebody's trying to hack my Coinbase account recurrently because I always get a double two-factor authentication notice on my SMS that I ignore. So there's some Hungarian bastard who's trying to get into my account that I just refuse to authenticate, and so I hope for the best.
Perfect.
Nothing against the Hungarians. I don't know these Hungarians. It could be Croatian.
Yeah. What was your phrase you misunderstood? The person that called the crazy Hungarian or something?
No, that's the what is it? It's the Chechen nut job.
The Chechen nut job. Maybe it's some Chechen nut job trying to hack your Coinbase account.
I believe it is. I believe I've got a Chechen nut job who was on my balls. Okay. And I'm getting a lot of two-factor authentication issues. I just ignore them. But I do, for anybody playing along at home in the Tasty universe, recommend two-factor authentication.
It is good.
Lest you be plagued by a Chechen nut job, you can decline to approve the second factor.
And that's some words of wisdom right there. E-Mini's up 34 into the close here. We're going to take a quick little 90-second break. The boys are going to come back for overtime. You're listening to Tasty Live. We'll see you tomorrow morning.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Tasty Trade has crypto, and you can trade with 0 commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
If you have any questions, feel free to toss them in the chat.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this.
To me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
If you missed the live show, here's our cherry on top week.
Did I see a birthing room?
Birthing room?
Oh,
Yeah,
stop. Please
behind
stop.
JJ, is there a birthing room?
That's not a birthing room, you genius. Okay. Oh my God. Yeah, we have a whole birthing room. It's called. Oh my gosh, I think it's called a lactation room. Okay.
No, we have a birthing room. Hey, Tasty, we're delivering babies.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
And we are back. This is Overtime. I'm Ilya Spivak in San Francisco. That's Dylan Ratigan in Milan, Thomas Westwater in Chicago. We are looking at just a bit over 24 hours after the Fed. The dust is settling. The markets are picking a direction. Gentlemen, what make you of all of this?
I mean, it kind of came in as expected for the most part.
the initial reaction was a sell-off. I went ahead and got long when the NASDAQ dipped around 24,400, sold a put spread at 24,000, and I did it in the 1 day, so it worked out there. I think now going forward is a little more uncertainty. You know, Powell stating that both sides of the mandate are potentially can be misaligned going forward this year. I mean, we got the one dissent that was a given for the 50, but I think it's going to be the same story going forward, data dependent. I think it's going to depend on the news. Inflation comes up, you're going to be looking at, you know, more risk in the market. Labor market goes down at the same time. That complicates the Fed's path. So I think we have to take it week by week here, looking at data points, and it might be potentially more volatile going forward.
Yeah, I think so. Let's take a look at the charts here. I think probably the most annoying of the charts for those of us that were short the S&P going into this is this right here. So here's the Fed, and Thomas, to your point, the initial reaction is negative because I think we can surmise here that all of what the signaling was besides the cut itself was on the hawkish side of what the markets wanted. And I think you can see that with the naked eye, as it were. I'm just going to see if I have the Fed forecasts here. I do.
What's the alternative to the naked eye?
The eye covered in glasses, I suppose.
Okay.
I suppose, as you see demonstrated here.
I mean, you know, corrected vision might be considered a preferable alternative to the naked eye.
If one needs one's vision corrected. If one's vision does not need correction, then all you see is a blur, and that's a whole other situation. What you can see here clearly is the revisions to GDP growth. They're not down, they're up. They're up for this year, they're up for next year, they're up for the year after. The only revision that you see in the forecast for unemployment next year, the year after, it's for unemployment that's lower, not higher. For inflation, only one adjustment for next year, and it's higher. So the Fed comes out and says, yeah, here's your cut. Whatever. You knew that was coming, but everything else we are going to upgrade to more growth, more inflation, and a better job market. Okay. What about rates? So the baseline here is a little bit different now. The Fed basically says, okay, the market's already priced in 3 cuts. We will endorse this. Congratulations. Even though it was very narrow, by 1 vote. Guess whose vote it was? You see this lonely dot down here?
I do.
Guess who the tiebreaker was?
Can't say.
Yeah, between 2 cuts and 3 for this year. But the market's already had it in the forecast at over 80% for both of those cuts, October and December, a week before this Fed meeting. And you can see it here. So here is, there we go. Here is October. This is a week ago, over 80%. Here's December, a week ago, over 80%. It's not like the markets didn't know that this was going to happen. So what did the Fed do here? It just acknowledged what the markets already knew, but then still only 1 rate cut for next year, only 1 rate cut for the year after. That's at least 50 basis points removed from where the markets are. So this sounded hawkish. And so the dollar is up, yields are down, or bonds are down rather, yields are up, gold's down. All of those elements of what we'll come to call the Ratigan, all of that is still there. I mean, you can clearly see it. Here's gold. It's down. That's not a dovish.
Gotta love the short gold, long dollar, but not satisfied with the Nasdaq's performance as it comes to the Ratigan. Speaking.
Well, and this is the interesting thing. So all of the hawkishness here seems to be existing in all the assets except stocks. Stocks seem to have a very different view on all of this. So here's the dollar. It's getting stronger.
Gotta love it.
If you want to look at the dollar index, we can look at an average of the dollar. There it is. It's up.
Gotta love it.
If we wanted to look at what the bonds are doing, bonds are down, yields are up. So I can only surmise that what all of this means is that the markets have looked on upon the Fed's forecasting of faster growth and faster inflation and lower unemployment and said, they have decided that they're not going to continue to try to save the White House from itself. And they're just going to say, you know what? F around and find out. You want to run this economy so hot that inflation kills consumption? Go ahead. Run it hot. See what happens. And stock markets said, okay, I guess we're going to run it hot. I guess growth is going to be faster. I guess inflation is going to be faster. I guess asset valuations on the risk side of things are going to be higher. And so NASDAQ seems to, I mean, we have it here with the naked eye, as it were. It's going up.
I find it agitating and perplexing and somewhat dismaying.
It is all of those things. What it is from a price action perspective is closing above the swing high here, and so making a higher high and basically saying, I'm resuming the trend. I'm going up, which interestingly, Thomas, is not what you have in the S&P. You try to make a new high and then you fail. Does this tell you anything, Thomas, about maybe there's something under the surface here? Maybe the market is still attempting to think about what it thinks of the Fed and still deciding, or have we already decided?
I mean, yeah, staples, discretionaries, energy were the only real three losers today. Technology coming in really strong. I think this is the NASDAQ making new highs is speaking to the economy is going to be run hot. These companies are going to be able to capitalize on that growth better than others. But I mean, the S&P 500 wasn't the vehicle that I wanted to get long in yesterday. It was the NASDAQ. I think that would have had the best reaction. It's been the leader. I think it'll continue to do that. But you also had a lot of strength in the Russell. So, I mean...
You did, yes.
It's, the Russell, a lot of regional banks, of course, it likes lower rates. If you're thinking of a hotly run economy...
This is the run it hot prime example.
This
is like the cyclicalist of the cyclicals.
I mean, it goes back to what I was saying on Tuesday, that the risk isn't in the short term. It's possibly next year when, if you let this economy run hot, the difficulties with the dual mandate that Powell mentioned is going to come in the form of hot inflation and, it's a still weak labor market where those mandates are conflicting and they have to pick one to address. So for the time being, they're focused on labor. Of course, that the labor market got weaker and we got the cuts. Inflation is still above target. So I mean, it's next year, I think, where the real risk comes. And I think the market is going to continue to just grind higher for at least a few months. I mean, the rate cuts are here, they're coming, but what comes after that? What are the consequences of once these rate cuts start to bake into the economy next year? So the way I'm going to be playing this is taking my shots on the long side. On dips, I'm going to be selling put spreads and mainly playing it through that, giving myself a little bit room on the other side, doing it with short-term expirations, possibly as low as 1 or 0 days. And, I've done that in and out over the past few months. It's worked. I'm going to continue to do that.
Yeah, I mean it's a very interesting thing here. Now, are you going to in making the assessment that, okay, you know what, they're going to run this thing hot, it's going higher until it isn't. Who knows where it ultimately wipes out? It will wipe out eventually, but this is not where that is apparently. So how do you structure that then? Are you shortening duration or extending duration? Are you saying I'm gonna approach this in the Russell, or you're gonna stay in the Nasdaq? Are you picking individual days?
I'm going to stay in the Nasdaq, and the reason I'm doing short duration, which isn't like I do in other assets,
right,
is because you get these big moves up after these dips, and you know the moves higher are pretty quick off these dips, so they get bought up quick. And if you could get in and out of these positions, you know, without waiting weeks to take it off, I think that's the way to go. It's like I said, it's been working for me, so I'm going to continue to do what's working.
It makes sense to essentially say, well, you know what? I'm not going to make a great big bet on what the trend is. I'm just going to make a bet that the market at this point is so conditioned to buying the dip that even if eventually it's wrong, you'll get that initial rip from a dip. And if ultimately you get the big one, it'll be after some initial reaction, and hopefully you're already out of there by then.
Yeah, and I mean, the labor market's interesting right now. It's like, you know, we don't have hiring, but we don't have many layoffs yet. It's kind of stagnant. Right. It's stagnating, and you know, is one cut going to inspire enough confidence in these companies to start hiring right away? Probably not. I mean, so we're probably going to see the labor market continue to not drop off a cliff, but just continue to stagnate. So I mean, once you get 3 or 4 rate cuts in, and you get the labor market starting to recover with inflation already above target, you know, then there's more demand in the economy, more people with jobs. What happens to inflation then? I'm presuming that inflation is not going to get down to target, and next year we're going to see it start to rise more. You know, and there's arguments, have the inflation impacts been baked into prices all the way? I don't think necessarily yet. I think that's going to take some more time. But I think the risk to the market in terms of headlines and, you know, trade war headlines, I think that's largely off the table for now. So I think it's going to be something that, you know, we're trading less headlines going forward, and we're trading more data.
It certainly seems like the game now, to your point, is, okay, we're going to run this thing hot until the heat of the inflation starts to really beat down consumers. And we already have this weakness, Powell talked about it, in what happened with consumption in the first 6 months of the year. It was a terrible 6 months for consumption, the worst in 5 years. 5 years of before this year, of course, was the COVID lockdown. So not a happy reference point. So we already had weak consumption. If we look at face value, let's say the retail sales numbers this week, they were fairly okay. Mostly because of e-commerce, mostly because of purchasing up market. But down market, there's a lot of strain. And we can see that, we can certainly imagine that by the time we get to third quarter GDP data, those consumption numbers are going to look weakish. And then going into the fourth quarter, weak, because all of that inflation really starts to build in its cumulative effects. The goods inflation side, and again, Powell talked about this in the press conference and pointed out goods inflation, as we've been pointing out, is at the highest in 2 years. And that's not negligible. That's not normal. So you have a situation where ostensibly this will come together to crash growth and basically overheat the economy eventually. But the question is when does eventually come? And in the meantime, you're basically one bad data point away from saying, oh, we've arrived. Here is eventually. But until you get there, you don't really have any reason to think that you finally had one shot too many, as it were. It's one of those things where you know the line when you cross it.
Yeah, I agree. And I mean, you look at regional banks, they did really well today. Of course, they like those rate cuts. But I still think there's two different economies right now in America. And I think that's why technology has done so well. There's still investment. There's still capital spending. I mean, there's still a lot of this AI hype. And, you know, I was a little surprised to see the Russell perform so strongly today. And I think it's the banks that are reacting to that. I think without the banks, the Russell wouldn't have made that move. But I mean, it's
probably not.
It's, you know, I have less confidence in the Russell going forward than I do in the NASDAQ. So, I mean, I look at the Russell, but I don't trade it.
Yeah, I mean, if we look at where we did the best here, just looking at one-day performance, I mean, obviously, tech absolutely killed it, and all of the weakness today seems to be on the defensive side of things. But it isn't just consumer defensive that had a big hit to performance. It's also consumer cyclical. It's also energy, which is interesting in the in context here, because it does seem like the market recognizes that running it hot is not a good idea, but also that things like tech aren't so cyclical, and until there is a real hit to underlying demand, they can just run for no reason other than there isn't a bad reason. Which is a kind of, it's a kind of crazy thing. Is there anything that interests you gentlemen on the bond side of things? Because this now is a very curious chart, and what I'm seeing here is a trend that's going up, a pullback into former resistance turned support, and the sense that if the Fed is really of a mind to cut rates, but it's not going to go big now because it hasn't seen sort of the boogeyman of growth here. It's upgrading its forecasts and whatnot. That this means that rate cuts are going to keep getting pushed out, and so the yield curve maybe twists, and so you get fewer cuts up front, but more of them later, and maybe this is a buying opportunity.
Yeah, I think this is a buy when ZB drops just a little bit more. I have it marked as the 21-day EMA, which is right under where the lows of the day were today. I almost bought there. I held off on it. But I mean, you look at this compared to June. So the median expectation for the rest of the year is 2 cuts. But you had 5 or 6 policymakers, you know, say no more cuts this year. So the market got really priced into this rate cut that happened this week. But I think there's less certainty on rate cuts happening this year. We know they're coming. We just know whether they're this year or next year. I think that's going to depend on a lot of jobs numbers over the next couple of months. But it looks like they're getting pushed out a little bit, which explains, you know, the rise in yields a little bit here. But still, they're coming. And, you know, I don't think the bond market is fully priced in. I think we still have more room to run higher with cuts eventually coming, whether they're, you know, in a few months or 4, 5, 6 months. So I do think that there's more upside, you know, room for bonds to run.
Dylan, can I get you into a long bond?
Not in a million years. My only relative position compared as it relates to the macroeconomy in the sort of most macro sense of the word is in that long dollar position. And by virtue of being long dollar, I'm short marginal expectations of rate cuts, which I guess would put me into some version of a short bond-ish position, I guess. But I wouldn't put myself there. I like my long dollar, not just on the absence of rate cuts on a relative basis, absence of a marginal rate cut, I guess, combined with the abomination that has been the Trump attack upon the dollar. And so I've sort of let my bond position reside inside of the US currency without actually expressing it in the bond market explicitly, because I don't have the confidence to be long or short the bond on a fundamental level. I guess by virtue of being long the dollar, I'm short the bond on some derivative basis.
I suppose so. If you think that the dollar is being driven by higher yields, I wonder if...
Which I don't.
Right. So I wonder if there's a difference here, to Thomas's point, between what's going on at the front end of the curve and the long end. So the way I structured this, and you can see that I have this on as of today, is through TLT, where you can see IV rank is only 4. So if ever there was cheap vol to buy, I mean, this is pennies. And so if you look at sort of where you are and you just say, you know what, if I did an at the money call vertical here, basically from where we are, 89, out to the next big pocket of liquidity, which you can see here. Obviously, there's some liquidity here, but the real meat is at 95, which not a shocker, really. That's right above here, above this swing high and into these tops. So 95 is just about here. So if you wanted to take the trip from here, where let's say this was the top of the range and you've pulled back into it, from here up to essentially a retest of whatever top this is, this high and that, somewhere in here, the risk reward on it is pretty incredible. I mean, at 168 to 432 max profit, you're talking about basically 2.5 to 1 risk reward because vol is so cheap. It's not a bad idea in my mind. And so I've put this on just as a trade, not because I terribly believe in the idea, but because the risk reward is so good and the vol is so cheap, and I can think of how this would work and why. Seems to be something to consider, and so I have it on now. I suppose if we're going to run this thing hot, then the place it should show up first and foremost is higher rates here. This is ZT, and you can kind of see it. It's sort of there. The move is there. We're kind of testing into here, and here's the continuous contract. You can see it a little bit cleaner. I wouldn't say it's a done deal that bonds are done going up here, but it does seem a little bit heavy. Whereas if you look at ZB, I think maybe on reflection, it makes more sense for this to be a pullback in a move higher than it does at the front end, especially if the Fed is going to be cagey about cuts next year.
I mean, do you have a strong bond position on beyond a marginal position? Are you prepared to put a meaningful capital behind a bond position? Are you, Thomas?
I'm not a meaningful position.
I'm not in a bond position right now.
Exactly. Are you in a dollar position, Thomas?
I'm short the Canadian dollar.
So you're long the US dollar by virtue of that.
Yeah, right.
Mm-hmm. Short gold?
Long gold.
Mm-hmm. Mm-hmm.
Long gold.
Point is, there's nothing in the bond that attracts you to a strong position. Anybody.
Not yet.
Because
No.
Who could know? You got these rate cuts, but you have this sort of weird marginal increase in inflation, weird marginal increase in growth, bizarre super records in equities in the face of slowing growth and inflation, oddly weak dollar, which I think is the only reason the stock market's at records, because it's a dollar adjusted number.
Very well could be.
And I would think a stronger dollar ultimately means a weaker. I mean, that's why I like my short NASDAQ, long dollar, short gold. Although, why are you long gold, Thomas, at this level? Out of curiosity.
I'm just playing. So my gold position is for 40 days out. I kind of had it on to hedge uncertainty going through this. Obviously that's not working out today. But I just think ultimately gold makes a move higher as we go into some of this uncertainty into that year with deficits, things like that. It's just something I've been doing that's been working out all year. Buying either gold or silver. I mean, I've been switching between those depending on technical levels, but just staying long the metals in one form or fashion.
Has been your friend.
It's been friendly.
You're saying it's habitual.
Yeah. I'm doing that through long call spreads because usually we see volatility expand when gold moves up. I mean, I don't think we got that on the last move higher. The first time it, hasn't had that correlation with volatility in quite a while. So I'm not sure what that tells us. I'm not sure if that's a sign that, this gold move is ultimately maybe have topped somewhat. But I still have enough confidence. It would take a much larger pullback, somewhere under 35, for me to, really abandon a bullish thesis on gold.
Mm-hmm.
I mean, the dollar, I do think the dollar is a threat.
Meaning a stronger dollar creates weaker everything.
Right.
Yes. It's an interesting thing here because if you look at what gold's done, it pulled back. It's not, in the strictest of terms, breaking down. So if this was kind of your line in the sand right here, you're sort of at it. So right here is your kind of range bottom, as it were, on where kind of the base for gold was. Now, Dylan, to your point, this is not it's not lost on me that this was the top of this range. You came and tested that right here, held it, then broke down. So we did take a step lower. I mean, that much is clear. There was a range here, it held, we tested it, we broke down, we took a step lower. But this now is perhaps a more meaningful sort of level. And I haven't gotten out of my long position yet, not because I don't agree with where you are on this. I actually do. I need to see this thing show me.
You want a little confirmation, as they say in the business.
That's right. I'd like to get it under here, and then I'm out. I've made my money, thank you very much. And it's the same thing in silver. So if you look at silver here, very, very similar setup. So if you look at kind of where the logical, that's not it whatsoever. There's absolutely nothing logical about that line. If you look at what is in fact a logical line, let's say here somewhere, then we're kind of at this interesting bottom again. And it's the same thing as gold, where you had this range top, you are through it here, and you did hold it. I mean, like, this is pretty technically clean. You break down, retest, nope, retest, nope. Okay, now we're going down. You might even say there's a little give here, maybe something like this. But again, you're resolving lower. But this is an interesting sort of line in the sand here. So I'm still long this because Chris talked me into it, but I'm okay to hold it probably unless it gets down here. If it breaks down here, then the trade's wrong and I'm out. And I'm happy that I'm long dollars on the other side, because if the trade is wrong, then ostensibly the long dollar move will keep going and that'll be an offset.
I mean, don't you think generally it's well advised to blame any losing position on Chris at this point in time?
Absolutely.
Considering his,
if it's not working, the mere fact that he's not here to defend himself means that it is his fault.
I would agree with that.
I mean, for gold, you still have a lot of things that have been in place driving it higher that haven't really changed.
That aren't the Fed, yeah.
Right. I mean, central banks, they were big buyers of gold in 2024. It's kind of slowed recently, but they're still buying. I mean, the war in Ukraine, it doesn't look like they're making really any progress. I mean, I think that's putting a little bit of a premium on gold. Say you get some breakthrough peace negotiation. I think that's something that could, actually cause a larger pullback for the time being. But I mean, outside of that, there's still fiscal uncertainty. There's uncertainty with the Fed's independence. There's now more political uncertainty. I just don't see the trend really reversing without some potent driver that comes into the market.
Yeah. I mean, one thing that sort of sticks out for me, next week we're going to have the first look at S&P Global PMI data. And it's not the kind of loud release that a CPI number is, or NFP, or a Fed policy announcement, yada, yada, yada. But it is a very timely look at essentially where the dynamics of growth are. And the expectation, if we look at what the markets are looking for here, I mean, let's set the stage here first. Last go around, they showed that the U.S. economy is reheating. That essentially we're starting to get positive momentum back into the economy. And we see here, let's see if I can get this on the screen. There we go. So here's the U.S. composite PMI. I mean, we can see where the weakness is around the tariffs. And we can see that over July and August, the economy seems to be reheating back to levels that we saw at the end of last year, which is pretty heady in context. I mean, you can see end of last year was some of the highest we've seen in a few years. So looking at this should be interesting. The expectation is that there's going to be a little bit of a cool down. Do you think if we get a meaningful decline and all of a sudden the economy is like, whoa, these concerns that the Fed might have about a shifting of the scales is coming together quickly? Is that fast enough, Thomas, do you think, to short circuit this run it hot idea, or are we going to need to see something of greater substance?
I think you need to see a little more than that. So I mean, a lot of the weakness has been companies are they're facing uncertainty. They're not necessarily investing less. They're doing stuff to control costs. Like one of the first things you do is, you stop hiring, potentially lay off some people. But you don't necessarily stop investing in your core products or whatever you're selling unless demand drops off, right?
Right.
So if it depends what the numbers are driven by, right? If there's all of a sudden, more weakness in the labor market to which degree that demand starts dropping for services, which is the majority of the U.S. economy, then I think that's where you get a little bit more concern. And I think see a lot more volatility if that was the case. If it's a gradual decline, something that's, it's not going to head us into recession, but there's some weakness, it gives the Fed a little bit more appetite to pull those rate cuts back forward. I think the market would potentially rally on that.
Dylan, thoughts?
You're saying Thomas, the market would rally on what?
So if these PMI numbers drop considerably, it would depend on what they're dropping on. Is it some weakness in hiring, some slowdowns in orders, but the actual demand in the economy isn't dropping off? I think that would push up the rate cut bets or pull them back forward to where we get maybe 3 rate cuts this year. I think the market would rally on that. I think where it comes into a problem for the market, equity markets, is if you see this dramatic decline where you're getting layoffs with a drop in demand, and then you're expecting corporate profits to cool down a lot, then I think you start getting a lot more weakness showing through. I don't think that's the scenario we're going to see. I think the economy is going to remain.
You're saying that's a prerequisite to my NASDAQ sell-off?
Yeah, one potential.
Speculatively.
One potential, yeah.
So to that end, here's the GDP Now model from the Atlanta Fed. And again, we're far enough removed from these third quarter GDP numbers that the actual number that this talks about, which is a 3.3% quarter, is meaningless. We're too far away. But the slope of that green line does matter in the sense that it gives you a sense of what kind of data is going into the model. Because we just had a model update today, for example, with the jobless claims numbers and everything else that came out. The slope is up. So as you get more and more data coming in, I mean, sometimes this thing is revised daily, sometimes every other day, depending on kind of when the relevant data comes out. But it's revised in real time, as it were. And so you get a sense for the tone of the data going into the bucket. And the slope of the green line tells you the data is growth positive, at least as far as this bucket is concerned. And so if that's what it is, then it would stand to reason that at least for now, the market isn't getting the evidence that whenever eventually is, whenever sort of the overheat comes, that's now or that's here. You'd have to start to see some kind of substantive growth scare occurring for the markets to go, oh, wait, this is not that. And then maybe things really start to get unglued, at least in stocks. But in the meantime, it doesn't seem like there's anything that necessarily speaks that way. And it sort of makes you think that, yeah, maybe the metals haven't broken down yet, but if we're wrong about yields, if yields are going to keep going up, if essentially this idea that this is some kind of a thing to buy is wrong, and it turns out that actually yields keep going higher because we are going to run it hot, then it could be that at least 2 legs of the Ratigan are already working and will continue to work. That is to say, metals will go down, the dollar will keep going higher.
The problem with the Ratigan, as it were, is by virtue of the probably illusory and misguided validation of being right on the dollar and gold, at least for the day, is it lends me to the delusional belief that the NASDAQ must come around, which obviously it has no obligations to oblige itself to my madness. And so I'm not entirely certain as to what to do other than the fact to be satisfied with my long dollar certainly dollar euro, which is kind of where I've positioned myself, my short gold by virtue of the GLD put spreads, and then my less satisfying short triple Q, which is obviously underwater after today's adverse reaction to my advocacy for its decline. I guess my point is it's sort of a trading lesson in the sense that just because you're right on, let's say I have three ideas. I have three ideas, right? Short NASDAQ, short gold, long dollar.
Mm-hmm.
Just because you're right on two of the three ideas doesn't actually mean that the third idea will eventually be right. In fact, you could be so wrong on the third idea that your rightness on the other two ideas could be rendered financially immaterial, which I'm fearful may in fact occur.
Well, indeed. I think I have been lucky in the sense that my ideas since the beginning of the year, sort of in the first 6 months of the year, my idea was short dollar, short stocks, and obviously short dollar worked and short stocks didn't. And thankfully, I made more on the dollar idea than I lost on the stocks idea. My idea from the middle of the year up through about now was long the dollar, long bonds, short stocks. And again, short stocks obviously didn't work, but long bonds did. And the dollar did start to bottom in July and hasn't overcome those lows. In fact, it seems to be going up again now. So that's offset my sins in the stock market. But that's not at all a given. You can absolutely lose more on the side that isn't working. And especially in a market that refuses to go down almost constitutionally and just does not want to give up but for some sort of obvious Armageddon-like scenario. Thomas, while we have you here, our resident commodities expert, what do you make of what's going on in oil here, if anything? I think one of the interesting sort of things on the board here continues to be this sort of stubborn standstill for oil. We talked about maybe it was attempting to get higher here. It found familiar resistance again, and so it's getting wedged back in. Do you think run it hot ultimately means a kind of cyclical oil rally, or this thing is just fairly valued and isn't going anywhere?
I still have my iron condor on. I'm going to continue to do that. I mean, it's worked all the way since June, you know. So I think it's going to keep working. You have conflicting factors. Crude oil stocks did decrease, you know, last week. We got a little bit of a rally from that this week. You know, we had the Ukraine drones attacking Russian export terminals and things like that. So I don't know. I think oil is kind of locked where it is without a signal that the economy is either going to fall off a cliff or go into, you know, a super strong part of the year. I don't really see much happening with oil. I just, you know, global inventories are rising. OPEC's going to be pumping more oil. At the same time, Russia's going to be exporting less. So I'm just playing the range right here. I'm going to continue to play the range. I think where you get a little defensive is where you get, you know, up around the recent swing highs and swing lows for oil. And, you know, that would be down under 60 or above 70. I think as long as you stay in there, I think it continues to trade in a range.
Before we call it a day here, one thing I wanted to take a look at is actually the Swiss franc, which is a recent addition on our futures menu here. And in particular, see if we can get the continuous contract. Here we go. So if you were going to play a dollar reversal higher, this is maybe one of the more interesting spots. So you had this attempted breakout, which has now failed. And not only has it failed, but it's failed in kind of semi-spectacular fashion. If you're a fan of candlestick patterns, that's a bearish one. And so if you were going to take a bet to essentially say, okay, maybe there's rate cuts in the U.S., but the dollar is clearly not correctly valued here, at least as far as the markets are saying, because the Fed was not as dovish as the markets thought. So maybe it's got room to recover, and it seems to be making inroads already. And looks a little bit more convincing than some of these other ones. I mean, the pound looks not bad. The Aussie looks not bad. Thomas, can I get you into a Swiss franc short position? Dylan, can I get you into a Swiss franc short?
Meaning a long dollar position versus the franc at the end of the day.
Correct.
Thomas, go first here. I'm up because my whole relationship is euro dollar, maybe yen dollar. I wouldn't even know where to begin to establish an opinion on the Swiss franc, other than they do have a lovely set of mountains and lakes.
And in fairness, it's very euro correlated. So what there is in the euro is very often the same thing as what.
And so I'm happy to be short the euro and not get myself mixed up with these mountain people.
Ilya, when I started working here, I was told not to trade the Swiss franc, and I haven't really.
So
done
you
that.
continue.
So
why were you told that, Thomas?
There was a couple people working here recently that were kind of burnt on that that whole revaluing of the franc a while ago.
Ah, yes.
Yeah.
God, I'm happy.
I think some unspoken individuals with a deal gone bad.
Yeah. So I've heeded that advice. I don't know. I mean, the franc, it's interesting to look at, but I haven't had really any appetite to trade it. When I'm trading the dollar, I usually do the euro, the yen, one of the majors, the Canadian dollar, the Aussie. So I stick there.
Why are you trying to suck us into your Swiss franc situation, Ilya?
Well, it's funny because I can say with some certainty that part of this amorphous group that Thomas is describing includes me. I mean, I was one of the people, surely, Thomas.
You're one of the individuals.
Yes, that forewarned against the shocking actions that the Swiss National Bank likes to take, and sort of the tender miseries of having your central bank be a publicly traded corporation and operate from that perspective rather than a central bank as such. And so the kind of decision making you get out of them is sometimes not what you would expect a central bank to do. Hence the catastrophic reval of Euro Swiss in 2015, which ripped many a face off in front of my very eyes. Thankfully, I had no involvement in that idea whatsoever. But it's certainly.
What brings you to the Swiss francery today, if I might be so bold as to ask?
What brings me to it here is it seems like the Swiss National Bank isn't a factor here, that this is just a reflection on the dollar is undervalued, and one could have a dollar trade here that's not mixed up in any kind of European geopolitical what have you, and is just the dollar play in a naked way.
Would you rather be short Swiss franc as a dollar long, or like why establish a preference to be long the dollar v franc versus v euro, v yen, v?
Oh, I'm short those two. I'm short those two. I think here the technicals are maybe a little bit cleaner, but that's about it. I mean, let's compare this with the yen, which is another thing I'm short, but. This looks more like a range within which we still exist. And it's not quite as convincing, although being short the yen, I think, is a trade. I mean, it's a trade I have on. Interestingly, I have it on here on the Tasty FX side in spot. You can see here it's making a little bit of a profit so far because the 6J future I think is just way too big. And so I'm doing it in spot because it allows me a 10K lot position. It's smaller and more manageable that way. I might consider the same thing for Swiss franc, where I might put it on the spot side, and in doing that, kind of dilute various S&B shenanigans risk.
There's an important election coming up for Japan in October.
There is.
The one person that's running, I can't pronounce her name, is a big proponent of ultra loose monetary policy, right?
Yes. There seems to be an interesting situation going on in Japan, and we'll no doubt talk about it next week. I'll just leave us with this idea that there does seem to be something like a trend emerging here for the yen, whereby the highs are getting lower, the lows are getting lower, and one might think that the path of least resistance is this way. But with that, overtime is out of time, so we're going to have to get to that later. Thank you, as always, gentlemen. This is our last moment together for this week for overtime, but I'll be right back for macro money, where we'll continue to pick apart where the dust is settling after this FOMC announcement, and I will see the both of you on Monday when we return.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock, and short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock, like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
The first 24 hours after the Federal Reserve policy announcement have elapsed, and price action seems to be picking some directions. And what it suggests is a bit of a regime change for the markets. We're going to explore that here on Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. And we're going to take a look at what these markets are doing with this Fed announcement, because it does seem to be something of a change of pace with where the markets have been for the past several months. And see if we can't unpick what all of this gyrating means for not just what's happening in the near term, but perhaps for the path forward and the recalibration, as it were, of the market's lens through which it receives economic data and other news, of course, and what the reaction function is going to look like from here, as different from how it's worked before. So first and foremost, let's take a look at how the markets performed today. We can see it was decidedly a risk-on kind of market. Looking at Wall Street, S&P 500 up 0.6%, NASDAQ up just over 1%. Yields, however, higher. Gold lower. The dollar higher. Bitcoin doing its stocks plus a high beta volatility premium kind of thing where it's risk appetite with steroids, basically mirroring what stocks are doing direction-wise, but with a bigger swing. So what's interesting about this, of course, is one might have expected that if the markets wanted a dovish Fed, either stocks would be down and everything else would be as it is, or stocks are up and you'd see yields are lower, you'd see the dollar is weaker, you'd see gold is up. That is not clearly what's going on here. It is much more so what happened in the initial reaction. This is how markets closed yesterday. And we can see yields are up, gold is down, dollar is up, the euro is down about 0.3% here, as is the yen. Stocks are soggy. They're not nearly as bad as they were, as we discussed yesterday, with the initial post-Fed spike down, but they ultimately closed with some weakness. S&P off 0.13%, NASDAQ off almost 0.25%, yields up by a good margin. So just looking at the price action here, we can see the markets read the Fed as relatively hawkish compared to what it wanted. And today we see a change of pace. And it's stock markets that diverge. Yields are still going up, as they did yesterday. Gold is still going down, as it did yesterday. The dollar is still going up, as yesterday. The difference is sentiment. And not just, by the way, in stocks. Bitcoin, again, as a kind of avatar for sentiment on steroids, or risk appetite on steroids, same thing. Yesterday, stocks down, Bitcoin down. Today, both up. So what's the stock market telling us here, and why is it sort of changing its mind about its relationship with Fed policy expectations? Well, let's look at the statement here first. We can see some of the changes marked off here. Hat tip to Nick Timmeros there at the Wall Street Journal for this handy vision of the things that were adjusted. We can see some of the key things here are that recent indicators suggest that economic activity has moderated, job gains have slowed, the unemployment rate has edged up. So clearly we can see where the justification for the rate cut is coming from here. The committee is attentive to the risks to both sides of its dual mandate and judges that downside risks to employment have risen. That's ostensibly where we get this rate cut. In support of the goals and in light of the shift in the balance of risks, we get the cut. And indeed, if we look at how Fed Chair Powell characterized this, we can see we get the same nod to slowing in the labor market and the shifting balance of risks, and then an explanation that tells us we're not worried or anything. This is a risk management cut, whereby the scales have tilted somewhat, and so we are going to make a small adjustment to reweigh our stance relative to the scales. Where if we have inflation and employment on the scales, then if they were tilted totally toward a focus on inflation and no focus on the labor market, now they've shifted a little bit in the direction of the labor market, and that's what we're going to do. Notice the comment here, Powell saying, I don't think we can say that policy no longer warrants a restrictive setting. That is to say, the Fed, and Powell as speaking for the Fed, still thinks that monetary policy needs to be somewhat restrictive, despite the weakness in the labor market. And that, of course, reflects inflation that's at a 7-month high. Last we checked in on CPI last week, and where goods inflation is at the highest in 2 years. Thank you, tariffs. However, we do get the sense that we still are working on the assumption, looking at what Fed Chair Powell is saying here, that the tariffs are going to be a short-lived thing, and so we get this maintenance move. Now, where things get really interesting is in the forecasting, because for a central bank that's cutting rates and saying it's going to keep cutting them, the adjustment in the forecasting is pretty hawkish, again, in relative terms. So growth expectations are revised higher here for all 3 years of the forecast, for which we have a June baseline. The unemployment rate, steady for this year, but for next and for 2027, revised lower. Inflation, mostly steady, but where there are revisions, they are revisions higher. And for the rates path, we do get a third cut that's baked in for this year, but still from, admittedly, that lower baseline, so not 3.9, which would be June's projection of 50 basis points in cuts this year, from 4.4 down. Now we're saying 3.6, but thereafter, still only one cut for next year, still only one cut for 2027. Now, how you arrive at 3 rate cuts here is a bit of a subject of its own debate. You can see here, there's an even split here almost between those people favoring 2 cuts or less, and those people favoring 3 cuts or more. And obviously you get a very dramatic skew in the forecast here with this dot. We can surmise who that dot might be. But when we look at this, nevertheless, we get the 3 cuts, and they don't really surprise anyone because, as we've discussed before, the markets were already set for 3 rate cuts at least a week before this meeting. You can see that in the expectations. Here's the outlook for October's meeting. Right here is the week before today. So a week in advance of the Fed policy announcement, the probability of that second cut at that meeting is already over 80%. If we look at December, a little bit narrower, but again, the probability of a December cut after a September one, after an October one, over 80%. So really all the Fed has done here in saying, oh, there's going to be an extra cut, is give its blessing, as it were, for what the markets already anticipated. But the disconnect for 2026, the disconnect for 2027, that remains. And interestingly, what the markets have done is a kind of curious shift. So take a look now, and we see that for the rest of this year, this is from now through year end, we've got 37 basis points on the menu. So at least one more cut, and as we see, we're erring in the direction of a third as we just looked. For next year, we've come down somewhat, and now we're at 66 basis points. So obviously this reflects the 25 basis point move that we've already had, but notice from the kind of dovish outlook extreme that we had before the Fed announcement, which was 140 basis points in cuts between where we were prior to this week's meeting and the end of 2026, we are now at 100 basis points, give or take. In other words, we've moved more than just the 25 basis point cut. The outlook has become pointedly less dovish for next year. Now, it's still well in excess of what the Fed has, but the market clearly took a cue here and said, oh, so you're saying we're going to have hotter growth, hotter inflation, lower unemployment, and you're saying that means only one cut next year and one cut the year after. We think that sounds hawkish. We still think you're going to need at least 2 cuts next year, but at least directionally, the adjustment that has to happen here is toward a hotter economy. And so the relationship between stock markets and the Fed outlook seems to be in flux. Now, we've talked about this evolution since the beginning of the year, and perhaps we're at another one of these inflection points. We started the year with a growth scare. We can see this right here in mid-February. Stocks reach a top right there. So do Fed policy expectations. They hit a top of sorts. This is the least dovish of this year as far as the outlook for 2025 through end of 2026. Then we get this growth scare around the initial rollout of the tariffs until, of course, there's something of a crescendo with Liberation Day in early April right here, and both stocks and policy expectations hit a dovish extreme and start to correct. Now, by mid-May, the policy outlook is done correcting, and stocks have conveniently come back to basically the spot where the breakout right here starts to actually occur. And so they've erased all of this scare. And from there, so from here onward, it looks like stocks are rallying as the outlook for policy gets more and more dovish. And so it's very compelling to say, well, the reason stocks are rallying, and indeed we said this here, the reason stocks are rallying, or at least in part the reason stocks are rallying, is because the markets are betting that there's going to be cheap money that's coming down ahead. And what that's going to do is, obviously, make assets more attractive, because whatever risks there may be, they are eminently more digestible with cheap money versus not. And so what we see now is apparently this relationship has changed, where this right here is our most recent dovish extreme. And as we saw, again, looking over here, we can see the change here has been greater than just 25 basis points. The change has been essentially closer to 40. And so it isn't just that one cut has already occurred to move this line up. It's also that the outlook for next year has become less dovish. And so what you then end up with now is stocks going higher at the same time that the policy outlook is getting less dovish. And what that seems to suggest is that after the Fed, the markets have reconsidered this relationship. Pointedly, they've not reconsidered it with the dollar, where the dollar has essentially shown itself to be probably right going all the way back to early July, where you can see here the dollar starts to bottom while the policy outlook still gets more dovish, and it seems to be holding that bottom here as the policy outlook has started to shift the other way. And so a turn in the dollar certainly seems to be a compelling idea. And again, over the course of the past 2 days, here's the initial response from markets: stronger dollar. Here's the follow-on: even stronger dollar. And so it does seem like, at least here, things are working as you might expect. But stocks have apparently decided, well, we're going to run it hot. The economy is just going to have to get more inflationary, because clearly the Fed is easing into a situation where it is saying we're going to have faster growth, we're going to have higher inflation, we're going to have a lower unemployment. So we're going to let inflation stay elevated, as it were, at least until it starts to meaningfully hurt consumption and meaningfully show up in growth data such that we know, oh, okay, we're already on the other side of this thing. But in the meantime, stocks apparently are saying, well, if the Fed is going to run it hot, then so it is. And the relationship between stocks and the policy outlook needs to change. Now, maybe this is going to evolve again. We still have a huge triple witching event tomorrow, tons of option expiries, tons of contract rollovers. And so maybe we still need another 24 hours for the dust to really settle in earnest before the end of the week. And maybe this is going to change for next week. But for the moment, at least, it looks like there is a meaningful difference now. And for what it's worth, looking at the way that the U.S. economy has been performing, it does portend some sort of a reheating. Looking here at the Atlanta Fed's GDP Now model, it is surely too early to make much of it as far as the actual forecast for the third quarter. Those numbers aren't going to be coming out for quite a while. So that this model currently calls for a 3.3% annualized rise in GDP for the third quarter. That doesn't mean much of anything at the moment. But that this is a nowcast, that is to say, it's adjusted in almost real time with incoming economic data, that's telling, because we can see this green line that approximates the GDP forecast is very pointedly sloped from the lower right, or from the lower left rather, to the upper right. That is to say, it's pointed up. The tone of the economic data getting fed into this model clearly seems to be growth positive based on what is going on here. And so with that in mind, the market can basically presume that things are going to get run hot until they're not. And for the moment, we don't have the kind of weighty economic data on the menu that would say, oh, here is a meaningful risk. Now, we're going to have the S&P Global PMI numbers next week. That'll be an interesting view on growth. We'll see what that looks like. But otherwise, next week's U.S. economic calendar is kind of soggy. There's really not a whole lot that's there. There's some home sales numbers. There's a revision of second quarter GDP data, just to give you a sense for how far behind that data is and how slowly it's going to take us to get to looking at the third quarter numbers. Not until Friday next week, when we get the PCE report, are we going to get something really meaty for this U.S. growth outlook. And we're going to have to go into the beginning of the following week as we start to look at the first kind of days of October, when we're going to get ISM data again, we're going to get NFP data again, and that'll maybe give us a different perspective. But for the moment, the Fed's sort of asserting of a hotter economy seems to make sense. And stocks seem to have concluded that with that in mind, they're just going to change the way that they behave relative to Fed easing. And they're going to read the absence of conviction on that easing not as a bad thing, but as indicative of an economy that doesn't need it. And that seems to have imbued stock markets with fresh strength. Now, positioning wise, I am compelled by the price action to stay a little bit short the S&P because it did not clear its swing high from 2 days ago, despite the gains. So I am begrudgingly holding this until tomorrow to see what happens, because it failed to hold above that high today. I am similarly still long the metals because despite them being weaker, they haven't crossed their Rubicon yet. They're still within their congestion range, but I have also loaded up on dollar longs. So yesterday I was a bit straddling the fence here, short the euro but long the pound. After this Fed announcement, I flipped the pound position over. I am now short. I am also now short the Aussie dollar, short the Canadian dollar, and looking for a bigger dollar bottom to take hold. I also nibbled a little bit on the long side of bonds, thinking that if the market is going to start to think that whatever rate cuts and whatever overheating and growth reckoning might come will give us rate cuts just later in size, then perhaps we're due for a little bit of a twist in the yield curve, where yields stay relatively anchored at the long end, but maybe rise up a little bit at the front end. So because the volatility here was dirt cheap with 4.3 IVR, I took a little bit of a stab at trying to pick a bottom in the bonds and see if maybe that is a part of this run it hot until you can't kind of narrative. And that is macro money for today, as well as for this week. We're here Monday through Thursday, so we'll be back with you on Monday. In the meantime, I'm also writing for the News and Insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money returns on Monday. Happy trading.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
I have made a deal with the devil and I'm long UNH.
What's your most controversial market opinion?
Well, my newest phrase of the year is until proven otherwise, which basically means buy every dip because they've been gobbled up pretty quickly. And even like the tariff stuff, at the bottom of the tariff stuff, I was like, ooh, maybe things are different. And now here we are at all-time highs, like 2 months later. So I think you still got to keep your size in check, but I think the dip buying is here to stay.
Well, I mean, I already told you my UNH trade. I have made a deal with the devil and I'm long UNH. So I think that is pretty controversial. I don't know a lot of people that know about that stock, let alone trade it, let alone want to be long it. And so I feel like it's a whirlwind of just heinous attitude that has to be to the upside now.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20. And I said, you'll be in a hotel by either the first night or second night.
Oh, and then I vociferously stood up for you.
Of course you did. You should have, because that was the smart move.
Appreciate you. You're
yeah.
good.
Saturday morning, I look at my phone, and it says Venmo, $20.
I almost had to pay him $40 because there was a little stipulation. If I didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was
the
beautiful.
Girl
It was
on
beautiful.
Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's like this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, closed everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. So we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch muskies.
He's hurt on this one.
Muskies. Some bass.
Very quiet. I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. You know, when we got there, it was...
Now the RV on rvtrader.com.
No.
Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
No, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then you know what? Money goes to money. You did it. Good job out of you. Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay, I need help understanding. This is the largest monitor that I've ever seen. Like, I have to move back in order to see everything. And somehow when you're on air, you're like looking at this, you need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come
Hey, welcome to the show, and it is a sunny and bright 18th of September. Chris is here looking quizzically at me because maybe it wasn't bright for him.
It wasn't bright when I came in this morning. It was grim. It's warm.
Marching. It is warm. It's muggy.
Warm, 18 degrees, but it wasn't. I was surprised how dark it was. Sorry, I thought you come into a different city this morning.
Oh, well, I was coming in. It was relative.
Where did you get off? London Bridge?
Yes, London Bridge, but I march across that bridge.
Oh, at Moorgate, it was cloudy and stuff.
Oh, okay. I had a bit of a sunrise, and also I was thinking, this is so nice. This is so nice.
In earlier than you, so clearly.
Indian summer, hopefully.
Indian summer, yes.
Yes, but you're right. It was.
One of 2 days, I think, isn't it? I think today and tomorrow. And that's
Is that it?
Yeah, I think so.
Oh,
And back down again.
Morning, everyone. Donny1 saying good post FOMC, everyone. Shilling. Shilling is also with us this morning, and a person loving that handle of yours. Gavin Ackers, good morning to you as well. And Wing It Maturin, hola. Steve CDR, morning to you as well. And Derek. Fed dot plots, interesting last night. Perhaps a sign of things to come. So we're going to go and look at what's coming up on the show, and then